leaders who've made the most of these trying times. As the world is gripped by challenges on multiple fronts, we seek to find rays of sunshine in what's increasingly looking like a grim picture. We have a host of interesting panels lined up for you today, but to begin, I'd like to welcome on stage Saurav Majumdar, Editor Business Today, for the welcome address.
Thank you, Abha, and very, very warm welcome to all of you this morning on behalf of the India Today Group and Business Today to this very, very engaging, what promises to be a very engaging day of discussions and deliberations around the very topical theme of VUCA. At the outset, I would like to inform you about a slight change in the program. Due to the President's nomination, which has been scheduled this morning, the Honorable Home Minister is unable to be with us, and therefore we are delighted to have the presence of the Honorable Commerce Minister, Mr. Piyush Goyal, who will be with us shortly. So that's as far as the program goes. Ladies and gentlemen, today's event celebrates excellence and leadership across sectors and across scale. By way of the Best CEOs Award, which are based on the rankings developed in partnership with PwC in India, we honor the finest corporate leaders who have not only steered their companies brilliantly, but given the massive disruptions caused by the pandemic, have done so in extremely disruptive conditions and managed to do so extremely well nonetheless. We are also privileged to have with us some of India's iconic business leaders, whose enormous contributions to the world of business we will also be celebrating today. It is said that people buy into the leader before they buy into the vision. Indeed, the credibility of the leader is what determines the extent to which the team will follow the vision he or she lays down for the organization. The CEO today is expected to navigate a world where nothing is certain anymore. He or she is, putting out strategy which is only as good as perhaps a year or two, as business realities and technologies change rapidly. But even more important than that is the need for today's CEOs to ensure that leadership is purpose-driven, empathetic, and in consonance with the changing needs of the consumer. The winners who were picked this year by our jury, after the validation and tabulation by PwC, demonstrate not just that strategic vision of theirs for their companies and the ability to make course corrections as market dynamics change, but also a keenness to understand deeply what the customer wants while being empathetic to the needs of the employees at a time when the pandemic has upended everybody's lives. And despite the fact that they belong to diverse sectors, the one common thread among all these winners is the single-minded pursuit of excellence. Coming to the theme of today's discussions, VUCANOMICS. Today's business environment is characterized by these four words which make up the acronym VUCA: volatility, uncertainty, complexity, and ambiguity. Global inflation, geopolitical risks, rising interest rates, supply chain disruptions, and of course the intermittent waves of the COVID-19 pandemic. These are now a part and parcel of what today's CEOs and business leaders have to deal with on a regular basis. The business environment, and indeed the world itself, has become volatile, uncertain, complex, and ambiguous, testing leaders and leadership like never before. Over the course of the day, we have lined up several very interesting sessions where we will dwell on all these aspects and listen to the cream of corporate India as they tell us how they are navigating this challenging environment. I will not stand in the way of what promises to be a fascinating celebration of corporate excellence. Once again, thank you very much for being with us this morning. Thank you.
Thank you so much, Saurav. With that, I'd like to introduce our first panel this morning. And Joining us on stage to discuss the winning formula, how to really stay ahead of the curve, we have with us some of India Inc.'s best-known names and faces. TV Narendran, CEO and MD, Tata Steel; Padmaja Chunduru, MD and CEO, NSDL; Amish Mehta, MD and CEO, CRISIL; and Sanjeev Krishan, Chairman, PwC in India. In conversation with Managing Editor, Business Today TV, Siddharth Zarabi. Please do join us on stage.
A very good morning to all of you and a warm welcome once again. My colleague Abha Bakaya has welcomed you, and I have the tough job of getting 4 corporate veterans, people who understand business, boardrooms, and all manners of battle for market share and beyond on the stage here with us. And here in the audience also a galaxy of luminaries. Very, very delighted to be talking to this panel. And the subject for today, the winning formula and staying ahead of the curve. TV, I'm going to start with you. How does the curve look like? You know, let's for a moment pause on winning. In the current volatile and uncertain times, my colleague Saurav described that. What is the curve looking like to you?
You know, I think we'll all have to get used to the fact that the curve will keep changing all the time. And I think how do we respond to that is, to me, going to be very important in success, right? Because we are a very interconnected world, and geopolitical events have a greater impact than we had thought in the past. Even when when COVID started, we thought it was a local event in China. When the Russia-Ukraine war started, we said it was a problem for Europe. So I think we need to get used to that, and organizations need to be able to adapt to a curve which keeps changing its slope very rapidly and very frequently.
Amish, I'm going to jump to you and not follow the sequence here. How difficult or uncertain is the environment for doing business, looking for companies, not just in India, but perhaps globally as well?
So I would say, I think first of all, you know, the expectations of people after the pandemic was we will see recovery, and, you know, we're going to see some good times coming back. And you know, we're very hopeful given an event that we had near Black Swan. But when the geopolitical events hit us, I think things have gone awry globally. You are seeing, you know, inflation really come up, and it is sticky. Structurally, I think there was an expectation it will be transitory. Maybe it is just went up demand and it will stabilize, but we are not seeing that. It is very broad-based. All global economies are struggling on inflation. And you have started seeing reactions from global central banks, which are tightening the liquidity and the financial conditions across the globe. Now, what it means is you will have impact on growth, which is already likely to happen. And emerging economies like India will have to react, you know, to the emerging global environment. So one is direct impact because of slowing growth globally. How does it impact our exports and our economy? Second is the entire financial condition, the monetary conditions, from an interest rate, from an exchange rate. So I think we are looking at a lot of uncertainties playing out, and India is not, you know, it is going to be impacted from the global scenario.
Padmaja, I'm coming to you now because you are a veteran banker, and I was waiting for some industrial views. The era of free money on a tap seems to be over to some extent. At least that tap is looking like how taps are in the Indian summer in rural India, barely a trickle. Is that assessment fair?
I think, yeah, it was some time coming. Maybe because of the COVID situation globally, and more so globally actually in the US. and in India also, across the economies, there has been a sort of a pumping liquidity into the system. As a banker, we have seen in the last 3 years that it was required, especially when you come to supporting the very needy sectors of the economy, this was required. And India, I think it was well calibrated. Now the situation is different. As already mentioned, the interest rates are to go up, otherwise the inflation is rearing its ugly head. And in the longer term, or at least in the medium term, I think, yes, the money will be costly. And that's good because both the corporates have been, I think the twin balance sheet problem which we discussed earlier, which we were always discussing, I think that has now sort of come under control. The banks are doing well this quarter and last quarter. The balance sheets are healthy. The corporates have deleveraged. So I think there is a good sense of coming back to basics.
So in a way, one quick follow-up with you before I go to Sanjeev. In a way, are we better prepared as a country, as our entire business ecosystem for this crisis which has already started in the West for various reasons? Are we better prepared than we were, for example, in 2013-12 or 2008?
I think we are much more aware. We are much more globally connected. We are much more globally we have a seat at the real decision-making tables now, whether it is with central banks, whether it is with IMF, World Bank, wherever. I think we have a say in matters, so that makes a difference. Secondly, I think India is much better prepared compared to the 2000. That was mainly a financial crisis, both the crisis that you mentioned, and it was also the 2008, I think, came from the West. So that was more of a forex, more of a dollar, disturbing the exports and also some sectors of the economy. But this time COVID has hit the entire economy, and we have put in, I think, measures not only in terms of capital infusion, in terms of balance sheet strength, but also risk management, technology, automation. That's
a good point. We seem to be better prepared than previously. Sanjeev, I'm coming to you, and we are in a tough neighborhood, and this is not a question on India-Pakistan, which would be asked in a political panel. We are in a tough neighborhood where we now see that economies which are very essential to India's long-term geopolitical security as well, Sri Lanka, you've seen what's happening in Nepal, and Pakistan itself pretty much bankrupt. Given this sort of a situation and the other things that are happening, including a point that I want you to pick up and perhaps take it up on the panel, I know TV will want to contest that. I believe that a lot of the inflation that is coming in is by companies and producers making up for lost time for the business that they lost during the COVID lockdown.
Yeah, thanks, Siddharth. So I think the first thing to my mind, I think just on the inflation part, I know that we are talking about central banks across the globe, upping the interest rates and stuff like that, which is fine. I think we should do that. I do also believe that a lot of the inflation is actually supply driven. I mean, if you look at it, I'm not saying that we shouldn't be raising interest rates. I think that's obviously going to be the case. But I think it has to be a bit measured, because I think there's a supply side challenges that we have. I mean, supply chains have been disrupted, and that is why we are now talking about localized supply chains. We're talking about deglobalization and so on and so forth. So I do believe that a significant component of the inflation that we are experiencing today is supply driven. It could be manpower also. I mean, not just material, but also manpower. I think it's both. So I think that's the first part. I think the second part is, and since you mentioned about the neighborhood, I think one thing which I see more and more happening as the world becomes more and more deglobalized, and there could be lessons for us in India as well, and I think we're already on the path. I think I see emergence of local trading blocks. India is already on the path of a bunch of FTAs at this point in time. And I think that is something that I anticipate growing in times to come as the world, because of whatever. I mean, we have been seeing this forever. There has been, nationalist fervor or whatever. It's caused over the years also, even before pandemic hit us, it was there. I think it has got accentuated because of the COVID environment that we have had. And I think whether it is regional trading blocks, FTAs, we have done one already. We are very near to one with the UK, and there is talks with the European Union. I think these are ones which are going to help us come through this tough period in times to come. that is what I would say to the geopolitical question.
Okay, that's a good point. And we've, from this entire panel of 4 people, we've got a basic sort of lay of the land as to what is happening. TV, now I start with you. That point, which I restate here for the benefit of the audience and for you to also comment about, a lot of the inflation being passed through because companies are trying to make up for lost profits. But the question is, beyond the diagnosis of the problem, how are you yourself as a company, very large company, global footprint, what are you doing to stay ahead of the curve, and what can you share with our audience here?
Sure. So I think few things. Supply chains, anyone who's managed supply chains will tell you it's always complex to manage supply chains, and supply chains don't like disruptions, right? So to me, I think for the last maybe many decades, supply chains have been optimized around efficiency and cost and just-in-time and stuff like that. But now we are optimizing supply chains around resilience. So I think as organizations, we're trying to see how can you build resilient supply chains, because disruptions happen all the time and you cannot be vulnerable.
So is JIT changing? Has just-in-time changed to some other term that you would like?
Yeah, because just-in-time is great if everything works perfectly, right? But even during the pandemic, supply chains within India were disrupted. If you had a supplier in Maharashtra and you wanted something in Odisha, it couldn't reach you, right? So again, the point which Sanjeev made is important. I think there's greater, if you look globally, everyone's looking at China +1, right? Because they don't want to be vulnerable to one source, however cheap it is. Even within India, you're looking at how can I indigenize, how can I localize? Even within localization, can I have suppliers closer to where I am? I think the auto industry has done this very well for decades, right? So you have vendor parks, you do whatever. So I think organizations are seeing that the cost of business continuity is something which is very impactful, and we've been reminded of that over the last couple of years. So that's one thing. Second is technology. I think companies who embrace technology have been able to respond to this crisis much better, because this crisis has basically accelerated you into the future. And companies who are better prepared for that by investing in technology have been able to demonstrate greater resilience and agility.
I'm interrupting you here. Do you see any evidence of not large organized sector players like you, but medium and small enterprises managing to catch up on technology? Because in other conversations that we have, I sense that there is a gap of resources, the amount of money, and their own capacity to absorb technology.
So yes, to some extent you're right, but I think the fact that India as a nation has invested significantly in technology, and there's a technology backbone which is being created, I think is great. Because if SMEs, there are many world-class SMEs in India, and they are also realizing that if you really want to be a world-class SME, you have to embrace technology, because you also then need to be plugged into global value chains. You need to be able to cater to the needs of global customers. So I think there is a greater understanding and appreciation that technology is an opportunity rather than a cost or a threat in some sense.
Padmaja, I'm coming to you. Since we spoke about money becoming costlier, the question is, how long will that be so? Because there are two aspects to money being costly. For large companies, for the rich, perhaps a marginal difference. If the balance sheet is bigger, then there is a very significant. But for small and medium companies who are actually employment drivers also in India and need all the support emerging out of the pandemic where they were very badly hit, you can take sectors upon sector: tourism, retail, hospitality, even one part of the real estate sector. How long will money continue to be costlier and perhaps with the tap not fully open?
I don't have a crystal ball, so I can't really say or comment on that. But I think it will be until inflation comes down to a level that RBI is comfortable with. And but meanwhile, I think whether it takes 1 year or more than that, I would think that the large corporates, as you mentioned, are already, I also said, deleveraged. So I think the cost of money to them is today manageable. And the other part, there is the corporate bond market, I think, needs to be much more active and much more vibrant. Coming from NSDL now, I can see that this side of the market is not as active as the loan market. That would sort of level the playing field. For medium and small enterprises, what you said is correct. There are, many schemes of the government which are subsidizing, which are giving the banks some sort of a backstop in terms of giving those loans. It was there till a few months back. Now it's sort of withdrawn. But with all that support, I think medium and small enterprises have been able to a large extent, ride this problem out there. Going forward, as you mentioned, technology will make a huge difference to these. And both the government and the state governments also, I have seen a lot of places where the MSMEs are being specially supported. And there's a network of MSMEs that is being created so that technology costs are saved. The API development, the rest of the technology stack that has to come for MSMEs. Even the ONDC that we talk of now, the government is coming up with a e-commerce platform for basically the small and medium. I think there are a lot of interventions. The only thing is everything should come together. This, together with reskilling, upskilling employees, should help MSMEs, come over this. But it would be a rough ride. There's no doubt about that.
It will be a rough time, and I'm glad you said that. There are a lot of money matters that I want to discuss with you. I'll try and come back if we have time on that. Amish, I'm coming to you, and this is to do with a question that you perhaps can answer from your perch. How realistic is chasing 6% in India and an economy where growth is uneven and needs support? Forget headline catching numbers, forget those chimeras of 5 trillion, which is the exchange rate question more than anything else. We need to support growth for Bharat. Forget the top tier. Is 6% realistic? Is this a gauntlet that the government and the RBI have needlessly sort of put on themselves?
So our view is that we are seeing the next decade between 6.5% to 7%. So we
of
are
inflation?
Of growth.
Of growth, okay.
Yeah, growth. I think, and that is largely, sorry, you are asking for inflation?
No, go ahead. But because you've given a good headline, the MD of CRISIL is saying growth is likely to be 150 basis points lesser than the most optimistic scenarios right now. But I'm not holding you on that headline. This is just a discussion.
No, so I think, given where we are and what is going to drive that growth is going to be investment. See, this is a country where we need to have investments, and the government infrastructure investment is going to be key enabler in driving that growth. Of course, we have a very good geographic dividend, consumption. India is a growth story from a demand and consumption. But I think infrastructure investment from government, infrastructure investment from the private capex, I think is going to be very critical to drive this growth.
So sorry to interrupt you. Why in your view, is private sector investment what it should have been right now? Because we always keep saying government should do more. And when we talk to government people, they say there isn't enough absorptive capacity. Kitne flyover banayenge, kitni sadke banayenge, chahiye kisko, who's paying for it? And you have protests on tolls, for example.
So I would say private sector capex has slowed down over the last 5 years. If you just look at the trend of private sector capex, it has been lower than what it used to be earlier. A couple of reasons for that. I think capacity utilizations within the private sector has been lower than what would trigger the need for capex. Uncertainty in the environment. I think also, if you look at just the growth in terms of the growth has been uneven over the last many years. But I think things are changing. And what is changing right now is if you look at government, there's a recognition they have come up with a PLI scheme, which is going to ask 2.5 lakh crore of investment over the next 3 years.
May I interrupt you again? Why has telecom PLI been extended by a year? Are people not able to deliver? Were the targets too over-optimistic?
So I don't want to pick up on any one sector.
Okay.
Let me talk a little more broader. I would say that, from a PLI, that's one big investment. Second is the move towards green. And, sustainability is something which we are seeing starting globally. Our own government is committed to it. Our Prime Minister has made announcement. And large companies, we have Mr. Narendran on the stage. Large companies are committed to the cause to drive sustainability as a purpose. You are going to see 50% of capex on PLI go into green capex. Our own estimate is the top 4 polluting sectors are going to take investment of 22 to 25 lakh crore over the next 6 to 7 years. So these are going to be triggers from a capex perspective. Of course, you are going to wait for capacity utilizations to come up and companies to start investing. From a private capex perspective on an infrastructure side, I think India cannot be built by the government. You're rightly mentioning that. We need to have, and I think bond financing, REITs, InvITs, there are instruments which will have to come to help bridge that gap. We have ourselves highlighted that the current financing between bank loan, bond market, and whatever is available, you have a large gap on financing. You will need to find innovative structures. The government will have to help enable, create that ecosystem where a lot of bond market investors come in, a lot of global investors come in, and I think that is something which will be a trigger for that growth to happen on the private sector capex side. But a lot of things are moving, and I would say we are optimistic from a growth over the next 5 to 7 years.
Okay, you've given me a follow-up question in light of the fact that during this month alone, around 42,000 crore has been pulled out of the markets, but I won't ask you that question. Sanjeev, I'm coming to you and coming back to the topic of the panel, staying ahead of the curve. A lot of companies come and seek your advice for various parts of business without sort of breaking revealing any confidences. Can you tell our audience here, what are the top 3 questions that businesses and CEOs are asking PwC today as they navigate this very uncertain world?
So really 3 topics, I would say. I think the first is that everybody wants to prioritize. Because you can't do 20 things. And as money becomes dearer, you don't want to do 20 things. You want to do fewer things. So it could simply be, it also gets you agility, because we are saying we're talking about a VUCA world. So we need to be agile. So the clear message is that we need to be a lot more, we need to be a lot more clear as to what we want to do, which means prioritize. Look at my portfolio. Maybe there are things that I should actually be divesting, and somebody else should be actually running that asset. So one is prioritization. I think the second thing really is that how do we focus on generating and building greater trust. Amish spoke about some of the areas, but it's not just the trust just doesn't come because of compliances anymore. We are also talking about what is the social fabric, what is the governance fabric. I mean, what are you doing about climate change? But now it is going beyond. I think the question also is that what are we doing? What is your algorithms? What are you doing about data privacy and so on and so forth? Because, the narrative has changed from just the shareholder to the stakeholder, and we've been talking about it. So I think now the manifestation of that is that people are now talking about that how do I generate more trust? Because trust is now being looked upon as a value creator. It is not being looked upon just as a compliance matrix, but trust is now being looked upon as a value creator. And I think that's the big thing that we have been discussing with our clients, and that's areas that we talk about. The third one is, and maybe it will sort of go into the point that you were mentioning, how do I marry the short term with the long term? In the short term, there are imminent challenges, and I need to deal with them. Right, some of those, we keep talking about infrastructure needs to be better, and what kind of stuff that I need to do now for the here and now. And there are a lot of things that you do. There's a whole piece on transformation. I think the technology business as a result obviously is doing very, very well. The growth of the Indian technology business scene is humongous. But when one talks about future and when one talks about what can we do down the line, 3 years, 4 years down the line, because you need to sustain this growth, hopefully, which you'll have once you go over the hump. I think 3 things are coming up very, very consciously in decisions, and we see a lot of corporates actually focusing on those as well. Education, healthcare, and what are you doing for youth in some ways. I think those 3 factors are coming across. Whether you want to do it as part of your purpose statement, whether you want to create a business around it, I think these 3 segments are coming out as, perennial discussion topics: education, health, and what are you doing for youth. I think those 3, then of course you go into areas like nutrition and so on and so forth, but broadly those are the 3 topics, Siddharth.
Sanjeev, I'll come back to you about what would the average Indian corporate look like a decade later. So some time for you to think. TV, I'm coming to you on this point. A bunch of FTAs after first 5 years of the NDA government, where it was in some ways an inward-looking focus, Atmanirbharta, Make in India, and who better than you to talk about Make in India? You've been doing that for years. You steal the nation in some ways. These regional pacts, what do they mean for Indian industry, larger players, and perhaps for you as well? Because in earlier bouts of trade pacts, we have seen Indian companies in many sectors had to deal with shocks. In today's days, and these agreements, once they start panning out and they start getting implementing from next year onwards, what kind of impact will these new regional trade agreements have?
Yeah. So I think it's a very important subject, Siddharth, and I think there's a lot of learning that we've had as a country in signing FTAs. Because at a very fundamental level, I think we should not forget the fact that we need to create jobs in India, right? And you will create jobs in India only when there are investments in India. Second point is, India is different from many East Asian economies that we are compared to, because India is also a market. India is not just a source. So how do we leverage the fact that India is a market better than some of those countries did, because they didn't have a domestic market to offer? So I think before we offer unhindered access to the Indian markets, we should try and make sure, like we've done in the auto industry, how do you get people to come and invest in India, make cars in India for the Indian market and for the world? And I think if you want manufacturing to happen in India, you need to do it in a phased manner. Because people can't travel anywhere in the world for jobs, right? There are restrictions on people movement for jobs. So people will look for jobs in their domestic markets. Goods can travel across, capital can move across. And I think in the last 30 years, India has made it very easy for capital to come into India and invest in India. Most industries, you can own the industry 100%, which is more than what most countries offer, right? Even if I look at steel industry, you can't own a steel company 100% in Japan or Korea or China. You can in India. So why don't you encourage investments in India, get the best of competition in India, make for India, build competitive industry in India, for India and for the world. And I think to some extent, while there is some criticism about Atmanirbharta, I think we need to find that balance and not just copy somebody else's model because it was successful for them.
Is China plus one going to happen in reality?
So I think this China plus one conversation started a few years back. I think we missed the bus at that time. Everyone went to Bangladesh, everyone went to Vietnam and other countries. But now there's a China plus one happening again. And this time what we're seeing is there's a lot of interest in India. For two reasons. One is the PLI scheme and everything else is attracting investments into India. India is developing as a big source for electronics, for instance.
But has, other than PLI, the real fundamental on-ground issues, have they changed to allow China plus one?
So the good thing in India, states are competing with each other. You know, there's only that much you can do out of Delhi.
Can there be a China plus one in steel, for example?
Yeah, certainly. In fact, that's...
I mean, there was a South Korean steel company that could never make it here for more than 3 decades.
Well, to be honest, we started at the same time. We built a steel plant. They didn't. In India, you have to persevere. You have to build relationships with the community. And you have to keep at it. It's not an easy place to invest. But it is an attractive place because it's a huge market. And India has all the raw materials in the world. There's no reason why many countries who are exporting steel today should be exporting steel. You should be making it in India and exporting it to the world.
So TV, if you have everything, like any other company in the world, any other advanced economy, what is that X factor that companies and business people and CEOs like you need to succeed in an Indian environment?
So I think there are two things. One is the cost of doing business, which to a large extent is also getting addressed through simplification of taxes, GST, infrastructure, etc. Second is the ease of doing business. And this ease of doing business, there's some things which can be fixed in Delhi, something which needs to be fixed at the state, some things which need to be fixed at the district level.
Today in balance, where does more fixing need to happen, at the state level or the central level?
I think more at the states. Because the good thing is states are competing with each other. That's good. But not, if you look, there's a huge difference depending on which state you operate in.
I can't ask you to do a ranking of states here impromptu. That's not going to be easy. I'm coming to you, Padmaja, and on the broader issue of money finance, because that is fundamental. That's the oil for any business in India. And for long, and if you do these graded comparisons, for example, with China and the real estate sector, for 3 decades, China's real estate industry and those millions of apartments that still remain empty, while we as outsiders ask questions of that, they actually created employment. And the real estate sector has a massive spillover effect into all other sectors. In India, why is money so excessively costly when you put all of it together for an entrepreneur and for a business person to start up?
Are we talking of real estate sector or startup?
Broadly, beyond real estate, of course, the answer is quite obvious, but we'll leave that.
No, the comparison with China is, yes, I think onerous. We are seeing where China is, how volatile the economy of China has become and how it's leading to that China plus one argument that we were discussing. Coming to India and about the startups, I think there has been a sea change in the environment for startups. The fact that we have about 65,000 startups today, and we have 103 unicorns, all minted in the last 1 year. We had IPOs about more than 1,000 in the last 2 years. So with all this, I think the startup economy is really picking up pace. Yes, there has been some moderation in the last 2-3 months, given the situation that is beyond even India's control, I think. But the ecosystem for the startups, whether it is the private equity, venture capital, this has been very, very well established. I've seen it from the banking side. We are seeing it from the capital market side also. Yes, FPI is, today it is sort of in a withdrawal mode, but I think that is a flight to safety, or the uncertainty, the complexity that is evolving around the world is making them a bit, withdrawn. But I think it will come back. The best thing is that this is being replaced by Indian mutual funds, Indian retail investors. So the money, it's not like the economy is collapsing because FPI is withdrawing. It is actually quite well steady now. The thing is that the more the Indian investors invest, there would be much more, I think, focus from the regulation side, from the government side, because this would be a less aware sector, I think, the retail investors. So financial awareness is something we need to build. Now the startup economy, I think the other factor that is missing today in startups, I feel, is the funding, the debt funding for startups. This has started in Silicon Valley. There is a whole bank set up in Silicon Valley Bank, which gives loans to startups. And then there are multinational banks that are looking at that part. In India also we tried, we did it in one bank. But the appetite of the startup seems to be towards equity rather than bear that cost of the debt. I think this sort of awareness, financial literacy, not only to the masses but to the classes also is required probably.
Amish, before I come to you, one quick point, because I think it will flow well with what you just said. So one of the things that we did, the big 4 or 5 cleanup acts that we did in the last 7-8 years, is the Insolvency and Bankruptcy Code. And I posit to you, just for the sake of a debate and an argument, that the Insolvency and Bankruptcy Code, while done with the best of intentions, seems to have run aground of massive judicial interpretation, reinterpretation, promoters, RPs, and the whole process is stuck. And I would say genuinely the recovery is in single digits. Is that a good outcome? When it started, did you expect that we would even get single digit recoveries?
Actually, this bankruptcy code, even in other countries, even in US, it took some time to actually settle and give the benefits to the economy. I think in India it has been an evolution. The only aspect I would personally think is we started off with the really big companies. We started with the really big NPAs. So it went into a lot of legal rigmarole. Maybe starting with the smaller companies and having those low, quick wins would have probably sorted out things. But the situation was like that. There were many NPAs.
Has promoter behavior changed? I ask you this as a banker.
Right, yes. There's no doubt about it. I think human nature, why do we say promoter? If you have a chance, it's in human nature to do something, that is not really bad, or there is no real control over that area. I think that gaps have been fixed so that there's no temptation to do this diversion of funds, or there's much more monitoring, there's much better technology to do all that. And banks, it's reflecting in the banks' balance sheets today. And I don't think that NPA crisis will again come to those levels ever, because banks also have sort of, I think, come together, and there is a lot more confidence.
The public sector banker is savvier and smarter than the private sector banker in some ways these days.
I don't compare, but I think there is really no distinction that way. Neither is better or smarter than the other. It is all the context in which we function.
Your point is very well taken. Amish, I'm coming to you, and let's focus on, again, lessons from what you've been seeing. What should be the priority of a mid-sized company in India as it seeks to navigate and ensure that it has sustainable growth over the next 5-10 years?
So I would say, and I just want to take half a minute to address another point which you had raised earlier.
Please.
I think you had asked about, is India more better prepared today than maybe it was to handle the crisis earlier? I think in our view it is, and many reasons for that. I think we spoke about corporates deleveraging in this last few years. So a lot of the large and mid corporates use the opportunity to actually deleverage their balance sheets. If you look at their profiles, I think they have changed themselves. Much more discipline in terms of their investments and how they look at balance sheets now. If you look at the banking and the NBFC sector, we had some turmoil. NPAs went up over a period of time. NBFCs had their own crisis. But we see that liquidity, provisioning, NPA, I think a lot of it has improved over the last 2 or 3 or 4 years. And they are much better prepared to fund growth, whether it's capex or working capital. So the large and mid-sized corporates, the banking sector, I think the place where we see some bit of challenge is the SME segment, which is where you really see impact. The contact-based services got impacted in a very big way in the last 2 years, but we are seeing that recovery coming back, with the economy, the travel and all of that happening. We hope this year's GDP will be driven largely with services, and that should augur well for the economy. And fourth, I would say the exports of IT services and the services sector. So these are some of the things which gives us the confidence to say that we are much better prepared to handle a crisis. Of course, our forex reserves, the way they are to handle the current situation versus what we have seen in the past 20, 30 years, we are much better prepared from a resilience perspective. The policy direction that the government has taken, the steps which we have taken, whether it's monetary or fiscal, all of that gives us that confidence. I just thought I'll answer that.
Yeah, please. You want to take up the point of what needs to be done further.
So from a medium-sized company or the mid-sized company, I think one is business models have undergone a change very fast in the last few years. So adaptability, and I think Sanjeev spoke about it. So adaptability is going to be very important. Are you ready, flexible? Because everything is getting disrupted, whether it's supply chain, whether the way you work, your customers are getting disrupted, your employees are getting disrupted, to the level that your business sustenance itself could be challenged today. How do you, if you just look at people cost on some of the tech, companies or some of the other, skilled labor, 20, 30, 40% increase in labor cost, attrition at a very different level, customers are not going to pay you. So I think your ability to really adapt and take those actions, much faster actions, that is going to be very important. I think you cannot depend upon longer term plans. I think you'll have to calibrate your plans as you keep moving along. Also, I think ability to look at technologies and new models which will disrupt you. I think earlier we used to say, listen, disruption can happen from near companies. Today, disruption can happen from companies whom you don't think will disrupt you. Are you really prepared to look at that disruption and maybe even collaborate with those companies? I think partnerships and collaborations are going to be very important. You can't do everything yourself. So I think it's important for these companies to look at technology, to look at models, to try and look at collaborations and partnerships. Fintechs is a very good example. When you're looking at the banking sector in India today, the way they have embraced fintechs and tried to leverage digital, something which is for lot of other industries to learn.
Can I ask you a follow-up on fintechs in the context of the current debate? One of the things that fintech people say, mostly off record, is that while they are pretty abreast of technology, they say that the RBI is not, and policy making is following. The most recent thing is about your prepaid load-ups on that and the disruption that it forces. And on the way here, I was trying to teach myself how should I tokenize my card, because that is a deadline that's coming up on the 1st of July. Is that a fair assessment, or am I being overtly critical?
See, I would say that when you are dealing with money of people, you need to be extra responsible. And I think, technology innovation, there will have to be a balance, right? When you ask technology companies, they would like to test the limits, push the boundaries beyond. And I think when it comes to people's money, you are going to have that responsibility as a regulator, as an organization to think about. And I think that balance will have to be drawn. You will see the pendulum move in a particular direction, then maybe you calibrate that. Over a period of time, I'm sure you'll find the balance of what is right. I think how do you encourage innovation? How do you allow companies to evolve? I think that's where, we will have to evolve as a country. Sandbox environments. I think the regulator is trying to take feedback and work through it. I'm sure the pendulum is going to keep moving one way or the other till you find the right balance.
Okay, Sanjeev, I'm going to come to you on that 10 years thing. Padmaja, I'm coming to you because it would be wrong to only give one aspect of the RBI. The question that I really want to ask you here is, considering what is happening to cryptocurrencies across the world, massive amounts of wealth, so-called wiped out, $2 trillion plus. And we ran a story on Business Today where we said, did the RBI and the government of India actually save Indian investors by raising the red flag for almost a year and telling them, don't go too deep into this. This is very volatile. It is very uncertain. Is that a fair way to put that?
Yes, I think it is fair to say that, because what we don't understand or what we don't really fathom the implications of getting into it in a big way would be inviting trouble. And as RBI, again, they have to look at the whole economy. And the bloodbath that is happening in the crypto space today, probably we would not have been able to control if we had, let it play out in India. So I think it's a fair.
Sometimes the heavy hand of Indian regulation does have its good there. We are on the final 5 minutes of this panel, and the last wrap-up comment from you, Sanjeev. 10 years down the line, if I was hoping to build a company, or there are people who are already doing that, what are the key things that they should remember?
I think the first thing is the energy transition that's happening. I think that's huge. I think we have spoken about it a little bit. I do believe that we can play a big role globally. I mean, already, we are actually competing with China in terms of fulfilling the world's energy needs as they transition towards cleaner energy with the focus on hydrogen and so on and so forth. I think that's going to be one big one. I think second one is, the amount of private capital that is currently available, and I was, some of the questions that you were raising with to Padmaja, I think the amount of private capital that is available for Indian businesses, considering the challenge that we have in terms of transforming some of our businesses. Today, transformation is not about just a pure transformation of supply chain or front office or workforce. The supply chain has to be integrated with, let's say, the ESG elements, right? So it is it's wheels within wheels. Now, to drive all of that transformation, etc., people will need capital. And I think we need to be able to leverage private capital much more than we have. I think the point was made. Today, the banks are well capitalized, so they may be able to finance the next capital cycle. But I think the amount, $900 billion of dry powder, which is there globally, I mean, fund after fund is raising $30 billion funds. I think we need to be able to capital for our own sake. And I think the third one really is the ability to harness the talent that you have. Again, if you look at it, again, we're talking about, the question that you had on China, for instance. In terms of vocational training that China gives to its people, I think at least 25% of them go through some formal vocational training. In the US, that number is above 50%. In India, that number is in single digits. And I think that's something that, if those three, to my mind, would be key for the next 10 years.
Absolutely. And there's so much more that could have been discussed, but we're completely out of time. TV Narendran, Padmaja Chunduru, Amish Mehta, and Sanjeev Kishan, as always, thank you very much for your time. With that, it's a wrap on this session. Abha, back to you. Thank you.
Thank you. Thank you all very much for such an enlightening session and stimulating start to the day. Our next speaker dives further into the world of VUCANOMICS and the power of technology. I'd like to welcome on stage Saurav Majumdar, Editor, Business Today, in conversation with Salil Parekh, CEO and Managing Director at Infosys. Salil, good morning and please welcome. Thank you. Do join us on stage. A big round of applause, everyone.
Good morning and welcome, Mr. Parekh. And thank you for joining us for what I'm sure will be a very engaging discussion because you are at the forefront of this whole navigation of, VUCA world through digital technology. And we will get to hear from you, hopefully, on all the details which you as, the person who's driving Infosys into the new world, this uncertain new world, is going to what you think of the road ahead. So I'll dive right in. First things first, Mr. Parekh, what exactly do you think is the manner in which tech has rescued the world during COVID? And we all know how in many, many ways, including our personal lives, including the way we work and everything. How do you think it will now empower enterprises to navigate this uncertain new world?
First, thanks for having me here, and wonderful to be here at this session. I think technology has really been a critical driver in what has changed. We've all seen that in the past couple of years. As we look ahead, what we see, whether it's large enterprises or it's government departments, there's a tremendous need to leverage digital technologies, cloud technologies, data, analytics, artificial intelligence, to essentially drive speed with which things are being driven today, to drive predictability, and technology allows for that in this uncertain world, and to make sure that decision making is more robust. So while there is no exact way of making decisions, but a lot of these technologies, especially related to data and artificial intelligence, allow for that. And we've seen with large enterprises, there's a better way for them to connect with customers. There's a better way for them to engage with their supply chains. There's a better way for them to connect with their employees. And the same with government departments. There's a much more efficient way that government departments are connecting with citizens. And this is really the leverage of technology that we are seeing today. While not everything can be stabilized, as you mentioned, in the new world of volatility and unpredictability, but a lot of these technologies allow us to reduce some of that volatility, to manage through some of those bumps.
As we sort of enter this post-pandemic, in a sense, post-pandemic world of uncertainty, do you think companies in India in particular are more and more getting prepared for this, or do you think they're still underprepared and what more needs to be done?
In fact, in India, my sense is that companies are moving at a breakneck speed. They're moving very fast all around the world. But in India, we have seen the leverage of technologies, even through government, is much more dynamic. And large enterprises are also following it. If you see what's going on in e-commerce, what's going on even on social media companies here, what's going on in actual transactions, whether you look at UPI or other platforms that have been built, whether you look at the India stack, there's ready leverage of those technologies that we all see in our daily lives, and it's much easier used and it's much less biased to any specific platform. It's much more open in that sense. And so the companies in India, the government agencies and departments in India are much more leveraging technology than we see with any country of this size and economy.
You've been working closely with the government as well. What are the things you think the government is sort of looking at in particular, and what are the key learnings for you as an organization which is working so closely with the government?
So there, what we've seen is there is a clear vision that the government has and many of the departments have on what they want to do with enabling citizens with greater access and use of technology, and a simplified way to engage a more transparent way to look at information. For example, in some of the programs that we've seen, we've put in place artificial intelligence technologies, we put in place machine learning and data predictability technologies, which we believe have helped the government in increasing some of the receipts that they've had with respect to tax. And this has made a huge difference because these platforms make it easier for government to see the overall structure and make changes as is appropriate.
And as an organization yourself, as a private sector organization, sort of how government and private sector will work going forward?
I think here the way we've seen it work is if companies are able to support the vision, the digital vision of the government, there's a tremendous amount of opportunity. We're seeing this in different departments. We've had a clear focus in one or two areas where we have a real depth, but there is opportunity across all governments, and we are also starting to see many states now jump into this.
Now, as a leading technology company, one of the biggest in India and the leader in the world as well, how do you think technology has adapted itself to VUCA? I mean, that's the critical element which we need to understand, how technology itself is adapting to this uncertainty.
So there, what we see is there are ways that technology is allowing its own adaptation because of the uncertainty. Take an example of what we see on e-commerce. Today, the ability for e-commerce to help us as individual consumers to make more intelligent decisions, to guide us into choices, to self-select some patterns, while sometimes it may appear intrusive, is a huge leap forward for technology for the right reasons. When guided properly, these sorts of decision-making parameters are huge adaptations of technology, which make ordinary life much simpler for consumers to use. Then we look at technology which is adapted in a large country like ours to allow distribution of goods, distribution of other means of equity. That has made it very easy for a large population like ours to benefit from it. Then you look at technology which has helped banks, again, the banking sector, both in India and worldwide, to create much better ways of linking up with the consumers all around. We've seen some changes in the way technology and especially bandwidth has expanded massively. That has allowed many activities which were taking hours and sometimes days to be completed in minutes and sometimes seconds, and which makes it easier for people to use this technology. So technology is adapting to make sure that we progress in this uncertain and volatile setup, and that makes it easier for all of us to leverage it.
Now, in our earlier conversations, Mr. Parekh, we spoke of how your company and other companies like yours are sort of looking at new verticals, new areas of growth, which will drive not just the companies, but also the whole digital, sort of journey of the country itself. What are these? Tell us a little more about each of these verticals and how they would be able to power the country and your company.
So there, as we had spoken earlier, one of the biggest change we see is the area of cloud. And there's tremendous growth worldwide in what companies, enterprises are doing with cloud. And technology businesses like ours are well positioned. We built something called Cobalt, which helps us in the cloud area. But in general, large technology companies are ready to support the cloud journey. Another area that we discussed briefly was what a lot of the new tech companies are doing. So new tech companies are growing at a tremendous pace. These are not just small startups, which of course are doing very well globally and in India, but also large technology companies which have changed the way the world works. And that is a growth area for something that we are looking at. And another area which is more specific to us in the technology business is the healthcare area. We see globally healthcare more and more leveraging technology, and that becomes a tremendous growth area for us and in support of the country.
You spoke of earlier, we'd spoken of AI, ML, and the other areas which are coming up. What are the key things which need to be done in terms of skilling? Because, these are all linked to the whole area of skilling also. I mean, the government is working on some of those aspects as well. How do you think the skilling aspect will sort of come in as new technologies come in at us?
So there on skilling, I mean, we have a huge advantage in India. I think our education system is creating incredible large numbers of very well-trained individuals. Whether you look at the 4-year programs, which have close to 900,000 engineering STEM graduates, you look at 3-year programs, another large number of graduates that we have. And then, putting those individuals through a training program, for example, the sort of program we have at Mysore and many other companies across India have, that creates a ready, skilled individual in the technology area that can support the needs not just in India, but worldwide. We've also seen, for example, the usage of specific skilling on the new digital technologies, and we have online platforms that can help with that, whether it's on artificial intelligence, on machine learning. We've also started to build new skilling areas in areas such as the metaverse, in the quantum computing area. And we will see that availability of talent and skill is what is going to drive the world technology business.
Tell us a little more about what's going on in the metaverse. I mean, that's become a buzzword now for both companies as well as, the technology players itself. What is specifically, what is Infosys doing on the metaverse?
On Metaverse, first, we've launched something called the Metaverse Foundry, which has many of our early capabilities built in and ready to use for large enterprises. Metaverse really relates to what is possible in the virtual reality world and how individuals and enterprises can create scenarios within that virtual reality, within augmented reality to help them. We have some very practical examples where we're working with manufacturing companies to allow them to do training, to allow them to navigate safety inspections, to allow them to, for example, make repairs on shop floor without taking some of the risks that come with being on the shop floor. So there are simple examples that we've already put in place, but there are a huge set of exciting areas where the metaverse is proving to be very
also
useful.
Healthcare, I believe. Healthcare also.
Similarly on healthcare, where you can look at training skilled professionals on how they can improve their skill in a specific micro healthcare device, or looking at healthcare by remote delivery sometimes using the metaverse. So there are a lot of examples. It's early days in terms of adoption, but we're already starting to see some adoption in manufacturing and healthcare.
And do you think that's going to sort of change the way people work and, sort of interact going forward? And what's the time frame you see broadly, if you were to look at a crystal ball in terms of how the metaverse will change the game?
So there, I think it's very early in terms of what the metaverse is driving. And from our perspective, we are well positioned at Infosys to support it. My own sense is the next 5 or 10 years are going to be a massive opportunity set for the metaverse, and everything that we do will enable us to be better and better positioned. The real value is going to come where more and more enterprises and governments start to use it, and we'll have to see how individuals adapt to becoming part of the metaverse by themselves becoming inside it and using it.
We've spoken of large companies, how technology is changing large companies and helping them navigate this uncertain world. But there, in India in particular, there's a large number of MSMEs, the smaller companies who not only are unable to look at technology, they can't even afford it, they don't know how to use it, and they don't have the access or wherewithal, and that's really, and they're now hit by this wave of uncertainties, this whole cocktail of problems which has hit the country and the world. How do you see MSMEs leveraging technology in the way forward?
So there, what we see is the medium and small enterprises are benefiting from leveraging platforms. So they don't individually leverage technologies, but there are large platforms. For example, there's a platform on learning, something that we've built within the company that is used across India and across the world for skilling employees on new digital skills. This is something we made available outside of Infosys as well. Those are the platforms that many medium and small enterprises can easily become part of and use on a per usage basis, and that gives them access. Today we see a lot of other platforms being developed, whether they are platforms for supporting the sales process, supporting the human resources process, and those will be the way that these smaller businesses can leverage technology and leverage the most leading technology.
So you're saying it need not be per company driven or per firm driven, but more a platform driven approach for the smaller firms.
And a platform driven approach where they can benefit from the leading technologies and get some level of customization for them, but for the most part use these large platforms.
Is that proving to be a growth area for companies like you?
We have ourselves not focused on small enterprises at this stage. Our focus remains on global large enterprises. But over time, as we build platforms, for example, we built a very successful platform for banking, Finacle, which was started 20 years ago. That platform is extremely successful. It's not just for small banks, it's for banks of all sizes. But that's a platform that we will scale and build. We've built another platform on insurance where we'll see some of that growth. We've got a platform on mortgages and a platform on e-commerce. So we have very few selected platforms that will see some scaling.
Mr. Parekh, you spoke earlier of this whole cloud, the cloud being one of the major enablers in the current environment. Now, alongside that comes the fear of cybersecurity. There's a whole discussion going around of how digital, this whole digital journey will face the biggest threat. In fact, surveys have shown that CEOs are really worried now about one of the biggest threats in the new world is of cyber threats, right? So, what is a company like yours? How do you see that playing out?
So cyber is an extremely critical area for all large enterprises, government departments. We've built a very strong capability in cyber where we built security operation centers or SOCs all around the world, ensuring that we are monitoring the threat matrix for our clients and addressing how that can be softened in the way the attacks are happening. The cloud actually provides a very strong way of integrating cybersecurity because there the technologies are as good as you can get in any other environment. Our own view is this has to be continuously monitored, the threat matrix through the SOCs, and make sure that we have ability to deal with it when there's infiltration. There are several actors around the world that have used cyber to gain an advantage, to gain some destabilization. These are well documented. We have a method of working to address some of those, but it's something that we have to be watchful of all the time.
In fact, it's become a tool of war as well in today's times. So do you think companies are getting better prepared as you talk to them?
There's a ever-increasing capability on protecting against cyber, and there's an ever-increasing capability that some actors are creating to disrupt. So it's an ongoing battle between those two. We need to make sure that we remain ever vigilant in that.
No discussion on VUCA and technology can be complete without a discussion on the future of work. Yeah, and Infosys has been an advocate of many changes in that front. Tell us a little more about how you see that playing out. How are companies, in your view, adapting to this changing whole work metric, changing remote working, and the entire gamut of things?
So there, one of the things we've noticed is it's been extremely important to build some level of flexibility as we look ahead and create the future of work. We see a lot of our employees starting to come back, and we see a lot of employees at our large clients starting to come back to work, but they're also seeking flexibility in how that is to be dealt with in the future. We are also seeing that there is some need that many of our employees are sensing and feeling on social capital and the need to connect as they build their careers, as they learn from each other through peer networks, and they learn through shared experience. And there's also the need, when there's more innovative work going on project teams, to work together in person. So we are creating special spaces where people can come together and work at specific times, not all through the week. We are creating special ways where the social capital can be rebuilt. We see clearly as we move ahead, the future of work is flexible, and it's something where people have the ability to do both remote and in person as we go forward. As we look ahead, of course, there will be more and more work which will be done back in the office with greater flexibility.
But that itself will be a challenge to technology, isn't it? I mean, how do you have in the same team, for instance, you'll have some people working remotely, some people working in person. So how does technology, you think technology is able to adapt to that right now?
So today what we've learned over the last couple of years is the technologies really enable this remote working and where some people are remote and some people are in person. More and more new technologies are now coming in place where there's much easier connect, integrated teams which are remote and on in person are able to interact more well. Those sort of technologies are available and becoming more readily available for the future. My own sense is the flexibility will be more related to individuals. As teams start to work together, a lot of them will actually connect in person, with a few of them being remote.
Do you think that will have a bearing on the structure of the new age organization as technology sort of dominates the whole, the organization itself and it reworks itself? Do you think the organizational structure itself will change in some form going forward?
So they're difficult to predict. I think organizations have a way of evolving, but the evolution is typically dependent on what is being driven by the environment. There are various regulatory issues that we'll have to look at. And there are what clients are looking for. Clients are looking for extreme connect and also a great impact. And then finally, what are employees looking at? Today's employee that's starting from college is looking for tremendous level of flexibility, but also fast learning. So those sort of things will sort of filter in to the organization design.
You worked very closely with banks, and your Finacle is a major product in that space as well. Which are the sectors, Mr. Parekh, you think are really taking to technology and changing technology in the fastest way?
So there, I think banking and financial services always been the leader in tech, and they continue to remain that. But we see, for example, consumer products, retail going very fast. Automotive moving extremely strongly today. Even sectors such as utilities, which are more usually in the government domain or semi-public sector, are moving at speed to leverage technology. So as we look around our business, there's no real industry that is not impacted with technology today.
So you're a winner of one of the awards on Best CEOs. What are the 3 or 4 things you have done, particularly over the last couple of years, which has sort of taken emphasis to this fantastic trajectory which we see right now?
So there, I think first, Infosys has had an extremely strong foundation which was built over the years with its very strong capability on training and on delivering to clients. So the trust that Infosys has with clients has been incredible. One of the things we've put in place over the last few years has been this push to digital, where many of our clients are looking to use digital solutions, and we've built those capabilities out. And the biggest real sort of impact we've had is we put in place something called One Infosys, which is a way of working where all of our different capabilities are brought together to support our clients. And that makes a difference, because to do large digital programs, clients need multiple capabilities. No one thing can make the difference. With all of our employees working together, that makes a huge difference as one Infosys.
And that again has a bearing on the HR element as well. So you've sort of been able to carry the entire team to that one vision.
So there, I think the focus within employees has always been on what is right for clients. We've further cemented it by making sure that every capability, every service that we have is geared towards what the clients are looking for.
So how are large technology companies now going to change their strategy, given the fact, and like I said at the beginning, is strategy dead? In fact, in the sense that is it only as good as a year or two? What are your thoughts on that?
So there, we've talked about this before. Our focus is on what's relevant for clients. And that changes literally every few months. There are some underlying themes which are important. For example, large enterprises want to connect more closely with their customers. But what are they doing to connect with them? How are they building their capabilities? That keeps changing. For example, we have a very big focus on automation that the companies had for many years. And automation is a key driver because it allows large enterprises to be more efficient with their cost spend. And when the economies are changing, automation becomes an even more important enabler. So to the extent we remain relevant to what clients are looking for, that becomes a strategic driver for us.
And that vision obviously comes from the top. And sort of all the line managers as well.
No, absolutely. So that's something that we've put in place as a sort of a coherent approach within the company. We've just rolled out a new strategic direction for the next several years, and that's part of it by being more relevant to clients and what they're driving for the change.
In this environment, I mean, and good you spoke about this right now in the context of your company. What are the three or four things global CEOs and CEOs in India need to really focus on in this VUCA world?
So there, what we see our large enterprise clients, CEOs talking about most is speed. Speed is something that has become extremely important, and technologies become one of the key ways in which the large CEOs are driving to speed. The second is much more predictive in what they can think their customers are doing. So the more they're able to predict where their customers are going, the more they're able to build solutions for their customers. And the third, which is almost always prevalent and may become more relevant going ahead, is cost. And that becomes important in this new environment that we're starting to see.
Mr. Parekh, thank you very much for this wonderful discussion. I look forward to having the rest of the evening also. Thank you.
Thank you very much.
Thank you so much, Mr. Parekh. Thank you so much, Saurav. I'd like to welcome our next guest. He's a doyen of the industry and someone who's been very vocal about some of the high-level developments that have been taking place in the automobile world. How are we facing these challenges in an uncertain time? Who better to discuss this than R.C. Bhargava, Chairman, Maruti Suzuki India, in conversation with Siddharth Sarabi.
Good afternoon and a warm welcome once again to everyone. And Mr. Murthy is here, Salil is here, Mr. Arun Puri, Raj Chengappa. I'll dive right into the subject because we have another session coming up, the most interesting one of the day. Mr. Bhargav, a very warm welcome, and I don't have to say this once here, but someone who moved from the Indian Administrative Service to building cars. And the first question as we navigate the subject of the automobile industry is not on the industry, but it's about your assessment and for you to tell our audience here, what has changed for the Indian consumer Maruti started as a small car, the most preferred hatchback, a car of dreams. And today we see that there are lesser number of Indians preferring small cars and everyone wants a big hatchback. What's a big SUV? What's happened here, sir?
That's strictly not correct.
Okay.
It looks like that a lot of people prefer SUVs.
But if you just keep the mic closer to you. No, just keep it closer to you, sir.
If you look at the numbers, the sale of the hatchbacks, which are the smaller cars, is many times the sale of SUVs. Yes, the percentages which you report, the growth percentage of the SUVs is higher. But then if you have a small base, the percentage will always be higher.
Okay, that's a good point, sir. I take up another point, and this is to do with electric vehicles. This is the current currency of the season. Everyone wants to look at electric vehicles, some fires notwithstanding. Again, as an industry doyen, what do you see is the future of electric vehicles in India?
No, electric vehicles will certainly come to India. But it's going to take longer coming to India than it will take in many of the other Western countries. And there are many reasons for that. If you look at the purpose of electric vehicles, primarily to bring about carbon neutrality, the current situation doesn't help much by using electric vehicles. 75% of the power which is used from the grid is coal-fired power. So you are burning coal, generating electricity, and using that electricity to run cars. And if you look at the actual numbers of emission, you will find that a Toyota hybrid car today is cleaner than an electric car in Indian circumstances. That's one factor overall. If you look at the cost of an electric car today, with today's technology on batteries, because that is the major cost,
yes, sir.
The cost is anything from 50 to 70% higher than a petrol car. Now, as I said, 70% of the car market in India today are small cars. People who are buying cars which are costing up to, let's say, 6 lakhs or so, 6, 7 lakhs at best. Now, those people are people who are what I would term the Bharat market for the car sector, where value for money is very, very important and where their ability to put down large amounts of money just doesn't exist. For these people, an electric car today is unaffordable. We've seen in the last 3 years that when the prices of cars went up because of the conversion from Euro 4 or Bharat 4 to Bharat 6, there has been a 28% drop in the sale of cars in this segment because they couldn't buy these cars. The sale of second-hand cars has gone up because they had no option but to buy this. Not only that, the sale of two-wheelers has plummeted in these 3 years because two-wheelers also converted to Euro 6. And that cost increase made even the buyers of two-wheelers defer their buying decisions because they didn't have the money to buy a new two-wheeler. So that factor is going to remain. It's not going to change in a hurry. The third factor is infrastructure. A large part of these people who buy the small cars, they don't have any place to park their cars. They don't have a garage. They don't have a driveway even where they can park a car and put in a charging station. They have to park right somewhere. Now, what is the infrastructure which is going to be built and when will it be built for these people to find it convenient to charge their cars? So that's the third factor. Additionally, we have to take into account that India has many alternative ways of achieving the same purpose of reducing the carbon footprint and reducing the imprint of oil. Amongst these, we have CNG. And we've seen in the last few years, the demand for CNG cars is absolutely shooting much faster than SUVs, by the way.
Absolutely.
The CNG requirement has gone up very sharply. Hybrids are very much there, and as I said, they are cleaner. And The most interesting thing which I think should come in the next few years, especially because I think the Prime Minister and the government are very keen on it, and I personally think is an enormous potential lying unused in India, which is of biogas. We have the largest cattle population. We have a huge amount of agricultural waste. We don't use it for generating the kind of gas which is possible. And that's the next technology which I think we should be pushing. So with all of these technologies there, I think electric cars will find it very hard to compete with all of them.
Okay. Before I go on to the broader structural shift, many of the points that you have already explained, and for the average consumer, the only question that even reporters like me get asked is, there is a 6-month waiting list, can you do something about it? But that's not my question here, sir. Maruti Suzuki was set up with generous involvement and in some ways contribution by the state and the center many decades ago. The question I have for you today is in the context of Tesla and its demand for a more than generous set of incentives to do business and to manufacture in India. What would you say on that subject?
Maruti was not set up on any generous contributions by anybody. I think, again, you got the facts wrong. We didn't get the right to import CBUs from Japan and sell CBUs in India at that time. It's not allowed. Those were days when the restrictions on foreign exchange were the tightest. We were getting close to 1991. And when we talk of difficulties of doing business, I think people, I don't know if there's anybody around who was doing business in the 80s here, but those days were very, very difficult days to do business in India. And we got nothing special from government or anybody at the state government. We got land which was acquired by Parliament and transferred to this new public sector company. We got a loan and equity which was put in both by Suzuki and the government. And that was it. We had to work from that.
So in the context of Tesla, does it deserve a special treatment?
No, I'm not sure why Tesla should deserve special treatment and not any other car maker who wants to come into India. If somebody wants to come in here, let's say with a hybrid car, or with a car which will use biogas, why not them? Electric car today, as I said, in India is not particularly carbon friendly. You are using 75% coal-fired electricity. Please remember that. So what is the value of Tesla then?
A rich man's toy?
Sorry?
A rich man's toy?
Yeah, it's for the very, very few people will be able to afford a Tesla in India.
Okay, that's a good point. Let's now come to the structural shift, Mr. Bhargav, that is happening. Consumer tastes have changed, and you would know that best, and like you explained to us. What is the way out of the current shortage that the automobile industry is said to have with regard to semiconductors, long waiting periods, and is there sort of light at the end of the tunnel, sir, on that subject?
I think you're going to see an improvement this year. It's already happening. And the semiconductor shortage has developed because of various factors. The COVID had a role to play in that because many factories during the COVID period, we got into trouble because the factory which was supplying a critical part to us and from Malaysia shut down for a long time. So that kind of thing is now not really happening. People have got used to how to work with the COVID. New factories are coming up. And I expect that in India also we will get investments happening soon with the government's PLI scheme and things so that we will have production in India. But as I see this current year, we think that in Maruti we will have a much better availability of chips this year than we've had last year or the year before.
Mr. Bhargav, what are the broader signals that emerge from this as far as Atmanirbharta is concerned? Your company is one of the best examples of that. We did not pursue the path of semiconductor indigenization and independence for decades now. What are the lessons that have been learned from this particular crisis?
I think what we've learned from this semiconductors is that total dependence on a critical component of the car on manufacturers outside is not the best option. We do need to get people manufacturing semiconductors and chips for the automobile industry in India. India offers, to my mind, a very good potential market for the future. We are the only big population country with large potential for the demand for cars, where the growth is going to take place from about 30 cars a 1,000 to at least 150 cars per 1,000 of population in the next few years. No other country in the world is going to grow. So for a semiconductor manufacturer coming to India, where the ICE cars will remain in use for a much longer period, and where the market is growing, is going to be something which is not going to get anywhere else in the world. And I think the efforts which are now being made by government and by private industry to bring semiconductors into India will pay off in the near future.
So your company has set new benchmarks for manufacturing at a time when, like you said, there were very few examples in this particular sector, and we have seen India emerge as a pretty resilient and self-dependent when it comes to automobile. There are clusters around the industry. Gurugram is one, Pune, Tamil Nadu, Chennai, that entire belt. From a manufacturing policy perspective, what are the lessons that your sector, the automobile industry, holds for the rest of Indian industry?
Well, I think one major lesson is the importance of the supply chain. I think most people in India, including policymakers, don't understand the importance of the supply chain and what needs to be done to build a reliable, competitive supply chain. I think we need to understand that if your final product is going to be globally competitive, each and every component, which means what is supplied by the tier 1 vendor, tier 2 vendor, tier 3 vendor, each of those components has to be competitive globally in terms of quality, in terms of cost. Most manufacturers have a transactional relationship with their suppliers, and there is no interaction between them on how to continuously upgrade quality, cost, productivity, and such things, so that the vendors come up. I think it's not realized that the vendors' success in terms of becoming globally competitive producers is essential for my success of becoming an OEM who is competitive in the world. We are totally interdependent on each other. And it is not correct to think that a manufacturer's only business is to see how to buy cheapest from the others. We have followed a policy right from 1983 of working with the vendors at all levels and continuously giving them whatever we have learned from the Japanese or ourselves on how to improve quality, productivity, and reduce cost. And I think that's the reason why the automotive component industry in India today is such a large industry and is globally competitive, exporting some $12 billion worth of automobile components.
Absolutely, and it provides such a large number of people with employment. Let me come to consumer issues. And as we sort of came in, Road Transport Minister Nitin Gadkari, please go ahead, sir, have some water. I'll kind of, in fact, explain this to the audience as you. Road Transport Minister Nitin Gadkari has just announced a little while back on Twitter that he has approved new rules for Bharat NCAP. Now, this NCAP is the new car assessment program, Mr. Bhargav. I'm sure you are aware of it. Once implemented, it will allow Indian consumers to choose safer cars based on star ratings. And the testing protocol for this will be aligned with global protocols. What's your own reaction on this NCAP, and what does it mean for the Indian consumer and automakers like you?
You know, I'm all for road safety, but road safety must be looked at for all users of the road. road safety is not only meant for people who can afford European cost cars. We have in India something like 230 to 250 million users of two-wheelers. Nobody in the world uses, well, maybe some people in Taiwan, uses two-wheelers to such a large extent as a means of personal transport. 2/3 of the petrol which is consumed in India is used by two-wheelers. So that will tell you the extent of use of two-wheelers. Now, there is no safety regulation of any kind for two-wheelers. If you look at the road accident deaths, about 30% of the deaths happen from two-wheeler owners. Nobody bothers about them. When we come to cars, even going to Euro 4, from Euro 4 to Euro 6, has what I mentioned just now, 28% decline. NCAP, Global NCAP, is an organization which is largely financially supported by makers of airbags. And the move to have airbags in the cars comes out of this NPAC and safer cars. Sure, cars should have safer cars, but give the customer an option. There are many cars today which are with 6 airbags and meet all the NCAP standards. If the customer really wants the safest of cars and can afford to pay for it, by all means he should get it. But if a customer has a choice of not having a car and buying a two-wheeler, or buying a car which doesn't have NCAP standards that meet the government standards, should he not have an option to buy that car, or should he go back to a two-wheeler which is much less safe?
Are you saying, therefore, that 6 airbags should not be mandatory?
I'm saying that NCAP should not be mandatory. I'm saying that India is a different market from Europe. We cannot follow the European standards of safety in all the vehicles in India because we can't apply that to two-wheelers. And are we going to leave those people out of the safety thing and only apply safety standards for the more rich people? Surely we should look at what should be done to provide better transport for the people who use two-wheelers.
So why is this being done, sir? Why is this being done?
Because it's the global, what's happening in many countries today. Although even today, the global NCAP is not mandatory in anywhere in the country. It's an option which customers get to buy cars, and the manufacturer sees which cars the customer will buy at what standards. India, that option is not there.
Sir, there would be some people who would argue that because of the high number of fatalities, accidents, 11% of global road accident deaths are said to happen in India, that we must drive through these higher standards.
Please look at the data of accidents and where the road casualties are taking place. As I said, more than half the deaths in the road, 60% of the deaths on the roads, all India, is from pedestrians and two-wheelers. It doesn't happen because of lack of airbags. We did a study that if you put 6 airbags in the cars, the deaths on the roads will come down by 0.5%. Because the accidents, we don't have data in India also to what causes accidents.
And how much would cost go by, sir? Okay, please. Please. Sorry.
Why do accidents happen? We sell a car in India with all the latest standards of safety. After we've sold a car, there's no regulation, no law, no inspection about whether the car which is running on the road continues to meet the safety standards or not. What we have now said is that after 20 years of running on the road without ever checking its safety standards, it should be scrapped if it's not fit. Do we realize how many accidents happen, how much traffic disruption happens because cars are not maintained properly and break down? That's the cause of accidents and deaths that we are not addressing.
What would need to be done to address this? What kind of change at the policy level, industry, consumer level needs to happen?
We need to do what the rest of the world is doing. vehicles all over the world, at least in all the reasonably developed countries, and I'm including the Middle East in that, cars are subject to periodical inspection and a fitness certificate is required before they can continue to run on the road. We don't have that.
Can I ask you, sir, that if that were to be done, will it be another breeding ground for petty corruption?
It depends who does it. If the government runs these centers, then there is a much higher risk. Our suggestion is that it should be done by the dealers of the car manufacturers. And if they are found to have done something, the manufacturer will undertake to terminate the dealership. There is a huge penalty if you give a fake certificate for a few thousand rupees. You lose your dealership, which is worth several crores.
Yeah. So, since we are talking about this, how effective is pollution under control certification?
Most of the current cars, which are now being made to Euro 4, Euro 6 standards, they're all electronically controlled cars. It's very rare for these cars to require or to have a situation where the emission goes wrong. But the law today requires us to get the certificates done, which is fine. Now, I have no idea to what extent these certificates are done genuinely or not done genuinely. Frankly, I don't know. So
and there is no study by any government agency as well?
It's not our business, so we don't do that.
Okay. Let's talk about the current uncertain times, Mr. Bhargav. What is happening in the broader economy? You are seeing a significant shift in the exchange rate. Input costs have gone up. Automakers are saying that they'll have to pass on, and some bit of that has already happened. Does it all add up to the cost of owning a car for the average Indian consumer, regulatory changes, policy changes, and now all of this?
Certainly, cost of owning cars has been going up. But let me tell you that as far as I'm concerned, I have seen lots of uncertainties, maybe not in the same matters, but lots of uncertainties for the customer, for the manufacturer, for doing business, ever since we started 40 years ago. Doing business when you didn't know what the next budget was going to bring in terms of customs duty and excise duty. They changed every year. The foreign exchange situation was terrible. You didn't know what import would be cleared, to what extent it would be cleared by the DGTD. There were, of course, no regulations in those days, so that part was not an uncertainty. But everything else in doing business was, the cars were not a priority object with the government. And you didn't know what new policies would come and when and which particular government would do what.
Are they a priority now? Because sometimes one would say that they are seen as vehicles for tax revenues.
Cars certainly generate a lot of revenues. And I think that's one of the factors which holds back the demand for cars in India. Because the taxation on a car which we pay in India is, 2 to 3 times the taxation which is paid in Europe and in Japan. Our cars are much higher taxed. And that is the problem we have here, that we want the European standard cars, but with an Indian income level which is 5% of Europe.
And rising interest rates for car loans?
That too, but that I think people have got used to. Interest rates today we are saying are very high. I remember the interest rates in the middle 80s and up to the 90s when we had some surplus money because of booking and we would get 17-18% interest rate easily. That was the kind of interest rate I worked with. The car loans were 15-16%. So it's not that today I find that if The customer pays 8 or 9% or 10% interest rates, very high. We work with much higher interest rates.
You're absolutely right, sir. Many millennials still don't recognize or would not remember what a dial-up internet tone was like, so I get that. I'll shift focus as we wind down this conversation. So your company has symbolized how India has grown in a certain way. I remember during my MBA, one of the first industry visits we did was at the Gurugram plant, and I saw an entire car, at least the steel of it, the frame being dipped into a paint and being taken out and drying, and I was transfixed, and I was like, wow, this is how it is actually made. Today, what is the car technology of the future, or a mix of technologies for the Indian consumer? I ask you this in the context of what you said about electric vehicles, as well as emission norms, the production of electricity in India, our dependence on coal. What is it like 5-10 years down the line?
The standards of quality and reliability of cars has been going up all the time. And I think at one time we used to think of defects in so many parts per thousand and then became millions. Now it's gone into, you really want 0 defects per million. The manufacturing technology has changed accordingly. And I think that process is going to continue because the demand of the customers is getting more and more stringent. Customers are also wanting things which Mr. Parekh talked about, more technology in their cars. Connected cars is the way of the future. In India, I think, if you're talking the next 10 years, we will have, I think, cars which are using all the alternative fuels which I mentioned, whether it's CNG or biogas or hybrids or ethanol. Ethanol in fact is a very good option. And if you mix ethanol with biogas and to a higher percentage, you'll get very clean cars. So all of those will be here in the next 10 years. I don't think electric cars up to, say, 2030 or so, something like that, are going to be significant numbers. There was a recent study by Arthur D. Little, which said that by 2030, they estimate that the penetration of electric cars of the total population will be 5%.
Okay. Sir, I change tack to another point. Your company has been a breeding ground for all manner of talent in India's automotive industry. I know several of them. I also recall terms like Kaizen and all the other fancy Japanese management techniques that your company has deployed. If you were to describe your company's management culture to our younger audience here, how would you describe today's Maruti?
You know, primarily what we learned, and right from the beginning, and we've tried to integrate, is that a company should run and will run most effectively if there's total teamwork within the company. The stronger the teamwork in a company, the better will be the results. And we have tried to build a culture where we have tried to remove as much of the concepts of hierarchy and status and recognizing people by their kind of quality of their suits they wear or the size of the office they sit in or the number of air conditioners. We have tried to make it as egalitarian as possible. And there's virtually no difficulty of even a worker coming and meeting somebody senior manager level or general manager level. So it's a very open kind of culture. And we encourage people to speak their minds. We encourage people to talk what they want to talk about. People over time have learned that they have to do their homework. Because usually, if you come up with half-baked ideas, then the people at the top probably will tell you that, look, this is what you haven't done. So I think it's a little different culture. It's a very open kind of culture.
My final point, and this is as one of India's foremost business icons, Mr. Bhargav, your own personal journey in some ways symbolizes how India has changed from the IAS, from the steel frame to actually using the best steels. Today, as you look back at your career, and I wish you many, many years of contributing to Indian industry, to our economy, how would you describe your journey for our audience here and those who are watching this?
No, I don't know how to describe this journey because things just happened. It's not that I had planned that this would happen or this wouldn't happen. It's just the way things happen. And you got opportunities to do things. You try to do your best, make them happen. You keep learning. I think the most important thing is to keep learning. Because what you learned in the IAS and then what you started learning later in industry are different areas. But there is also some amount of commonality in many of these things. Personally, I think it was a good transition. I think more people should make this transition and come out of the civil services after some experience and get into doing things which are more concrete.
Mr. Bhargav, if given a chance, what would you change in a IAS or any service officer's training, learning from your private sector experience?
Oh, I think, to my mind, the biggest deficiency in the civil services today is the lack of knowledge, expertise relating to the areas where the economy adds value. Whether it is manufacturing, whether it is agriculture, whether it is even the social services like health and education. I think policy makers and people who decide how things should be implemented should have much more domain knowledge and experience. And at many times this has been talked about in the IAS, and people have said that people should develop domain knowledge. But overall, when it comes to the system of promotions and such things, all of that goes past because everybody wants to take the earliest promotion he can and not wait till there's a promotion in his discipline. And the second part is that we have largely continued with the rules and regulations which were from pre-independence times. Financial rules, conduct rules, and such things, they're all based in the British times. We have changed completely from that kind of an administrative economy to a development economy. But the kind of distrust, it was the earlier discussion talked about trust as being a value adder. We don't have trust. The whole system is actually designed and based on distrust. And I think that is a major factor which affects the civil services. That if every officer is looking behind to see what's coming and he's distrusting everything else which is happening, and people who are around him also distrust what he's doing, how do you proceed? I think if you want to develop differently in this country, you have to change some of these things.
My final question, I'm going to ask Mr. Bhargav what is his most favorite Maruti car model. But before we do that, how many here can raise their hands who are currently using any Maruti car? Okay. I don't know if that's a market share analysis for you, Mr. Bhargav. but your own, and maybe more than one, your favorite Maruti product?
I think the product I remember Maruti most was the first Maruti car I had. It was a small Maruti 800, yellow-colored Maruti 800. That's what it started from.
I'll wish you many, many more such successful products in the journey of building India. As always, many thanks, sir, and a round of applause for our business icon, Mr. Bhargav. Thank you very much, sir.
Thank you, Mr. Bhargav, and it really is very special to see all of you here together at Business Today MindRush, all our business icons and our esteemed awardees who we'll of course be felicitating very soon. But before we do that, I'd also like to announce that the Minister is now with us. Shri Piyush Goyal, Honourable Minister of Commerce and Industry, Consumer Affairs, Food and Public Distribution and Textiles, will be joining us in just a moment for his keynote address. And to introduce him, I'd like to invite on stage Rahul Kamal, who, as you know, is the News Director at India Today and Executive Director at Business Today. They'll just be joining us in a moment. Thank you so much for your patience. He is in the hotel premises and will just be with us in a moment. Thank you for your patience, gentlemen. Ladies and gentlemen, the Honourable Minister, Shri Piyush Goyal. Rahul, could I have you on stage to invite the Minister, please?
Hello everyone, it is my absolute pleasure to welcome to the Business Today MindRush Best CEO Awards one of the brightest stars of the Narendra Modi government, Minister Piyush Goyal. Can we have a warm round of applause to welcome him, please? Minister Goyal has just come back after arguing India's case at two high-profile international events, the World Trade Organization Ministerial Meet in Geneva, and right before that, the World Economic Forum meeting in Davos. And hopefully, he'll give us a sense of what the world is thinking of the India story at this moment. Piyush ji has come to the MindRush Awards straight from the nomination of the NDA candidate for the next President, Draupadi Murmu. In fact, everybody else was still there, but because he'd committed, so he's come, and we are delighted to have him as the chief guest to give away the Best CEOs Awards. This is the 10th time that Business Today is organizing the Best CEO Awards. The idea really is not just to assemble people, but to get them to reflect, learn, as the credo of Business Today goes, rebrain or rot, upskilling, learning new things, which is why we have in our midst world-renowned management gurus, like Ram Charan ji, like the HPS professor who will be here in the evening, like Narayan Murthy ji, and all the fantastic speakers we've assembled who will give us a sense of how they see emerging technologies shape the world. I want to thank all the award winners who've come in from different parts of the world. We're so thankful that the pandemic is almost behind us, and you could join us from different parts, from the UK, the US, different parts of India, even Africa, making the effort of coming here. We deeply appreciate that. Before we begin the award ceremony, can I get Minister Piyush Goyal to give us his keynote address on how India can come out on top in this VUCA world? So much volatility, so much uncertainty. How can India ride this VUCA wave and come out on top? Can we have a round of applause for Minister Piyush Goyal, please?
Thank you very much, Rahul. Thank you very much, Arunji, Raj, all the friends from the India Today group for giving me this opportunity to engage with such an illustrious group of friends, if I may say so. And thank you very much to all the business leaders for all that you have done for this country. Because truly when we are out there talking about India, we are both encouraged and we get a lot of energy from the wonderful work that all of you are doing. And it's truly amazing to see the resilience of the Indian business community, the business world. It's truly very, very heartening to see our MSME sector, different infrastructure sectors, all coming up to speed in the most difficult of times, the VUCA times, as Rahul just rightly pointed out. And therefore, it's truly a delight to be a part of today's event, honoring the best CEOs in the country. I'm very happy that Business Today also completes about 30 years now. Milestone event for the organization. 10 years of MindRush, I'm given to understand. And 10 years of recognizing the very best that we have seen in the country. My heartiest congratulations to all the CEOs who have been recognized today for their contribution to the Indian economy, for their contribution to growth, for their contribution to job creation, for helping build the India story, both in India and across the world. Of course, while we are recognizing many of the top CEOs today, over the years, we've seen the India Today group on different occasions at different platforms, truly encouraging the business community and in some sense also becoming the voice of India across the world. And I'm sure that this very healthy partnership between the media, between government, between industry, that's what really defines and differentiates India from many other parts of the world. At both the occasions that Rahul just mentioned, whether it was at Davos or it was at the World Trade Organization Ministerial, I think we saw a huge blend of collective thinking coming to the fore. We saw India at its very best. Everybody put their business or political, in fact, media rivalries also to rest. Everybody spoke in one voice. Everybody spoke the India story. Everybody articulated the huge achievements that all of you collectively have demonstrated over the years. And I think that is really the factor which helped us be very successful, both at Davos, where you were yourself present, and also at the WTO MC12 meetings just concluded last week. So a big thank you to our friends from the media, from the India Today group. Big thank you to all friends from industry. And of course, I think it's also a moment to celebrate the fact that the leadership that India today has and demonstrates across the world is getting recognized as a leadership that is not only very, very sensitive, but a leadership that reflects the voice of large sections of the poor, the vulnerable, the less developed countries, the developing nations. And I think we can all be collectively proud that Prime Minister Narendra Modi has changed the image of India. As many people who meet me in different occasions tell me that our passport today is getting recognized and respect across the world. And I think that's something which truly calls for a celebration for all Indians, that finally India's voice is becoming a powerful voice in the world, and India's passport, India's citizenship, the fact that we are all collectively working for a better tomorrow for 135 crore Indians is being seen, is being heard, and is being valued throughout the world. In fact, through the COVID pandemic and now in very turbulent times that the geopolitical situation has thrown up, our Indian business has met all international commitments and brought honor to the country. I remember at the G20 summit in Rome towards the end, in November 2021, the Honorable Prime Minister spoke about the fact that we quickly rejigged all our business processes, particularly in the services sector, and we made sure that not a single commitment that we had made to any other part of the world, to any corporate, to any country, was ever let down. Our service sector, for example, many of them running back offices, many of them running outsourced operations in India, worked round the clock. They moved quickly to their homes. Fortunately, in 2015, we had started the Digital India campaign, due to which across the country, wherever people may have been, in the mountains of Uttarakhand or maybe at Alibag, because I know a lot of Indian business persons worked out of Alibag during those days, everybody had good digital connectivity. In fact, broadband connectivity was provided in mission mode to all those who needed it. And not for a second did Indian business fall in any commitment that was made internationally. And that truly earned us the credit as a trusted partner of the world. And that credit will be something that will hold us in good stead as the world moves to look for newer and newer destinations. There are many countries which are currently out of favor, and many companies which are looking to move to newer destinations for more resilient supply chains, for more easier ways of doing business, more transparent economies. And I think we are absolutely perfectly poised to be that alternate destination. The answer to VUCA, if I may, Rahul, would probably be Yuva, our Yuva Shakti. The fact that we today represent a young population, the fact that today, wherever we go and wherever we talk, they are really amazed at some of the work that our young boys and girls are doing. Every engagement at Davos with any top corporate, one of my questions used to be, what is it that attracts you to India? Is it our competitive costing, pricing? Is it the large market alone? But invariably, every one of them spoke about massive expansion plans in India, particularly expansion in areas related to technology. And each one of them marveled at the unique skills, at the fantastic skill sets that our young boys and girls bring to the table. Almost all of them were more interested in our young science graduates, our maths graduates, our people engaged in the electronics and electrical industry. It was more the fact that you are producing amongst the highest number of STEM graduates anywhere in the world. And that's what we are really looking to come to India to engage with, to benefit from. And I do believe that that is something that all of us in this room recognize, all of us in this room see the opportunity amidst a lot of global turbulence, where India can move up the value chain, India can go beyond just an affordable supplier to a quality supplier, to a supplier of high quality, high-tech products, high-tech services. And the fact that we have an open, very, very forward-looking, more predictable and stable regulatory policies coming in, transparent economy. Everything we do is what we say. And everything we say, we do. There's no double thinking in any part of the country today. And at Davos, we saw all the parties of different political hues from different states talking in one language, talking about India first. And that, I think, was a very big differentiator of this summer World Economic Forum meeting compared to any time in the past. The business community spoke in one voice, the political community spoke in one voice, and the media actually promoted the India story. They promoted the fact that we've had the highest ever exports, both in goods and services, in the COVID period. About 675 billion plus of exports of goods and services. That's nearly 50 lakh crore rupees. It's something that was not imagined for many years. And I'm not very sure if any of you had imagined that we'll cross that cusp of 400 billion on goods and 250 billion on services, even this year. But we did not only achieve that, we topped it and went to 675. Our FDI has been on a roll for the last 7 years in a row. We've broken every record, one after the other. Our foreign exchange reserves, I was reading the RBI governor's statement only this morning, that the macroeconomic situation that India presents today is absolutely strong. We go with huge foreign exchange reserves. We are able to take effective steps to curb inflation. He's very confident that another few months and we'll see both inflation tapering down. I just had a conversation with him day before yesterday. He's very bullish on the growth story, convinced that collectively between monetary policy and fiscal policy, and both working in tandem this time around. After a long time, we are facing a situation like we are facing today. I would think it's about similar to what we first saw in 2008, 7, 8, 9, that period of the global financial crisis. India went through the triple tantrum in 2013 again, when we had a serious crisis on various fronts, our current account deficit, our foreign exchange reserves, growth slowing down. There was clearly a very serious crisis on our hands on both these occasions. Currently, after about 8 or 9 years, we've reached almost a situation where the world is facing very serious challenges. And within that, India is seen to be kind of an oasis in the entire economic landscape. I'm sure with the kind of enthusiasm I see, both in other parts of the world, we've had 2 FTAs with UAE and Australia. The Australia one came as a surprise to many because most thought India can't really engage with developed worlds. We did that literally in under 90 days. I remember though we launched in September and possibly in the same hotel. It's a little bit of a lucky place for me, when we talk about FTAs. But Narendran, please don't mind it. But truly, when we launched in September, there was that Omicron wave that came in and then Christmas, so we didn't get much traction. I remember a VC around 4th of January when the then Minister for Trade and I decided that let's give it a shot on a daily basis. And it was actually a situation where we worked round the clock. Through the day, officials would be working. I normally sleep late, so my last call before I would sleep late night would be a time when he would be up in the morning in Australia. and we would sort out anything that was not on track during the day in that midnight call or 2 o'clock, 3 o'clock in the morning in India. And we would sort out issues as they came. And on 2nd of April, we were ready to sign. We did a historic agreement after many years with a developed nation. The Prime Minister of UK is on record that he wants us to complete by Diwali the UK free trade agreement. I had a bilateral with my Canadian counterpart on the sidelines of MC12 at Geneva. And we had a full-fledged discussion on our FTA. And they are insisting that they want to do it faster than UK, which I suspect now is impossible because my teams are stressed out. The negotiating teams just don't have any more bandwidth. And within that, we've launched on Friday last week the formal negotiations with EU. Today is Friday. Yesterday, their teams have already landed. The EU teams have landed in New Delhi, and preliminary discussions are going on as we speak. Monday, formal negotiations with the EU start. On the sidelines, I had Switzerland talking to me, wanting their group of 4 countries to do an FTA. I still remember at Davos 4 years ago, when I had approached Switzerland, and they gave me a lukewarm response. This time around, we've had 2 meetings at Davos and on the sidelines of MC12, where they are persuading that India should seriously consider a FTA with that group of 4 countries. I think it's EFTA or something. We have Kazakhstan talking to me that Eurasian countries are keen to negotiate with India. For the last 4 months, I've been already under pressure from the GCC group of 6 countries, UAE plus 5 more, who want to conclude an FTA with India. You make your own guesses what that represents, what that reflects. It's your strength. They want to do business with all of you. They want to expand investments and trade with all of you. The choice is ours. Are we sitting in our comfort zone, or are we looking to grab this opportunity? An opportunity doesn't knock again and again. It's those who can dream big. It's those who can see the future. It's the visionary leaders who are going to be able to grab this opportunity. And I would urge friends both from the media and from industry, take this message of confidence, this positivity that the world is seeing in our country. Very often we miss the opportunity. We miss the positivity that we reflect to the rest of the world. I'm sure Professor must be seeing it all the time in his travels. And I think it's for all of us to collectively go for it. It's for all of us to collectively earn the trust and earn the goodwill of businesses across the world, just like we did during the COVID period. It's for us to showcase the changing thinking, the new way of working in India. And yesterday when we inaugurated the Vanijya Bhavan, I briefly alluded to that look at the way India has evolved in the last 8 years. I still remember a time when government procurement was all through Directorate General of Supplies and Disposal. Many of you, particularly the senior captains of industry, will recall Bhargavji was in government at that time. The DGSND. I don't think there would have been a bigger scam than the DGSND. I remember as a young boy when I had started my business, maybe 35, 38 years ago, I had also made an effort to try and register my products in the DGSND. I couldn't even enter the office of DGSND. I didn't know what the terms and conditions were. That building down and broke that organization down. We created GEM, the government e-marketplace, so that today nearly 45 lakh companies are registered in the government e-marketplace. They are able to, in a very, very transparent manner, bid for every government contract, goods and services. We've recently now decided to allow cooperatives also to benefit from that. The business, the whole concept Prime Minister initiated about 5 or 6 years ago. Took us some time to get the government to think in that direction. We did 9,000 crore rupees of business on that 4 or 5 years ago. We did 110,000 crores of government procurement on the GEM portal last year and are targeting 2 lakh crore in the current year. Look at the changing dimension and the way of working. Completely transparent, equal opportunity for all, small scale industry, MSMEs, women entrepreneurs, physically challenged entrepreneurs, startups, all getting an equal opportunity to participate in government procurement in a transparent manner. And what do we gain? Thousands and thousands of crores of rupees of savings, which is your hard-earned money. It's the taxes that each one of you is paying to the government, for which we are responsible to efficiently use. We are not a government. Modi ji is not a person who's going to say, मैं क्या करूं? मैं तो 100 रुपए भेजता हूं गरीबों को, 85 रुपए बीच में इधर उधर हो जाते हैं, 15 रुपए गरीब को पहुंचते हैं. This is a government which found a solution to that. We brought in JAM. We brought in, and I must acknowledge the contribution of all of you from the technology space, from the banking space, for the wonderful work you all did. The Aadhaar, Jandan accounts, and the huge mobile spread across the country, the telecom revolution, collectively has helped us disperse nearly $300 billion plus. That's over 22-23 lakh crores to the poor, to the needy, to the beneficiaries in a completely transparent, in a completely real-time manner, without any middlemen, straight to the beneficiaries. And if we were to do a math on the old way of working, acknowledged by the then Prime Minister, we would need probably what, $1.5 trillion, so that 300 billion could reach the poor. So just that is the changing way of thinking and working. We broke down all those army shacks. I don't know if any of you remember, again you would recall, because I used to go myself for often getting a checkup in the military hospital, which was run in a barrack with rain pouring in every year. And this is something that's happened for decades. Nobody ever thought that what is happening, is that good for the country? The army offices being run in barracks along that Dara Shikoh road. And all of us pass by there every day. Every prime minister, every minister, every government official would just merrily pass by. Our army men were getting trained and were getting treated over there. हमने सबने सोच लिया था हमारे भाग्य में यही लिखा है, पर प्रधानमंत्री नरेंद्र मोदी ने अलग कल्पना से देश चलाने के लिए सोचा. And today those are all gone. We have nice proper buildings which are coming up, which will help house all these facilities. Central Vista and the refurbishment, the new buildings that will come up, will reflect the new age, the new way of working. Probably the next time around I'll allow you to do this function in the new Vanijya Bhavan building we've just inaugurated yesterday. It will give you a flavor of the things to come, the way Indian government is going to work in the future. And it will give you a flavor of the thinking, where modernity with tradition, where strength of the Indian business and the confidence of the people of 135 crore Indians will all be reflected in the work of the government. And together, all of us will do what happened at Davos, will do what happened at the World Trade Organization MC12 again and again and yet again for many, many years to come. Just like at Davos, for those of you who were there, Narendran was there, you were there, India was the flavor. You saw India across the promenade. You saw states, you saw top Indian corporates, you saw the central government, everybody speaking in one language, inviting businesses from across the world, come to India, invest in India, manufacture in India, serve from India. Same spirit we saw at the MC12. I mean, it was quite an envious position to be in, frankly. It reminded me of what I had experienced being with Prime Minister Narendra Modi at the 2015 COP21 Paris meetings. And I still recall when Prime Minister Modi would walk for any of the meetings or on any of the corridors of COP21, and Prakash Javadekar, me, some of us were with him through the days that he spent there. We were actually being requested by other country leaders, representatives, can you get us a 30-second pull aside? We want to click a photograph with Prime Minister Modi, of our leader. There were meetings which were held in the lounge for 4 minutes, where world leaders wanted to engage with India to understand the India story, to understand India's position on climate. And actually, Prime Minister Modi helped stitch together the final agreement, which is today almost like the defining document of the global effort to fight against climate change. India led the entire story of the developing world, the less developed countries, became the voice and helped bring our agenda on the table, helped bring focus on climate finance, low-cost, long-tenor finance, helped talk about technology, helped bring in sustainable lifestyle into the final document, which was never before something anybody talked about food wastage. And I think a similar story was played out in the MC12. We literally had a situation where in every intervention, India became the voice of the developing world, became the voice of the poor and vulnerable countries, became the voice of sections of society which for years and decades have not been recognized, respected, or got a raw deal. We didn't allow the Uruguay round type of discussions, the price of which countries like India are paying even today, where in agriculture a standstill was sought to be institutionalized, or rather what sought to be has been institutionalized. And we are all stuck with 1986 level of agricultural subsidies, so that Europe can give $89 billion of subsidies, supporting barely 3-4% of their population, and we supporting 60% of our population are restricted with the Uruguay round commitments that were made by the then government. This time around, we fought for our fishermen, we fought for our farmers, we fought for food security, we fought for continuation of the MSP public stockholding process in India. We ensured that our farmers are not deprived of possible support that we are giving and wish to give in the future until they reach a level of prosperity and better future for their children. We ensured that India will be able to monitor our EEZ so that no other country can come and exploit the fish stock in our EEZ. We had an agreement on fisheries against illegal, unregulated and unreported fishing, something which most countries had thought was a written off ministerial, turned out to be one of the most successful WTO ministerials, which actually saved multilateralism. And believe me, the sense over there was that it was India's show. India is not the deal breaker, India is the deal maker. And literally when other countries were bickering over words, bickering over text, we would be the intermediary who would find a solution to every disagreement, which went on for almost 36 hours non-stop towards the last 2 days. So I would dedicate that to 135 crore Indians whose strength and power was being recognized by the world. And I compliment all of you who give us that strength, who give us the ability to be able to stand any pressure, but stand with the confidence that we have your blessings and your support with us. As we embark on the Amrit Kal, as we celebrate 75 years of independence, our achievements of 75 years, and get into the next 25 years, the Amrit Kal, I am confident that with your collective energy and support, India will be a $30 trillion economy. When we celebrate India at 100, we will be moving towards prosperity for every single citizen of this country, for every person who works in this country, let us all together collectively resolve for a bright future, for a great future for this country. As Prime Minister says, हम सबका प्रयास जब होगा, जब 135 करोड़ कदम आगे बढ़ेंगे, तभी ये देश आगे बढ़ सकता है. और एक बार जब ये देश आगे बढ़ना शुरू हो गया, चल गया, तो दुनिया की कोई ताकत हमको रोक नहीं सकती. बहुत बहुत धन्यवाद.
I was speaking to Minister Goyal this morning about MindRush, and he mentioned that he was up till 4 o'clock in the morning last night clearing some files, and now he's talking about teleconferences with the Australian Trade Minister at 2 a.m. So, and then yet having the energy to go through a full packed day. You mentioned Davos. In fact, if you walk down the promenade, it now feels like Janpat because you've got so many Indian emporiums of sorts over there. So it literally feels like you're walking down Janpat. But thank you, sir, for that rousing address. Few questions. You know, the theme of the Business Today MindRush event is VUCANOMICS. So volatility, uncertainty, complexity, ambiguity. Does it at some level irk you, bother you that each time it seemed like the Indian economy's jet was set for takeoff, something happens which is so beyond our control, whether it is the pandemic, Russia's invasion of Ukraine, rising inflation, interest rates, which kind of create this doubt and uncertainty, which definitely slow down the speed of India's ascent?
Well, it's that story. You remember in 2013, at the FICCI Flow event, which had become very, very popular at that time, Prime Minister Modi had spoken about the glass half full and the glass half empty. It's pretty much the same story. We can either look at this as a problem, or we can all collectively look at this as an opportunity. When the world is going through turbulent times, bear in mind, A, we have sufficient food grains, so we have reasonably good food security. B, we are pretty much well sorted in terms of addressing the challenges of the COVID pandemic. C, between the Federal Bank, the Central Bank of India, Reserve Bank of India, and the government, we've been proactive in tackling the issues as they came along, particularly related to inflation. So while inflation in Europe or America may have gone up from 1 or 2% to 8%, our inflation is still at reasonable levels relative to what's happening in other parts of the world and the growth that they've seen in inflation. India has seen double-digit inflation for years and years before 2014. Because we've had a great 8-year run, we've actually forgotten what inflation looks like. And for the first time when we see 7%, I don't think we need to be hassled about it. We need to all collectively work towards it. I'll give you a simple example. The steel industry. Now, it was superheated, which could have affected growth. The prices were so high, it could have affected our infrastructure projects and could have actually slowed down growth and become a problem for many years. So when we had a dialogue with the steel industry, particularly the main principal players, they were very forthcoming, very accommodative, very understanding that a short-term pain is better than allowing the Indian economy to slide and get down into a 4-5 year tumble. And that's the beauty and that's the spirit in which today the government and industry works as partners, understanding how we should grab every opportunity, making small sacrifices for greater returns in the long run. And I'm particularly not very, I'm concerned certainly, but I'm not somebody who is a pessimist about the future. In my humble opinion, this is the opportunity for all of us to grab. This is the time when I think each one of us may take a short-term haircut if required. But look at grabbing market share, look at greater exports where other countries are stressed. So let's say there's inflation for X product in the US. I would possibly go and capture that market. This is the time, even if I don't make too much money. So this is my personal view. I don't know what each one of the business leaders here thinks. This is the time. Please don't lose a single opportunity.
You know, you speak so passionately about the India opportunity. That opportunity has existed for a long time, but each time it was a case of missed opportunities. This time, because of the pandemic, China with their enforced lockdowns, and because globally companies are looking to make their value chains more resilient, there is another opportunity opening up. So far, we've seen Vietnam benefit from it in textiles, we've seen Bangladesh benefit from it. In all the interactions that you've had, will this talk translate into actual action and see a lot of these companies internationally actually make India the +1 in their global value chains?
Well, I just want to set the context right. Vietnam has a free trade agreement with the EU, now with the UK, and therefore they have an advantage on certain products because of which they've been able to get a strong headwinds and make some progress in certain sectors. Bangladesh, being a less developed country, continues to enjoy zero duty again on those critical products where we are in competition. So let's not get very dejected, or let's not say that, oh, we are not able to compete. Like to like, where we'll be able to compete with anybody on earth. Our industry is very gung-ho about these WTO discussions because they clearly see an opportunity. By the way, yesterday we had many EPC representatives when we inaugurated Vanijya Bhavan over tea after the program. They were so bullish about the benefits that have already started flowing in from the UAE FTA. They are talking about, the jewelry sector is talking about big gains, textile is talking about big gains, pharma is talking about big gains. So I mean, I can see the momentum that is coming up thanks to these steps. So I would think these examples may be relevant in the short term. We have our own initiatives like the production-linked incentive scheme, which has become quite a hit. Today morning, I've approved 15 more companies who are going to make LED components and I think probably television components, a couple of products. So I think the mood in the nation is extremely positive. We are now looking at other sectors where we can support specific areas where we have the competitive edge. We just need a few years of support to the industry and then it can fly on its own. Personally, I'm one of those who believes that we'll have to finally be a competitively placed economy, or we'll have to provide the comparative advantage, the old David Ricardo school of thought. We'll have to be competitive to succeed. Government clutches can never make any industry succeed. And that's the way I see our business competing with the rest of the world. But to my mind, as these FTAs come into effect, Australian Minister of the new government met me at MC12. He has reconfirmed that in July their parliament is going to assemble. They are putting up the document which we have finalized with an earlier government for approval and ratification in parliament. And he's already looking at the next round of negotiations for the comprehensive economic partnership. Why I'm sharing this with you is, obviously the agreement must have been good, that the new government post the election is wanting and equally enthusiastic, possibly wanting to go a step further, that they want to pass it quickly and talk further. The IT industry will benefit hugely because a tax, an income tax that was being charged on them for offshore services is going to be removed as a part of the agreement. So huge benefit, they'll have a huge opportunity going forward. For years they've been trying to get that sorted out. Similarly, as the UK, EU, Canada, other engagements come on track, my sense is we'll beat any other country. Personally, my viewpoint for all of you to mull over is that India should aim for $1 trillion of merchandise exports and $1 trillion of services exports. $2 trillion by 2030, if not earlier. This is my preliminary target. I still to engage more with all of you. I would love to see that happen by 2028. But right now, literally 2030, I assure you, and I assure the nation through you, that India can look for $1 trillion of merchandise and $1 trillion of services exports by 2030. If you exude a little bit more confidence than you usually do, Rahul, then possibly we can certainly do it by 2028.
Our job is to be very realistic. And
well, I'm also extremely realistic. I think the realism also should reflect the realism on the ground that we see. It's the ground story that shows us the realism is that we can do it faster.
I was at the Harvard Business School in summer, and one of the things I picked up there is how bullish everybody was on the India story globally. So we had this exercise in class where people had to bet on a financial security over a 30-year horizon and say if you had to pick between India and China and the returns of the security were linked to the GDP growth of that particular country, which one would you pick? And 95% of the students from a global cohort actually picked India. So there is huge amount of optimism, which is quite interesting. I was actually thinking that China may do well because they've done well traditionally, and I don't know how the rest of the cohort would see India. But in the way that the discussion evolved, they actually picked India, which is fantastic. You spoke of Yuva Shakti, Minister. One of the big challenges is to ensure that the demographic dividend doesn't turn into a demographic disaster, and ensuring that young people have gainful employment, and therefore ensuring that there are adequate jobs. We saw, for example, what happened with the Agniveer protests. And how are you in government looking at this sense that whenever there are jobs that are put out, for example, railway jobs in Bihar, we see a lot of people clamoring to try and get in and very uncertain about their prospects. We've seen a lot of members of India Inc. say they will look at hiring some of these Jawans, but as somebody who's really at the apex of thinking about policy making, how are you looking at job opportunities being created?
Well, I think very clearly, all those who apply, and I, as Railway Minister, I can tell you that we would also have a lot of applications. All those who are applying for a government job are not necessarily all unemployed. What you may like to articulate as people who are just without any work. There is a mindset in the country, albeit fast changing, where traditionally it was that if you get a government job, you are sorted for life. You have your safe job, you can't be kicked out. You'll get your pension till, and now with the long lifespan for years and years, and then your family and other dependents. And that comfort zone of a government job is actually a legacy we are trying to break. It's a legacy of the past, of the way the Indian economy worked between the post-independence period until a few years ago, until at least certainly until 1990, where we made our people only focus on government job and the safety and security of a government job. We actually landed up killing the entrepreneurial spirit which India was traditionally always known for. We've actually created a situation where instead of a young, forward-looking government machinery, armed forces, we are encouraging going down a path where we will not see growth as much as we'll see just people clamoring for getting into a safe zone. I think that has to change, that will change, that's fast changing. The kind of enthusiasm in our startups, through the COVID period, we actually came up with a unicorn a week. Over 110 odd unicorns right now. And fast growing, the third largest startup ecosystem in the world, will be first largest in the next 7-8 years. 100%. And the world has confidence in our people's abilities. I know of cases in the past where a person would leave a high-paying job if he got a low-paying government job just because of the safety of it. And there was a time when people would say, "Shadi bya achhi ho jayegi, sarkari naukri hogi." That is changing now. I meet youngsters. I met my security person, who's my PSO, maybe around here probably. His daughter got married. And I met his son-in-law and daughter, both. They'd come home for a cup of tea. Both are in one of the IT companies or something in Gurgaon. One is in an IT company, probably one is in an e-commerce or a startup company. I tell you, it was delightful. It was delightful to chat with them. They had a personality which was unbelievably smart. Both were looking towards their career with a lot of confidence. I asked them, your father is in the police service, Delhi police. None of you thought of, both parents by the way, both their parents were in the police. Said, weren't you thinking of getting into the police? Did you not try to sit for an exam or get recruited? Or try and approach me and see if you could get help, which is impossible in the Modi government. They said, no, we are not at all interested in going to the police forces. We are enjoying our work and we want to build a career. At some stage, we'll start something of our own. It's so much confidence that our youngsters today have. In terms of demographic dividend, I assure you, the youngsters in India are all set to give that dividend. It's for all of us to help them, encourage them, motivate them. Well, the Agnivir story which you are putting out, it's all got exposed now. There are few coaching classes behind it, a few political parties who are responsible for this problem in the first place, for the lousy economic policies they brought before this country for years and years. And I think that mindset is changing in India today. We are trying to change that mindset. And I assure you, the nation stands behind Mr. Modi when he's trying to bring this change. Change is always difficult. I mean, all of us know we've all gone through change. All of you have seen how difficult it is to change the way the mind works, the way country works. We've seen social reform to be such a big change. Here we are talking of economic reform and social reform. So socio-economic reform is happening, will continue to happen. I have the confidence. It's for all of you to reflect whether you have the confidence that this change will happen in this country.
I don't want to hold anyone back from the award ceremony, which is what a lot of people have traveled for. But I have this one question which a lot of the award-winning CEOs asked as they were coming in. You're a Bombay boy. ये महाराष्ट्र में क्या हो रहा है? You're a Mumbai boy. ये
वो उन्हीं के जो गठबंधन था, वो जो जरा भी नैतिक गठबंधन नहीं था. A totally unethical alliance. I mean, imagine, just now, by the way, in the car driving to your venue, a senior journalist from your channel was sharing a video which is doing the rounds, I think, on various social media about an interview which Mr. Bal Thackeray gave many, many years ago, in which he was asked the question, would you be willing to go with the Congress to form a government? And he said, I'd rather dissolve my party than do an agreement and do a government with the Congress. I mean, I've never seen such bankruptcy of ideology as we saw in Maharashtra amongst all the partners. All the three partners who hated each other all their life are suddenly seeing virtue in each other, and you see an absolutely unethical government for the last 2.5 years, an absolutely corrupt government. For those who come from Maharashtra or Mumbai have experienced it. And when I was re-elected to the Rajya Sabha only a few days ago, when I was asked my comments, I had actually said that the fact that 3 MPs of the BJP have got elected in Rajya Sabha against a possible 2 that we really had the votes for is reflective of the public anger and the seething discontent that was visible in Maharashtra for many months. It's just come out to the fore. It's an internal matter of that party. But you can clearly see the way things are going, that the majority of that party continues to believe in the ideology or the principles that were once upon a time their core philosophy. And the people who compromise are now being relegated to the background or will probably remain as a fringe element.
You know the Thackeray family very well personally, and now this is very embarrassing for Uddhav Thackeray ji to have his MLAs walk out in a manner where there is now more people with the Shinde Sena than they are with the Thackeray Sena. And what a fall from grace this is for the son of Bala Sahib Thackeray. Why do you think it went wrong, and how much of this is BJP lagawing chabi from the back?
Well, very often when there's an earthquake, I think the earthquake was bound to happen. It's probably divine that something which is beyond any of our control what is happening. And earthquakes will happen, will come and go. Nobody needs to actually do anything to make that earthquake happen. And what we are seeing there is just something which was expected to happen. Frankly, the fact that they ran for 2.5 months itself is, it reflects the ability of power to be a glue and keep them together for 2.5 years. It was an unholy alliance, and I think they're just seeing the result of the public sentiment. In fact, many MPs, in Parliament would come to us from that party and say, literally bang their head and say, we don't know how we'll ever get re-elected in 2024 because we won the last election keeping Mr. Modi's photo in our every poster. Rahul, by the way, I was summoned, requested, pleaded by a candidate of that party in South Mumbai to rush to Mumbai to salvage his election, which was otherwise going down the tube, because South Mumbai clearly looked like being angry that we did not have a BJP candidate and we had a candidate from that party. I literally spent 3-4 days assuaging people all over my area that no, a vote given to this candidate is a vote to Prime Minister Modi for his re-election. आप बस मोदी जी का चित्र रख के वोट डालो वहाँ पे, चाहे धनुष बाण हो, चाहे कमल हो, मोदी जी को वोट जाएगा. वो सोच के वोट डालो. And of course we won that seat with a healthy margin. But for them to win that seat next time, if they didn't have Mr. Modi's photo, would have been a near impossibility. And I think most MPs, MLAs there understood, realized that you have come to Maharashtra during the last elections. You saw the huge upswing of public support and love and affection for Mr. Modi. We could have fought that last election on our own and actually won it also. But we believe in friendships. We believe in respecting friendships, ideological friends, friendships of 30 odd years. This alliance originally, very, very originally, started in my own home in 1984. So we are now, 38 years gone by. And Mr. Vajpayee was there. Mr. Bal Thackeray had come to my home. They both met, discussed. Then they went and addressed a rally at Shivaji Park. And by the way, they didn't even have a recognized symbol. So the then candidate fought on the Kamal symbol, our lotus symbol, in the 84 election. So that was they had only 2 candidates in Maharashtra for the Lok Sabha in 84. But it's unfortunate that they chose not to stick along with the BJP. And let's see how things pan out now. I am not privy to what's happening because I am neither in Guwahati nor I was in Mumbai when all of this happened. I was in Geneva. So certainly I can assure you that none of us has any role in what's happening.
Okay. I want to thank Minister Piyush Goyal for joining us at the Business Today MindRush. And now it's time for the big award ceremony. Can I request my colleague Abha Bakaya to come and do the honors, please? Abha. Please, thank you.
Thank you so much, Rahul, and thank you so much, Honorable Minister. If I could actually request you to stay on stage to give away the awards, and I would also like to invite on stage Mr. Puri to also join us with the Honorable Minister here, as well as Dr. Ram Charan. All right. We actually begin today with our Business Icon Awards. And these awards are particularly special. They've been put together by the Business Today editorial board, comprising its top editors. The awards are a recognition and felicitation of really the legends of India, Inc. Doyens of our industry who've commanded and played a pivotal role in India's economic progress. I'd like to begin by talking about Mr. N.R. Narayana Murthy, co-founder, Infosys, chairman, Catamaran. He is the legendary co-founder of the global IT giant Infosys and has been the chairman, chief executive and president, as well as chief mentor of the company before retiring and taking the title chairman emeritus. Mr. Murthy has been honored with the Padma Vibhushan and Padma Shri awards. We'd like to play a brief AV.
N.R. Narayan Murthy's name is synonymous with India's IT revolution. Co-founder of Infosys, he pioneered India's tryst with information technology. The global delivery model, the backbone of India's IT prowess, is his brainchild. Murthy is also credited with the concept of a 24-hour workday and has been at the forefront of India's startup and unicorn movement. He is, by all reckoning, one of India's greatest entrepreneurs of today.
Mr. Murthy, please do come up on stage.
It's a big honor to be presented this award by Business Today, to be chosen for this award by Business Today, and to have received this from Shri Goyal, in the presence, of course, Shri Charan. All that I can say is I will soon be completing my 76th year, and I will start my 77th year. So in the time that remains in my life, I will definitely work hard and hopefully smart to live up to the generosity, affection, and kindness of Business Today and every one of you. Thank you.
Thank you. Thank you for coming.
Thank you so much, Mr. Murthy. Yes, come. Right. I'd now like to felicitate R.C. Bhargava, Chairman, Maruti Suzuki India, the former CEO, current Chairman of the largest automobile manufacturer in India. He is renowned in industry circles, a veteran in the field, has also been awarded the Padma Bhushan. As he comes up on stage, could we also play the AV?
R.C. Bhargava, an IAS officer of the 1956 batch, a name synonymous with India's auto manufacturing prowess, Managing Director of India's largest car maker for 12 years, a management guru who was awarded the Padma Bhushan. He is the force behind putting India on wheels.
I really don't know how to respond to this honor which has been given. First, Business Today for selecting me, then to get this award from one of the most dynamic ministers that over the last 60 years I've ever seen in the government of India. As Mr. Narayan said, I don't know how much more time one has, because I'm now nearing 88. Wow. But all I can say is I'll still do my best for whatever I can to live up to what I think Arun, Business Today, and you expect of me. Thank you very much.
Thank you so much.
Thank you, sir.
Could I request the Honourable Minister, Arun Puri, Chairman, Editor-in-Chief, India Today, and Dr. Ram Charan to stay on with us as I announce the Business Today Best CEO Awards. India Inc.'s brightest stars together in this room. This is a ranking that it's now in its 10th year with PwC as a knowledge support partner. The methodology takes into account both quantitative and qualitative performances and aspects, and recognizes those who are at the top of their game, with a high-profile jury picking the winners. Data for the entire exercise was sourced from corporate database Ace Equity. Without further ado, our first award this afternoon, India's Best CEO, Metals and Mining, TV Narendran, CEO and Managing Director, Tata Steel. Mr. Narendran has been at the helm for over 7 years, quadrupling the production at Tata Steel, which is valued at nearly 1.5 lakh crore rupees today. The stock has gained 67% in the last 1 year, ending end of February this year.
I'll hold this also. I'll hold it. Don't worry.
Thank you. A great honor and privilege. Thank you so much for selecting me. Dedicated to all my passionate colleagues in Tata Steel, past and present, and to my family who sacrifice the most. Thank you.
Thank you, Mr. Narendran. India's best CEO, Infrastructure and Engineering, S.N. Subramaniam, CEO and Managing Director, Larsen & Toubro. The past couple of years, L&T has seen significant deals, from a $1 billion contract from Saudi Aramco to the upcoming Central Secretariat in Delhi, several metro orders, 2 large solar power orders, and lots more. The backlog of orders is now at 3.5 lakh crore rupees. That's the highest in the company's history.
Yeah, thank you, BT. Thank you, India Today. And when Rahul contacted me, I wanted to ring up Dr. Arun Puri and ask him whether he did the right thing, because nowadays awards are only meant for IT companies, startups, and the commodity companies. I don't know where we figured in. But anyway, having said that, thank you very much, sir. This sort of recognizes the 65,000 staff and more than 1 million workers who go through roles every year. Full credit to them. And of course, my wife and family who bear with all my travels and running around. Thank you very, very much. Really appreciate it. And also really thank Mr. Piyush Goyal for having come out today. A very busy day for him. And to be present here to give this award. Thank you very, very much, sir. Really appreciate it.
Congratulations. You take it.
All right. India's best CEO, real estate, Irfan Razak, Chairman and Managing Director, Prestige Estate Projects. A big round of applause, please. The Bengaluru-based real estate major turned the pandemic into an opportunity with its deal with Blackstone, reducing the firm's debt by 90%. Since then, Prestige has launched some of its largest projects, aggressively charting new territories in Mumbai and NCR.
Thank you so much. Thank you, India Today. Thank you, BT, for this honor. In fact, this is the second time you've given me this. And I always believe a leader is someone who's as good as his team below him. And I've got a great team. And this is for the team, it's for the people who work with us and who have produced and made me stand here, because it's their hard work. I also believe a leader should take responsibility and take ownership in crisis and give credit when everything is good. So this is what Piyush said. He's given credit to us and at the good times, and of course he's taken responsibility when things have gone wrong. And I really, really appreciate being with us and appreciate Business Today for this. Thank you so much. Thank you.
India's best CEO, Agriculture and Allied, Mayank Singhal, Vice Chairman and Managing Director, PI Industries. A big round of applause, everybody. A major player in agrochemicals, PI has grown its revenue and profits every year since 2018. In the first 9 months of FY22 as well, revenue and PAT up by 16% and 14%. The company boasts higher than industry average margins and is now planning its next phase of growth. Congratulations, Mayank.
So thank you, and very humbled and honored to be here. I must thank people, as I say, all stakeholders who's made it possible for us to be at this position as an organization. and to each and every employee who supported me over this journey of the company. We are now 75 years in an organization, constantly evolving and changing, and I can make you sure, Mr. Goyal and the country, that PI will make the nation proud for what we do to put it at the forefront of your dreams. Thank you.
India's best CEO, Industrials, M.V. Gautama, then Chairman and Managing Director, Bharat Electronics. He retired in June 21. When at the helm of BEL, Mr. Gautama took a round of applause, please. The record turnover that we've seen at BEL in FY21, 13,800 crores plus, market share of 55%, a testament to his zeal. He also supplied 30,000 ventilators through BEL in record time during the pandemic, playing an important role as well in safeguarding India's borders. BEL has many feathers in its cap. Congratulations, sir.
Thank you. I thank India Today and BT for recognizing our effort. This award goes to all the COVID warriors. This includes Honorable Minister Mr. Piyush Goyal also. I remember the days when every evening he reviewed the status of medical equipment during the COVID, including supply of oxygen. And this is a country, sir, we need to guard ourselves. When there is no scarcity, still people can make scarcity out of it. So that's the thing. And from Bharat Electronics side, we never made any medical equipment. We were only making few components. But we had the confidence that we can do it. And we have proven to the world that we did the best ventilator. Thank you all.
Thank you, sir. Could I also have Mr. Anil Kumar Jain, CEO at NIXI, the National Internet Exchange of India, to also join us on stage to give away the next set of awards. India's best CEO, BFSI, Padmaja Chunduru, then Managing Director and CEO, Indian Bank. She is now MD and CEO of NSDL. Padmaja was at the helm of Indian Bank between September 18 and August 21. In a 3-year period, the bank's total income increased 32% to over 45,000 crores. She also saw the successful merger of the bank with Allahabad Bank, with Indian Bank as the anchor bank. A huge victory for her. Congratulations, Padmaja.
Thank you very much. This is a great honor and pleasure. I think I would dedicate this to the more than 40,000 colleagues we have at Indian Bank, who during the VUCA world, every word of the VUCA was very applicable because we did the merger during the COVID situation. And it went off very successfully. And even today, the bank is doing very well. So thanks to them, thanks to the present team at NSDL, thanks to BT, India Today, the minister, everyone here, thank you very much.
India's best CEO, Pharma and Healthcare, Satyanarayana Chava, founder and CEO, Laurus Labs. In March 2020, the company received the US FDA approval to market hydrochloroquine tablets. Heavy demand, of course, for them during the pandemic. Consolidated revenue for FY21 increased 70%. The company has sustained both EBITDA margins, profitability, and the API division saw growth of over 100% in October to December. Congratulations, sir.
Thank you, India Today and BT, for recognizing our contribution to the pharmaceutical industry in India and also the world. These awards put more commitment on us to deliver one quality across all regions. As a company, the DNA is to produce one quality standard for all markets. What we produce and sell in India, US, Europe and Japan, same quality. We differentiate regions by price, not by quality. That is our commitment to the country. Thank you.
India's best CEO, Power, K. Srikant, Chairman and Managing Director, Power Grid Corporation of India. India's largest power transmission firm. Everybody, a huge round of applause, please. revenues of close to 10,500 crores in Q3 FY22. The PSU's consolidated net profit stood at over 3,000 crores. It's now looking at consultancy and telecom businesses to really drive the way forward. Congratulations.
Thank you. I thank BT and for this award, which I accept on behalf of all the Power Gridians. Power Grid has been responsible for building the one nation, one grid, one frequency in the country. And we will be supporting the country as it goes towards the sustainability, towards the targets of 2030 for 500 gigawatts of non-fossil energy capacity. I thank our Minister, Mr. Goyal, who was associated with the ministry. It's a pleasure, sir. Thank you.
Thank you. Thank you, Mr. Jain, for joining us as well. Thank you. Could I also welcome Mr. Ajay Singh, Darwin, Chairman and Managing Director at Darwin Platform Group, to join us for the next few awards. India's best CEO, chemicals. And in fact, I'd like to announce the award for Mr. Yogesh Kothari. Mr. Kirat Patel is going to be collecting the award, Executive Director, on behalf of Yogesh Kothari, the Chairman and Managing Director at Alkyl Amines Chemicals Limited. Thank you so much for joining us here. Huge round of applause. Yogesh Kothari has achieved consistent growth for Alkyl Amines over the past 10 years, continuous capex, a better product mix, improving yield and profitability. Net profit has grown at a CAGR of nearly 40%. A huge round of applause once again. Thank you.
Thank you, the Business Today, for this honor, and Minister Goyal for giving us this prize. As Mr. Kothari would have said, when I asked him that, why should I go to collect the ornament for you? He said that CEO is as good as his team, and you take one for the team. Thank you.
India's best CEO, Cement, Mr. Bangur, Managing Director, Shree Cement. One of the largest players in the sector, and very few can manage the cost structure he's put in place. Shree Cement has an installed capacity of 46.4 million tons, capex outlay of 4,500 crores over 2 years, and with surplus liquidity of over 8,000 crores, he is well placed to fund that expansion. Congratulations, Mr. Bangur.
Thank you to BT for honoring me with this award. I want to say that we can perform as well as the platform is. Presently, Indian government is providing us a beautiful runway to fly our industries. With this, cement industry in India, and particularly Shree Cement, is the lowest energy consumption company in the world. We are assuming lowest energy. Thank you.
Thank you. Thank you, Mr. Dhawan. All right. Could I also have Mr. Sanjeev Krishan, Chairman PwC in India, to announce the next set of awards with us? India's best CEO, emerging company, Sanjeev Kumar, Managing Director, Gujarat Gas. Under his leadership, the 10,000 crore revenue company has been reporting a CAGR of 63%. The 3-year CAGR is at 63%. GGL was also able to unveil a record 150 CNG stations in the last fiscal, the highest by any CGD entity in India, and also fast-tracked the laying of more than 3,000 kilometers of pipelines.
Thank you, Business Today. I am deeply honored and humbled to receive this award on behalf of team of Gujarat Gas. I would like to thank Honorable Minister, sir, the Business Today team for selecting Gujarat Gas for this award. I would also like to take this opportunity to thank our Honorable Chief Minister, our Honorable Minister of Energy and Petrochemicals, Government of Gujarat and the Board of Directors of Gujarat Gas for their constant support and guidance, and also of the team of Gujarat Gas for their hard work, which has made this possible. Once again, thank you very much.
Thank you. India's best CEO, large companies, Salil Parekh, CEO and Managing Director, Infosys. Under his tenure, growth rates have quadrupled, and he has, of course, seen revenues and profits burgeoning, big deals, big clients, climbing at a fast clip. Congratulations, Mr. Parekh.
Thank you, everyone. Infosys was built on a dream, and it's been a real honor to be part of that rekindling that we've seen over the last few years. Thank you to the Business Today group for looking at Infosys and looking at us in this light. Thank you to you, Piyush ji. You're truly an inspiration with the energy that you have and the way you galvanized us earlier today, the facts that you have at your command. And in reality, the work that gets done, I've had the privilege to be on a few Zoom calls with Piyush ji, and there's always a lot of action that comes after that. Thank you everyone for being here.
I'd just like to add that since 2018, when he took over, the market cap has climbed 200%, and Infosys is retaining its position as a stock market darling. So, India's best CEO, champion of champions, Rajiv Jain, Managing Director, Bajaj Finance. The consumer finance company has created a record of sorts by raising capital of $1.2 billion to fuel its massive growth opportunity. It's been growing at a staggering CAGR of 30% plus. I'm going to hand over the mic to Mr. Jain.
Thank you so much. Thank you, BT. It was inspiring to hear you, Minister. I would just say we're just starting. Thank you. Thank you so much.
Please stay with us. Stay with us on stage, Mr. Jain. I'd in fact like to invite all the awardees on stage for a group photo. Could I have everyone on stage, please? And with that, we break for lunch. We hope you'll all join us. Look forward to interacting with you over lunch.
How is India Inc. navigating the challenges of a VUCA world? What are the winning traits to lead businesses in a VUCA world? How to create resilient business strategies in a VUCA world? What is the future of tech and business in a VUCA world? How will economic policies evolve in the VUCA world? Get insights into a VUCA world at the Business Today MindRush.
Darwin Platform Group of Companies, established in 1996 by young and innovative entrepreneur Ajay Harinath Singh, has emerged as one of the fastest growing Indian global business conglomerates. The group has made rapid progress in several high growth sectors such as finance, banking, healthcare and pharma, avionics, reality, energy and refineries, mass media, IT, infrastructure, logistics, automotive, and recently forayed into retail and defense sectors. A debt-free Darwin Platform Group has a worth of USD 6.4 billion and it has 25 associate companies. Driven by its core value, nation building through wealth creation, Darwin Platform Group's initiatives in India aim at boosting the economy. And to achieve this, all new initiatives of the group are aligned with Atmanirbhar Bharat and Vocal for Local campaigns. Darwin Platform Group also aims to expand its reach in the logistics sector. And to achieve this goal, Darwin Platform Logistics Limited and Darwin Platform Shipping Limited have jointly acquired land at Jawaharlal Nehru Port Trust, JNPT, Special Economic Zone, SEZ. In July 2021, the Darwin Platform Group formally entered into the high-growth retail sector and opened 2 mega stores in Mumbai. Darwin Platform Retail, DP Retail, now plans to open 200 self-owned mega stores across the country in the next 6 months. The group has ambitious plans for the defense sector and it has been developing the prototypes of indigenously designed and developed military equipment based on molecular nanotechnology, MNT. Darwin Platform Group has partnered with the robotics lab at Watson University, Hyderabad for designing and developing these prototypes. From the Uttar Pradesh Defence Corridor, the DPGC plans to take its MNT and other defence production to the next level. The group now embarks on a new journey by entering into the next generation battery-powered two-wheelers electric vehicles (EVs) sector. Darwin EVAT, a green venture of Darwin Platform Group of Companies, today announced the launch of 3 exquisite models of electric two-wheelers: Darwin D5, D7 and D40. Apart from low running cost, Darwin EVs offer the benefit of low maintenance, zero emissions and tax benefits too. Darwin electric vehicles come with Japanese tech standards and have the highest mileage efficiency at an affordable price. With the Charge and Go Maxim, these two-wheeler EVs Darwin D5, D7 and D14 provide give the young generation a new experience with several exciting features including muscular design, mileage efficiency, keyless entry, regenerative braking, speed control gear, battery swapping, large LED display, high quality suspension, USB mobile charger port, hazard switch among others.
How is India Inc. navigating the challenges of a VUCA world? What are the winning traits to lead businesses in a VUCA world? How to create resilient business strategies in a VUCA world? What is the future of tech and business in a VUCA world? How will economic policies evolve in the VUCA world? Get insights into a VUCA world at the Business Today MindRush.
Darwin Platform Group of Companies, established in 1996 by young and innovative entrepreneur Ajay Harinath Singh, has emerged as one of the fastest growing Indian global business conglomerates. The group has made rapid progress in several high growth sectors such as finance, banking, healthcare and pharma, avionics, reality, energy and refineries, mass media, IT, infrastructure, logistics, automotive, and recently forayed into retail and defense sectors. A debt-free Darwin Platform Group has a worth of USD 6.4 billion and it has 25 associate companies. Driven by its core value, nation building through wealth creation, Darwin Platform Group's initiatives in India aim at boosting the economy. And to achieve this, all new initiatives of the group are aligned with Atmanirbhar Bharat and Vocal for Local campaigns. Darwin Platform Group also aims to expand its reach in the logistics sector. And to achieve this goal, Darwin Platform Logistics Limited and Darwin Platform Shipping Limited have jointly acquired land at Jawaharlal Nehru Port Trust, JNPT, Special Economic Zone, SEZ. In July 2021, the Darwin Platform Group formally entered into the high-growth retail sector and opened 2 mega stores in Mumbai. Darwin Platform Retail, DP Retail, now plans to open 200 self-owned mega stores across the country in the next 6 months. The group has ambitious plans for the defense sector, and it has been developing the prototypes of indigenously designed and developed military equipment based on molecular nanotechnology, MNT. Darwin Platform Group has partnered with the robotics lab at Watson University, Hyderabad for designing and developing these prototypes. From the Uttar Pradesh Defence Corridor, the DPGC plans to take its MNT and other defence production to the next level. The group now embarks on a new journey by entering into the next generation battery-powered two-wheelers electric vehicles (EV) sector. Darwin EVAT, a green venture of Darwin Platform Group of Companies, today announced the launch of 3 exquisite models of electric two-wheelers: Darwin D5, D7 and D40. Apart from low running cost, Darwin EVs offer the benefit of low maintenance, zero emissions and tax benefits too. Darwin electric vehicles come with Japanese tech standards and have the highest mileage efficiency at an affordable price. With the Charge and Go Maxim, these two-wheeler EVs Darwin D5, D7 and D14 provide give the young generation a new experience with several exciting features including muscular design, mileage efficiency, keyless entry, regenerative braking, speed control gear, battery swapping, large LED display, high quality suspension, USB mobile charger port, hazard switch among others.
How is India Inc. navigating the challenges of a VUCA world? What are the winning traits to lead businesses in a VUCA world? How to create resilient business strategies in a VUCA world? What is the future of tech and business in a VUCA world? How will economic policies evolve in the VUCA world? Get insights into a VUCA world at the Business Today MindRush.
Darwin Platform Group of Companies, established in 1996 by young and innovative entrepreneur Ajay Harinath Singh, has emerged as one of the fastest growing Indian global business conglomerates. The group has made rapid progress in several high growth sectors such as finance, banking, healthcare and pharma, avionics, reality, energy and refineries, mass media, IT, infrastructure, logistics, automotive, and recently forayed into retail and defense sectors. A debt-free Darwin Platform Group has a worth of USD 6.4 billion and it has 25 associate companies. Driven by its core value, nation building through wealth creation, Darwin Platform Group's initiatives in India aim at boosting the economy. And to achieve this, all new initiatives of the group are aligned with Atmanirbhar Bharat and Vocal for Local campaigns. Darwin Platform Group also aims to expand its reach in the logistics sector. And to achieve this goal, Darwin Platform Logistics Limited and Darwin Platform Shipping Limited have jointly acquired land at Jawaharlal Nehru Port Trust, JNPT, Special Economic Zone, SEZ. In July 2021, the Darwin Platform Group formally entered into the high-growth retail sector and opened 2 mega stores in Mumbai. Darwin Platform Retail, DP Retail, now plans to open 200 self-owned mega stores across the country in the next 6 months. The group has ambitious plans for the defense sector, and it has been developing the prototypes of indigenously designed and developed military equipment based on molecular nanotechnology, MNT. Darwin Platform Group has partnered with the robotics lab at Watson University, Hyderabad for designing and developing these prototypes. From the Uttar Pradesh Defence Corridor, the DPGC plans to take its MNT and other defence production to the next level. The group now embarks on a new journey by entering into the next generation battery-powered two-wheelers electric vehicles (EVs) sector. Darwin EVAT, a green venture of Darwin Platform Group of Companies, today announced the launch of 3 exquisite models of electric two-wheelers: Darwin D5, D7 and D40. Apart from low running cost, Darwin EVs offer the benefit of low maintenance, zero emissions and tax benefits too. Darwin electric vehicles come with Japanese tech standards and have the highest mileage efficiency at an affordable price. With the Charge and Go Maxim, these two-wheeler EVs Darwin D5, D7 and D14 provide give the young generation a new experience with several exciting features including muscular design, mileage efficiency, keyless entry, regenerative braking, speed control gear, battery swapping, large LED display, high quality suspension, USB mobile charger port, hazard switch among others.
How is India Inc. navigating the challenges of a VUCA world? What are the winning traits to lead businesses in a VUCA world? How to create resilient business strategies in a VUCA world? What is the future of tech and business in a VUCA world? How will economic policies evolve in the VUCA world? Get insights into a VUCA world at the Business Today MindRush.
Darwin Platform Group of Companies, established in 1996 by young and innovative entrepreneur Ajay Harinath Singh, has emerged as one of the fastest growing Indian global business conglomerates. The group has made rapid progress in several high growth sectors such as finance, banking, healthcare and pharma, avionics, reality, energy and refineries, mass media, IT, infrastructure, logistics, automotive, and recently forayed into retail and defense sectors. A debt-free Darwin Platform Group has a worth of USD 6.4 billion and it has 25 associate companies. Driven by its core value, nation building through wealth creation, Darwin Platform Group's initiatives in India aim at boosting the economy. And to achieve this, all new initiatives of the group are aligned with Atmanirbhar Bharat and Vocal for Local campaigns. Darwin Platform Group also aims to expand its reach in the logistics sector. And to achieve this goal, Darwin Platform Logistics Limited and Darwin Platform Shipping Limited have jointly acquired land at Jawaharlal Nehru Port Trust, JNPT, Special Economic Zone, SEZ. In July 2021, the Darwin Platform Group formally entered into the high-growth retail sector and opened 2 mega stores in Mumbai. Darwin Platform Retail, DP Retail, now plans to open 200 self-owned mega stores across the country in the next 6 months. The group has ambitious plans for the defense sector, and it has been developing the prototypes of indigenously designed and developed military equipment based on molecular nanotechnology, MNT. Darwin Platform Group has partnered with the robotics lab at Watson University, Hyderabad for designing and developing these prototypes. From the Uttar Pradesh Defence Corridor, the DPGC plans to take its MNT and other defence production to the next level. The group now embarks on a new journey by entering into the next generation battery-powered two-wheelers electric vehicles (EVs) sector. Darwin EVAT, a green venture of Darwin Platform Group of Companies, today announced the launch of 3 exquisite models of electric two-wheelers: Darwin D5, D7 and D40. Apart from low running cost, Darwin EVs offer the benefit of low maintenance, zero emissions and tax benefits too. Darwin electric vehicles come with Japanese tech standards and have the highest mileage efficiency at an affordable price. With the Charge and Go Maxim, these two-wheeler EVs Darwin D5, D7 and D14 provide give the young generation a new experience with several exciting features including muscular design, mileage efficiency, keyless entry, regenerative braking, speed control gear, battery swapping, large LED display, high quality suspension, USB mobile charger port, hazard switch among others.
How is India Inc. navigating the challenges of a VUCA world? What are the winning traits to lead businesses in a VUCA world? How to create resilient business strategies in a VUCA world? What is the future of tech and business in a VUCA world? How will economic policies evolve in the VUCA world? Get insights into a VUCA world at the Business Today MindRush.
Darwin Platform Group of Companies, established in 1996 by young and innovative entrepreneur Ajay Harinath Singh, has emerged as one of the fastest growing Indian global business conglomerates. The group has made rapid progress in several high growth sectors such as finance, banking, healthcare and pharma, avionics, reality, energy and refineries, mass media, IT, infrastructure, logistics, automotive, and recently forayed into retail and defense sectors. A debt-free Darwin Platform Group has a worth of USD 6.4 billion and it has 25 associate companies. Driven by its core value, nation building through wealth creation, Darwin Platform Group's initiatives in India aim at boosting the economy. And to achieve this, all new initiatives of the group are aligned with Atmanirbhar Bharat and Vocal for Local campaigns. Darwin Platform Group also aims to expand its reach in the logistics sector. And to achieve this goal, Darwin Platform Logistics Limited and Darwin Platform Shipping Limited have jointly acquired land at Jawaharlal Nehru Port Trust, JNPT, Special Economic Zone, SEZ. In July 2021, the Darwin Platform Group formally entered into the high-growth retail sector and opened 2 mega stores in Mumbai. Darwin Platform Retail, DP Retail, now plans to open 200 self-owned mega stores across the country in the next 6 months. The group has ambitious plans for the defense sector, and it has been developing the prototypes of indigenously designed and developed military equipment based on molecular nanotechnology, MNT. Darwin Platform Group has partnered with the robotics lab at Voxan University, Hyderabad for designing and developing these prototypes. From the Uttar Pradesh Defence Corridor, the DPGC plans to take its MNT and other defence production to the next level. The group now embarks on a new journey by entering into the next generation battery-powered two-wheelers electric vehicles (EVs) sector. Darwin EVAT, a green venture of Darwin Platform Group of Companies, today announced the launch of 3 exquisite models of electric two-wheelers: Darwin D5, D7 and D40. Apart from low running cost, Darwin EVs offer the benefit of low maintenance, zero emissions and tax benefits too. Darwin electric vehicles come with Japanese tech standards and have the highest mileage efficiency at an affordable price. With the Charge and Go Maxim, these two-wheeler EVs Darwin D5, D7 and D14 provide give the young generation a new experience with several exciting features including muscular design, mileage efficiency, keyless entry, regenerative braking, speed control gear, battery swapping, large LED display, high quality suspension, USB mobile charger port, hazard switch among others.
How is India Inc. navigating the challenges of a VUCA world? What are the winning traits to lead businesses in a VUCA world? How to create resilient business strategies in a VUCA world? What is the future of tech and business in a VUCA world? How will economic policies evolve in the VUCA world? Get insights into a VUCA world at the Business Today MindRush.
Darwin Platform Group of Companies, established in 1996 by young and innovative entrepreneur Ajay Harinath Singh, has emerged as one of the fastest growing Indian global business conglomerates. The group has made rapid progress in several high growth sectors such as finance, banking, healthcare and pharma, avionics, reality, energy and refineries, mass media, IT, infrastructure, logistics, automotive, and recently forayed into retail and defense sectors. A debt-free Darwin Platform Group has a worth of USD 6.4 billion and it has 25 associate companies. Driven by its core value, nation building through wealth creation, Darwin Platform Group's initiatives in India aim at boosting the economy. And to achieve this, all new initiatives of the group are aligned with Atmanirbhar Bharat and Vocal for Local campaigns. Darwin Platform Group also aims to expand its reach in the logistics sector. And to achieve this goal, Darwin Platform Logistics Limited and Darwin Platform Shipping Limited have jointly acquired land at Jawaharlal Nehru Port Trust, JNPT, Special Economic Zone, SEZ. In July 2021, the Darwin Platform Group formally entered into the high-growth retail sector and opened 2 mega stores in Mumbai. Darwin Platform Retail, DP Retail, now plans to open 200 self-owned mega stores across the country in the next 6 months. The group has ambitious plans for the defense sector and it has been developing the prototypes of indigenously designed and developed military equipment based on molecular nanotechnology, MNT. Darwin Platform Group has partnered with the robotics lab at Watson University, Hyderabad for designing and developing these prototypes. From the Uttar Pradesh Defence Corridor, the DPGC plans to take its MNT and other defence production to the next level. The group now embarks on a new journey by entering into the next generation battery-powered two-wheelers electric vehicles (EVs) sector. Darwin EVAT, a green venture of Darwin Platform Group of Companies, today announced the launch of 3 exquisite models of electric two-wheelers: Darwin D5, D7 and D40. Apart from low running cost, Darwin EVs offer the benefit of low maintenance, zero emissions and tax benefits too. Darwin electric vehicles come with Japanese tech standards and have the highest mileage efficiency at an affordable price. With the Charge and Go Maxim, these two-wheeler EVs Darwin D5, D7 and D14 provide give the young generation a new experience with several exciting features including muscular design, mileage efficiency, keyless entry, regenerative braking, speed control gear, battery swapping, large LED display, high quality suspension, USB mobile charger port, hazard switch among others.
How is India Inc. navigating the challenges of a VUCA world? What are the winning traits to lead businesses in a VUCA world? How to create resilient business strategies in a VUCA world? What is the future of tech and business in a VUCA world? How will economic policies evolve in the VUCA world? Get insights into a VUCA world at the Business Today MindRush.
Darwin Platform Group of Companies, established in 1996 by young and innovative entrepreneur Ajay Harinath Singh, has emerged as one of the fastest growing Indian global business conglomerates. The group has made rapid progress in several high growth sectors such as finance, banking, healthcare and pharma, avionics, reality, energy and refineries, mass media, IT, infrastructure, logistics, automotive, and recently forayed into retail and defense sectors. A debt-free Darwin Platform Group has a worth of USD 6.4 billion and it has 25 associate companies. Driven by its core value, nation building through wealth creation, Darwin Platform Group's initiatives in India aim at boosting the economy. And to achieve this, all new initiatives of the group are aligned with Atmanirbhar Bharat and Vocal for Local campaigns. Darwin Platform Group also aims to expand its reach in the logistics sector. And to achieve this goal, Darwin Platform Logistics Limited and Darwin Platform Shipping Limited have jointly acquired land at Jawaharlal Nehru Port Trust, JNPT, Special Economic Zone, SEZ. In July 2021, the Darwin Platform Group formally entered into the high-growth retail sector and opened 2 mega stores in Mumbai. Darwin Platform Retail, DP Retail, now plans to open 200 self-owned mega stores across the country in the next 6 months. The group has ambitious plans for the defense sector, and it has been developing the prototypes of indigenously designed and developed military equipment based on molecular nanotechnology, MNT. Darwin Platform Group has partnered with the robotics lab at Watson University, Hyderabad for designing and developing these prototypes. From the Uttar Pradesh Defence Corridor, the DPGC plans to take its MNT and other defence production to the next level. The group now embarks on a new journey by entering into the next generation battery-powered two-wheelers electric vehicles (EV) sector. Darwin EVAT, a green venture of Darwin Platform Group of Companies, today announced the launch of 3 exquisite models of electric two-wheelers: Darwin D5, D7 and D40. Apart from low running cost, Darwin EVs offer the benefit of low maintenance, zero emissions and tax benefits too. Darwin electric vehicles come with Japanese tech standards and have the highest mileage efficiency at an affordable price. With the Charge and Go Maxim, these two-wheeler EVs Darwin D5, D7 and D14 provide give the young generation a new experience with several exciting features including muscular design, mileage efficiency, keyless entry, regenerative braking, speed control gear, battery swapping, large LED display, high quality suspension, USB mobile charger port, hazard switch among others.
How is India Inc. navigating the challenges of a VUCA world? What are the winning traits to lead businesses in a VUCA world? How to create resilient business strategies in a VUCA world? What is the future of tech and business in a VUCA world? How will economic policies evolve in the VUCA world? Get insights into a VUCA world at the Business Today MindRush.
Darwin Platform Group of Companies, established in 1996 by young and innovative entrepreneur Ajay Harinath Singh, has emerged as one of the fastest growing Indian global business conglomerates. The group has made rapid progress in several high growth sectors such as finance, banking, healthcare and pharma, avionics, reality, energy and refineries, mass media, IT, infrastructure, logistics, automotive, and recently forayed into retail and defense sectors. A debt-free Darwin Platform Group has a worth of USD 6.4 billion and it has 25 associate companies. Driven by its core value, nation building through wealth creation, Darwin Platform Group's initiatives in India aim at boosting the economy. And to achieve this, all new initiatives of the group are aligned with Atmanirbhar Bharat and Vocal for Local campaigns. Darwin Platform Group also aims to expand its reach in the logistics sector. And to achieve this goal, Darwin Platform Logistics Limited and Darwin Platform Shipping Limited have jointly acquired land at Jawaharlal Nehru Port Trust, JNPT, Special Economic Zone, SEZ. In July 2021, the Darwin Platform Group formally entered into the high-growth retail sector and opened 2 mega stores in Mumbai. Darwin Platform Retail, DP Retail, now plans to open 200 self-owned mega stores across the country in the next 6 months. The group has ambitious plans for the defense sector, and it has been developing the prototypes of indigenously designed and developed military equipment based on molecular nanotechnology, MNT. Darwin Platform Group has partnered with the robotics lab at Watson University, Hyderabad for designing and developing these prototypes. From the Uttar Pradesh Defence Corridor, the DPGC plans to take its MNT and other defence production to the next level. The group now embarks on a new journey by entering into the next generation battery-powered two-wheelers electric vehicles (EV) sector. Darwin EVAT, a green venture of Darwin Platform Group of Companies, today announced the launch of 3 exquisite models of electric two-wheelers: Darwin D5, D7 and D14. Apart from low running cost, Darwin EVs offer the benefit of low maintenance, zero emissions and tax benefits too. Darwin electric vehicles come with Japanese tech standards and have the highest mileage efficiency at an affordable price. With the Charge and Go Maxim, these two-wheeler EVs Darwin D5, D7 and D14 provide give the young generation a new experience with several exciting features including muscular design, mileage efficiency, keyless entry, regenerative braking, speed control gear, battery swapping, large LED display, high quality suspension, USB mobile charger port, hazard switch among others.
How is India Inc. navigating the challenges of a VUCA world? What are the winning traits to lead businesses in a VUCA world? How to create resilient business strategies in a VUCA world? What is the future of tech and business in a VUCA world? How will economic policies evolve in the VUCA world? Get insights into a VUCA world at the Business Today MindRush.
Darwin Platform Group of Companies, established in 1996 by young and innovative entrepreneur Ajay Harinath Singh, has emerged as one of the fastest growing Indian global business conglomerates. The group has made rapid progress in several high growth sectors such as finance, banking, healthcare and pharma, avionics, reality, energy and refineries, mass media, IT, infrastructure, logistics, automotive, and recently forayed into retail and defense sectors. A debt-free Darwin Platform Group has a worth of USD 6.4 billion and it has 25 associate companies. Driven by its core value, nation building through wealth creation, Darwin Platform Group's initiatives in India aim at boosting the economy. And to achieve this, all new initiatives of the group are aligned with Atmanirbhar Bharat and Vocal for Local campaigns. Darwin Platform Group also aims to expand its reach in the logistics sector. And to achieve this goal, Darwin Platform Logistics Limited and Darwin Platform Shipping Limited have jointly acquired land at Jawaharlal Nehru Port Trust, JNPT, Special Economic Zone, SEZ. In July 2021, the Darwin Platform Group formally entered into the high-growth retail sector and opened 2 mega stores in Mumbai. Darwin Platform Retail, DP Retail, now plans to open 200 self-owned mega stores across the country in the next 6 months. The group has ambitious plans for the defense sector, and it has been developing the prototypes of indigenously designed and developed military equipment based on molecular nanotechnology, MNT. Darwin Platform Group has partnered with the robotics lab at Watson University, Hyderabad for designing and developing these prototypes. From the Uttar Pradesh Defence Corridor, the DPGC plans to take its MNT and other defence production to the next level. The group now embarks on a new journey by entering into the next generation battery-powered two-wheelers electric vehicles (EVs) sector. Darwin EVAT, a green venture of Darwin Platform Group of Companies, today announced the launch of 3 exquisite models of electric two-wheelers: Darwin D5, D7 and D40. Apart from low running cost, Darwin EVs offer the benefit of low maintenance, zero emissions and tax benefits too. Darwin electric vehicles come with Japanese tech standards and have the highest mileage efficiency at an affordable price. With the Charge and Go Maxim, these two-wheeler EVs Darwin D5, D7 and D14 provide give the young generation a new experience with several exciting features including muscular design, mileage efficiency, keyless entry, regenerative braking, speed control gear, battery swapping, large LED display, high quality suspension, USB mobile charger port, hazard switch among others.
How is India Inc. navigating the challenges of a VUCA world? What are the winning traits to lead businesses in a VUCA world? How to create resilient business strategies in a VUCA world? What is the future of tech and business in a VUCA world? How will economic policies evolve in the VUCA world? Get insights into a VUCA world at the Business Today MindRush.
Darwin Platform Group of Companies, established in 1996 by young and innovative entrepreneur Ajay Harinath Singh, has emerged as one of the fastest growing Indian global business conglomerates. The group has made rapid progress in several high growth sectors such as finance, banking, healthcare and pharma, avionics, reality, energy and refineries, mass media, IT, infrastructure, logistics, automotive, and recently forayed into retail and defense sectors. A debt-free Darwin Platform Group has a worth of USD 6.4 billion and it has 25 associate companies. Driven by its core value, nation building through wealth creation, Darwin Platform Group's initiatives in India aim at boosting the economy. And to achieve this, all new initiatives of the group are aligned with Atmanirbhar Bharat and Vocal for Local campaigns. Darwin Platform Group also aims to expand its reach in the logistics sector. And to achieve this goal, Darwin Platform Logistics Limited and Darwin Platform Shipping Limited have jointly acquired land at Jawaharlal Nehru Port Trust, JNPT, Special Economic Zone, SEZ. In July 2021, the Darwin Platform Group formally entered into the high-growth retail sector and opened 2 mega stores in Mumbai. Darwin Platform Retail, DP Retail, now plans to open 200 self-owned mega stores across the country in the next 6 months. The group has ambitious plans for the defense sector, and it has been developing the prototypes of indigenously designed and developed military equipment based on molecular nanotechnology, MNT. Darwin Platform Group has partnered with the robotics lab at Watson University, Hyderabad for designing and developing these prototypes. From the Uttar Pradesh Defence Corridor, the DPGC plans to take its MNT and other defence production to the next level. The group now embarks on a new journey by entering into the next generation battery-powered two-wheelers electric vehicles (EVs) sector. Darwin EVAT, a green venture of Darwin Platform Group of Companies, today announced the launch of 3 exquisite models of electric two-wheelers: Darwin D5, D7 and D40. Apart from low running cost, Darwin EVs offer the benefit of low maintenance, zero emissions and tax benefits too. Darwin electric vehicles come with Japanese tech standards and have the highest mileage efficiency at an affordable price. With the Charge and Go Maxim, these two-wheeler EVs Darwin D5, D7 and D14 provide give the young generation a new experience with several exciting features including muscular design, mileage efficiency, keyless entry, regenerative braking, speed control gear, battery swapping, large LED display, high quality suspension, USB mobile charger port, hazard switch among others.
certain world, and we've had some of India Inc.'s best CEOs with us here today. A testament of resilience, of how leadership can come to the fore to take companies to altogether, new thresholds, even in uncertain and difficult times. Our next session is on another very interesting topic and segment of the industry, and that is, of course, startups. Is it or is it not a long winter that's brewing for the startup ecosystem? Can we call it the deep freeze? And I'm sure that my panelists will completely disagree with the topic. So with that, let me introduce Ritesh Agarwal, founder and group CEO, OYO. Bipin Preet Singh, managing director, co-founder and CEO, MobiKwik. Kaivalya Vora, co-founder and CTO, Zepto. K. Ganesh, serial entrepreneur, partner, growthstory.in. And Rahul Garg, CEO and founder, Moglix. I know Rahul is here. Let's, maybe we just need to signal, if someone could just let him know we're beginning. Yes. And they'll be in conversation with me. I'm Abha Bakaya, senior editor at Business Today. Should we just give Rahul a minute? Okay, we'll just start. Okay, I'm going to dive in, and I'm sure that he'll join us. In fact, I know he's very much here, so we'll kick off in any case. Okay, so firstly, I feel very awkward with this title because I know two of the people on the panel have just raised another rounds. Two of the other people on the panel are actually going in for IPOs. So, we're really primed here to understand what's happening in the startup ecosystem and whether all the noise we've been hearing around recent listings, new rounds of fundraise, corporate governance, how much really to read into some of that and where India's ecosystem is poised at the moment. So, Ritesh, let me start off with you. And you've got this big smile on your face because travel is booming like never before, I know. But tell us, where do you think we are? What kind of inflection point is this for the ecosystem and for the Indian economy?
Sure, thank you. Thank you for having me here, Abha. I thought that we'll go the other way around, but I don't mind getting started. We probably got together 6 months back, or few months back, for the BT budget roundtable. And travel was just about getting started. And there was this conversation about saying, we are in the Omicron wave. Is this going to continue? But I must tell you that, look, I think in the startup ecosystem, every couple of years, there will be some sectors that will do extremely well. Some will go through some challenges. People who use those challenges as opportunities will come out stronger in the next couple of years. So we went through challenge during COVID, no questions about that. But, I think, like I was telling Rahul earlier, ye to apna time hai. I think travel is coming back very strong. We just finished May with, I think, some report said 1.7 lakh bookings every day, just here in India, and growing. So I think on one side, you hear all these issues of macroeconomic challenges. On the other side, you see travel like never before. A lot of people here have taken flights. A lot of people here have planned their summer vacations or have taken one and know how hard it is. It's almost impossible to get hotel rooms if you want to take a weekend plan early during the week. So I think travel's coming back very strong, and I believe that companies who in the last 2 years used this period to be able to design their businesses with better cost structures, better economics, etc., are taking this advantage for all the top line that's coming. A large part of that flows to the bottom line. So big picture, excited about the growth in the travel ecosystem. But really, I think it is not just travel, but all the reopening companies. So whether it is restaurants, whether it is two-wheeler companies, anything that has to do with reopening, which is COVID negative in some way, you will see that continue to drive growth in times to come, is my belief.
Okay. Bipin, let me get you in. And, everyone says that the financial sector has to do well if the economy is going to do well. That's really where we're going to see the maximum evidence of demand and pickup. What's your reading of the current situation?
Yeah, of course. I think financial sector is one of the biggest sectors in India, even if you see the listed markets. And the same thing is replicated in startups and in private companies like ourselves. And there's, obviously technology in a country like India has to play a significant role in penetration of financial services across the board. Because we are not a country where we created a very large banking infrastructure or a physical banking infrastructure or a card infrastructure over the last 20, 30 years. And all of you have witnessed the kind of growth that has happened and change of customer behavior that has happened in the last 10 years, where people are using different kind of payments, and whether it is payments, whether it is digital lending, whether it is managing wealth, or whether it is just buying insurance. Take any financial service. The leaders in that space will eventually be technology players, because technology is the only way it can scale. So, of course, I'm very bullish on the financial sector, and I think we grew 86% last year, year on year, and we hope to replicate the same. And I think overall sector, if you see the way it is evolving, is that the partnerships between banks and non-banks is actually leading the path in terms of where the sector is going to go.
So, are either of you worried about the current geopolitical, macroeconomic picture, market volatility specifically, since you both have IPO plans that are slated for whenever things are possibly better, or any other details you'd like to share with us? But are you worried about the current market volatility?
Yeah, actually, no. I think, I have been running this business for more than 10 years. Right? One true reality is that, after every winter, there is a summer. And then there is a spring, and then there is winter again. So that's the nature of life, and that's the nature of business also. And I think markets behave in a certain way because of global macros and all. I think fundamentally, if business has long-term value and has long-term growth potential and has margins, and I think in a country like India, Fintech surely has, then these are temporary concerns. At the end of the day, this is, after 3 months, we'll be holding a session, we'll be saying what is happening, why is so much money coming into India, and so on and so forth. So I think these things, the same thing that was happening last year.
And Abha, my view is 3 things, right? The first is, if I were to look specifically at business, I think so far I've not seen that impacting business. We've just come out of COVID, where effectively, our hotels were not doing business for a long time. So I think travel is coming back very strong, and OYO, with the perspective of being a market leader in travel, is getting benefit. I was in Banaras last week, and I struggled to book a room for myself in an OYO because just the whole city was sold out. So I think that's the first one. Second is, clearly there are macroeconomic concerns. There is no taking away from that. But I believe, that said, good companies will continue to remain attractive regardless. I don't think that's going to change. And last, but probably one of the most crucial things, is our IPO update. I think our perspective is our results will be dramatically different for first and second quarters of this year than it were probably a year back. So our hope is to try and bring those results, and our hope is by the time you'll also see a lot of the rate increases, etc., sort of be more streamlined. That's probably the time we'll probably look back at a potential consideration.
Fair. Ganesh, I'm going to jump to you because, he talked about seasons, and we were just discussing that. I asked Ganesh, is this a deep freeze? Is winter coming? And he said, look, it's seasonal. I've seen this many times. How is it different this time around?
Yeah, so one of the advantages of being bald and old as compared to all these youngsters is I've seen this play out repeatedly again and again, okay, right? Whether it's a dot-com boom and the bust in 2000, or September 11 happened, Lehman Brothers happened, something or the other always keeps happening. And that's how I end up losing all my hair. Otherwise, I was as smart and had as much hair as most of the people here, but this went away in last 32 years of startup. So firstly, I think there is a lot of sensationalism that people attribute to. Okay, right? And I blame the media, not necessarily India Today Group or the Business Today Group or Saurav is sitting there.
Every time
next time you'll not call me. Next time you'll not call me. So I'm not going to. I'm not. This group is excluded. But media sensationalization. Oh my God, 10,000 jobs lost. Listen, total startup in the recent layoff, 10,000 jobs lost. Do you know how many jobs were created as per DPIIT registered startups? And President Kovind had quoted this number of 6 lakh jobs were created by DPIIT registered startup. I would presume that most of the startups don't register with DPIIT. It will be at least 12 lakhs jobs would have been created. Okay, we are talking about less than 1% of job loss during all this period. Double it less than 2%. 4 times, less than 4% of the jobs created. But here, I forget what's the name that they use for professional mourners, okay, right? We have this concept in some of the societies that when there's a death takes place, you hire professional mourners to come and go on mourning for a fee. I mean, like that, some media, some armchair critics, some people are going on creating this sensationalism. I think none of it is really warranted. What is actually true is, last year, we saw a huge euphoria. We had huge amount of funding, okay, right? Large number of startup, high valuation, high funding, high ticket sizes, Tiger or other people across the board over Zoom, writing checks or sending, transferring, all that. So we had overeating, gluttony in the last year. So compared to that, this looks like real deep winter. Again, to quote from B.B. Shelley, Ode to West Wind, when winter comes, can spring be far behind? Okay, right? So the thing will take place. Obviously, what it means is that there is a challenge for companies which are in a Trishanku stage. That means if you are a company that was planning to raise capital in the January to now, January to July or January to September, if you are running out of money and last 2 years was planned on closing the funding there, because of the sudden drop in the velocity, in the valuation, and people taking a pause, you will be in trouble. Minus for those companies, there is nothing that has changed. In fact, like I mentioned, this is the time to start new companies. Salaries are lower, expectations are lower. All of that is extremely positive. My heart goes out to people who are in that Trishanku in-between stage. They will have to do deep cuts and things to come out of it. I'll also add one more thing. One of the things that I have seen in even earlier cycles is, like last year, whenever there's huge valuations, big checks, sudden this one comes, over Zoom calls funding comes, they come from crossover funds typically. Funds typically that have a public market exposure and a private market exposure. Now these crossover funds, when the public markets goes down as it has happened, in order to balance out, their private investments also suffer. So this is a collateral damage. Again, I know this does not satisfy the people who are caught in the Trishanku, they are in trouble, but it's a collateral. This will go away. Otherwise, the hardcore venture capital funds, they have raised huge amount of money. Where are they going to deploy? They are going to deploy here only. They have to deploy in startup. They can't go to public markets. They can't put it in fixed deposit. That money has raised there sitting down. So wait for 2 months, 3 months. But talk sensibly. Because when you're raising money, you have to talk what people want to hear. They want to hear profitability, path to profitability, not market share, not burn, talk all of that stuff. Okay. You will succeed. There's no doubt about it.
So let me get Rahul in on this. As someone who's just raised yet another round and not very long ago, which is very, very recently, did you talk sensibly in that round, Rahul?
So I think we have been in the unsexy sector, and it was actually very exciting because we work with the manufacturing and infrastructure companies across the length and breadth of the country. So when someone receiving the award, I think SNS mentioned that it's great to have awards being given to manufacturing, mining, and many of those industries. I think these industries are the backbone of our economy. So I think over the last 7 years of our history, we have always been cheering for the backbone of the economy. And therefore, we have never been overboard on saying that this is going to be like 20x jump suddenly because we'll burn $100 million on marketing. I mean, it's a steady business being built on a strong fundamental macro of the country. So I think we attract investors also in that manner that we don't have to ever give a crazy thing. And I remember from the first round, because Ganesh mentioned Tiger Global, which is also on our cap table for last several years. And I spoke to them when we were raising the last round, and they've been investors since 2019. We picked up the Excel sheet which we had given them in 2019, and we said that this is now 12 quarters we are starting to be out. And actually we have hit all the numbers 12 quarters out, which was shown in the Excel sheet in 2019. Because, and one of the reasons we were told that we were able to do that was because there was never a banker in between. We were always making Excel sheets for ourselves and giving it to the investor. So I think as long as founders safeguard themselves from giving the reasonable expectations, not ballooning it because it seems to attract a certain style of investor or expectation of investor, I think we'll do a phenomenal job. And I think this year is actually going to be a boon for the Indian startup industry, I believe, because many of those who may not have got enough time to fix the plumbing, as we call it, get some of the economics right, probably have less competition. If the space has too much competition, too much VC money for burning marketing dollars, you suddenly have poor balance sheets, so on and so forth. So I think it's going to be a boon for Indian startup industry because you will have right expectations of founders, right expectation of VCs, and build the company in a proper manner. So I think it's a very exciting times, I would say, for real entrepreneurs, building real companies, not building companies because there are 10 other people doing it and they want to be another 11th guy doing it because there's VC money available, so on and so forth. So I think very exciting year.
I just wanted to add, this is amazing to hear. I have never in my life ever seen Excel spreadsheet given some time back actually proving out to be true. This was the first instance of it. In fact, they say there is more fiction in the Excel spreadsheets made by founders to investors than whole of English literature. Okay, so this guy really deserves an applause for doing that. On the other hand, I think he undersold himself. Okay, right? Because investors take the optimistic projections, then they discount it, then value it, and do all that stuff. But obviously, it's great to hear and a great example.
So we have two of India's very young headline entrepreneurs with us on the panel as well today. Ritesh was many years ago, and everyone was marveling at his story. And Kaivalya today. Talk to us a little bit, tell everyone a little bit about your journey, because it's something that's still new for many.
Yeah, sure. Thanks. Firstly, thanks a lot for having me here. Super excited to be a part of this panel. We started Zepto about 10 months ago now. What we're doing is essentially quick commerce, 10-minute delivery. Started out with groceries, expanding to a couple new categories. It's been pretty fun, I think. When COVID really hit, both Adit, my co-founder, and I we were marveling at this problem of grocery delivery because we had spent some time abroad and we saw that, this is a fairly solved problem, but then why did all hell break loose in, March and April of 2020? Is there anything we can do about it? And so, spent some time experimenting with different models of grocery delivery and then eventually sort of stumbled on this whole, dark store, quick commerce, 10-minute thing. And just ran a couple of pilots, seemed like customers really liked it, figured out a way of making it work operationally, obviously with good unit economics, and then started scaling from there. I think since August last year to today, we're now in about 10 cities in India, so the top 10 metros. And I think on the whole, things are going well. I think as COVID does start to wane off, I think one of the things that won't really change is some of the habits that have been formed around delivery. I think the convenience that not just us, but in general, delivery companies were able to, provide to Indian consumers. I don't expect a lot of that to change. I think those habits will probably stick around for some time. But that's a little bit about Zepto.
So what was your funding requirement to expand into 10 cities at such a fast clip?
Sorry, can you repeat that? What was that?
What was the kind of funding you needed in order to grow so fast and expand so quickly?
I think so. Initially, we didn't raise a lot of capital, and I think that in hindsight, that was a great thing. At the time, we were like, oh man, all of our competitors have so much money, right? But initially, we didn't raise a lot of capital. We just had this one micro market in Bombay that we started with, and really spent quite some time there perfecting the model and really trying to nail, both the customer experience and operationally the economics as well. Once we were at a point where we were demonstrating both sides of it, that customers love it, they're retaining, they're ordering 2-3 more times a week, and consistently getting exactly what they ordered, good quality produce, and getting that in that committed time frame. Then we said, okay, let's try to scale this up and continue to scale it up while maintaining the same level of operational rigor. And once we were able to show that in a couple of markets is when we started to say, okay, this works, right? Now let's it was pretty easily demonstratable, and so we spoke to a couple of funds, and then I think around last year, September, October is when we started really fundraising, and since then I've raised a couple of rounds. And yeah, things are going pretty well.
All right, so shining example there of the ecosystem. But, it is these companies and these entrepreneurs here that we have with us on stage that are really driving India's new economy and growth going forward, significant contributors to that. Ritesh, I'm not going to ask you all the questions I've asked you all these, months and years. I'm actually going to ask you forward-looking, because as a critical part of the growth story, where do you see India's new age companies when it comes to the map going forward? How much of a growth trajectory do you see? How much do you see them cementing their position in the, like today we had the best CEO awards, but we still have a lot of the old economy names continuing to, of course, dominate that. When do you see that change?
I think, first off, thank you for asking me this question. By the way, just so proud listening to Kevalia. Just entrepreneurs, 19 now. Right? Incredible. People like Kevalia are setting up companies in 1 year.
And you were also 19, I think.
I was around the same age, but now I'm way older than that. But just... Huh? Yeah, I think Ganesh is probably the only millennial on the panel still. But look, I think, and I must tell, Ganesh has also been a great cheerleader of the ecosystem. I think right from when I started, he was always generous with his time. And he's a friend in the toughest times. When businesses are growing, when OYO was growing like never, life was good, no problems. But whenever we had troubles, Ganesh would be the first one who will pick up the phone and say, don't worry about it, focus on your customers. You do that well, you'll come out strong, as we have seen after COVID as well. But look, I'll say just 3 things, right? See, the first bit is, I see fundamentally situations like now, as Rahul also mentioned and others mentioned, this is a time to really hunker down and focus on building companies rather than focusing on what everyone else is doing. So this is the time to get your unit economics right. This is the time to, like if you remember pre-COVID, we used to have some of our complaints from our hotel owners. So for 2 years, every month I ran owner town halls, and every month our releases were just focused on what can we do to improve it. As the market's coming back, we're able to take advantage of it. I'm sure all the companies who are going through this, winter, as you call it, I think will probably take advantage of it. So that's the first one. That is, I believe, if used right, a lot of companies will be successful, and you will see more profitable unicorns than the number of unicorns. So currently you see 100 unicorns. I think next year you'll see the percentage of profitable unicorns be significantly higher, is my first belief for the future. I think the second belief I have is growth, in my view, is just, will be unidirectional. Because good news is, and Minister Goyal was mentioning 2 things which I noted. One was, VUCA se yuva. And the other one was inflation tolerance limit of India versus where we are at today is actually disproportionately lower than that of the tolerance limit in various countries around the world. And I'm sure that that will lead to better economic outcomes, which is already visible in GST collections, job reports, and so on. This, in my view, will have a direct impact in terms of startup growth. And hence, the last perspective is, I believe, as we have more profitable unicorns, as per the PwC report, you will have more young entrepreneurs come in and receive these awards in times to come. That's my three-legged answer. But look, I think I must finish by saying that it's very inspirational what all these companies have done. I don't think that we should distribute between young companies and older companies. I think we should just distribute between innovative and hungry companies. And I think, all the award winners are darn good giving a competition to the younger entrepreneurs out there to do a better job. So we will we'll all have to step up our game as well.
Absolutely. Ganesh, I want to bring you in here because, of course, talking about profitability is key. But along with more profitable unicorns, do you actually see any kind of filtering or any of the companies that perhaps have inflated valuations, inflated numbers, have perhaps reached where they have, but not on solid unit economics? Do you see any danger of those companies going belly up? It's a fair question because even from the old economy companies, we've had several stories like that.
No, it's a very fair question. And some of the companies that have reached unicorn or unicorn type valuation levels, either because of a hype or euphoria or because of a COVID push also, okay, right? Once the COVID impact has gone away, just like we have seen in EdTech also, okay, right? That the people go back. And even in we saw go up, the volumes has come down post that because a lot of people were there. So the question is fair. Will they go belly up? I don't think so, because if they have raised enough money, they have enough valuation, they have enough runway to be able to use a cliche, pivot or correct or change the model and adjust to the new behavior, post-COVID behavior when it comes up. So it won't go belly up. Will the valuation, unless and until you are selling, and I'm sure the founders will agree, unless you are selling, valuation is a paper number. Okay, right? And in startup, I'm sure all of you who are involved in startup knows, there's a very fine, thin line which we trade every day between huge euphoria to deep gloom and doom. Okay, whether the valuation is right, we don't know. And I can tell you, definitely, I can tell you with respect to Big Basket, with respect to Homeland, Portia, Medical, we were just months away from running out of total cash. Months away from running out of total cash. So that is the nature of the beast. So will valuations correct? Yes, valuations will correct. Is anybody going to cry because valuation corrects? Nobody is going to cry. Okay, right? Because after 2 years, you will raise money at a higher and higher valuation. Okay, right? So I don't think there is a structure issue. But having said all of this new economy versus old economy, the award winners versus new thing, I must say this. See, the traditional way of running the business, open a store, make profit, take the profit, invest in next store, take the profit, invest in next store. You do it over decades. You have the time, you have the luxury, you do it. That's the right way of building the model and all of this. And even Infosys was built profitably. The new age companies, venture capital funded companies, the founders of venture capital funded companies who raised money from venture capital, all of it subscribe to a different thing. Venture capital have a 7+1+1 or a 7-year time horizon. They can't wait for that brick by brick by brick by brick. So they have to get the same thing done fast. As founder, when I sign up when I take money from venture capitalists, I also align myself to the same thing. So there is a certain hurry, there is a certain urgency. You buy market share, you give discounts, you crank the flywheel by burning the capital you have raised. So nothing wrong in that. In that cycle, if there is a sudden break, it will create all these challenges, which will not happen in the traditional company, which is going store by store by store.
Sure. So Bipin, let me ask you, as someone who's been, growing this business now for 10 years and has possibly seen some of these cycles, let's give credit where it's due. We've seen some of these companies grow to enormous scale and, have been listed over the last year or so on the exchange, and that's, fair credit. But there's so many questions and, still the jury's out on whether or not those business models will survive. As MobiKwik, even as you await IPO, you're still going to be looking to raise another round or some more funding. It's been in the news of late. Tell me how things are different or what the current scenario is in terms of what kind of questions investors are asking, how much you think before going out there to raise the next round, how you see that adding to further value creation.
So I think, firstly, as entrepreneurs, we have to stop thinking just about valuation and think about value creation, like Ganesh was also saying. And value creation comes from, in multiple stages in startups. You start in an early stage with just an idea, then you get to a product market fit. Then you get to a business market fit, where you truly have business. And then eventually what is expected is you need to generate free cash flow, right? So I think every company needs to follow that path. And if they don't, eventually, they cannot survive. And so as MobiKwik, we've been focused on this. Of course, we are towards the later stages of this journey. And I think business today for us has been doing extremely well. In fact, business this year is doing much better than how it was doing last year. It's just that the market has obviously changed. And I believe that the market has changed also not necessarily related to any particular industry or any particular player. There are obviously global macros which are at work and different kind of factors which influence valuations and valuation multiples, etc. But other than that, I think if you talk about like fintech in general, every single company that I talk to are doing extremely well and they are growing very fast. In fact, for us, the last 2 quarters, we actually achieved profitability for the first time at EBITDA level for the last 2 quarters of last financial year. And, we hope to continue that this year. So as long as I think one builds a solid business, And, like, I think the days of, I think at least this year, the expectation of 100%, 200%, 300% growth is probably one has to moderate. If you get to good scale and grow 30, 40%, that's still, one of the fastest growing companies in India. And I think technology companies, Fintech companies, travel, etc., hopefully should grow at that kind of rate. And that should make sure that, eventually, if you need capital, the capital is available, right? And it will come.
Got it. Some great takeaways from the session. We only have a few minutes left, sir, but I do want to get another closing comment in from both our other entrepreneurs as well. Kaivalya, in terms of you're a very young company still, does any of this talk make you nervous? Is the future looking very bright? What is on your radar going forward?
Good question. I think, I think on the point of this funding winter, etc., right, I think the last 10 years or so have been, on the whole, like a pretty enormous bull run, I think, and some of that is getting corrected. But again, I think, like many of our panelists here today have said, the best companies will continue to do well. I think for us in particular, from day one, like I said, unit economics was one of the primary focus areas, right? And so, thankfully, as the macroeconomic scenario changes, life at Zepto doesn't change too much, right? It's not that we were throwing money at problems or have a crazy amount of fat to cut. And so, largely, things are BAU. I think, you talked about free cash flow. I think that's something that is a focus area for us as well. For us, it's slightly different though, because we launch new micro markets in different phase ways, right? Within a city, you launch new cities, etc. Right now, the focus area is, okay, the micro markets that we launched 9 or 10 months ago, right? How many of them are generating free cash flow, right? And so we're there, right? That's what we're sort of focused on. I think, and I think on the whole, like I said, it's not like a new focus area, something that's been there from day zero. And so, I think I'm excited about the future. I think the best companies the people who can execute the best will end up continuing to do well. And I think we're well within that bucket. And so, looking forward to the future.
Fantastic. Rahul, last word from you.
No, I think I'm super bullish, firstly, on the macro tailwinds which India has. I think we are not just, we are obviously the largest democracy in terms of number of people, but I think from an economic power perspective, the voice in the world economy, voice in the global supply chain, I think India will become formidable over the next 5 to 7 years. I truly believe that. And I think, therefore, there is no reason, both for startups, old economy, we see more manufacturing capex. So I think, there's nothing really to worry about. I think as a country, we will just continue to do well, because we are starting still from a smaller base as a 3 trillion economy. And I actually believe we can be $10 trillion by 2030. I continue to believe that, while I know there are ambitions, firstly 5 trillion and so on and so forth. But I do believe that we can be that strong economy. And it is once in, I think, unique opportunity over the last 3 decades that we have as a country to really capitalize and grow to that level. So I'm super excited and optimistic.
Wonderful, very exciting times as some of these wonderful tech entrepreneurs take India to the next level. A big round of applause, please. Thank you all. The next session is one which I'm really looking forward to. Dr. Ramcharan, global advisor to CEOs, corporate boards, somebody who really knows all about navigating a VUCA world. He's known for cutting through the complexity of running a business in today's fast-changing environment to uncover the core business problem. And his real-world solutions, shared with millions through his books and articles in top business publications, have been praised for being practical, relevant, and highly actionable. I welcome him to take us through this masterclass on the top priorities for organizations during these VUCA times.
Very much. Let me just take a minute here. Can you put that on? First, I want to thank you to give me this opportunity. And my purpose today is to take you something that could be very positive or that could be very shocking, both ways. I am working on this, on the US-China economic war. It has direct implications for India. And I will also support the basic idea the Honorable Minister said, because he's talking in Davos, I'm sitting in the boardrooms. So I get to see what's working, what's not working, with the personal observations, what's happening. I have an objective to get your help as I take you through. I'll give you the information, and then I'd like you to have participation from you and say, Ram, this is what you're missing. And then I will propose what the government of India needs to do. This is outside in, this is not inside out. And so I have a lot of limitations to go after. So the first thing, is it on? Okay, just a second. Am I coming out clearly there? The voice coming out? If not, could you please stop me? Because if the information doesn't reach, I'm wasting your time. So we have to be able to communicate. We did test it, by the way, this morning. So I want you to know that. We did that. Okay, if we don't get it, let's get going, okay? And I'll cover it. The first thing I'd like you to think with me, to go beyond VUCA to the age of discontinuity. Oh, good. Here we go. You can read my handwriting. Let me repeat, because I'm going to give you examples. We have entered the age of discontinuity with permanent breaks. First, I will give you the current examples, then I will take you through the future examples. All of you know what Tesla has done to the automotive industry? That is a break in every way. Do you recall from history when the iPhone came? It's not just substituting Nokia. It created a total break. Today, iPhone people have healthcare. We have email. We have this. We have that. So the idea in our mindset is to think about it's a discontinuity, it's an almost permanent break, and therefore we have to have an agile mind to rethink our vision of our strategy and our business model. We have entered that, continuing to do that. More to come. Now, this morning, there's an announcement from EU. And the announcement is they're going to have a regulation for the garment industry that they are going to be responsible for excess inventory, and that the garment used by the consumer, what happens to it? One of the very large garment manufacturer had anticipated that. It is causing a discontinuity and permanent break in the model. What is it? This garment manufacturer decided to airship from China and Vietnam to the United States. The cost, everybody with me, cost. But the new model is that from 45 days, it now takes 2 days. And you're going to have with those 2 days better forecasting, fresher product, less discounting, less cash in the pipeline, less insurance risk that comes from there. That has started. Did I come out clearly? So I want to tell you a personal story, which I'm very lucky to work with people like you and your colleagues, and sometimes to get that insight that comes out when you talk to each other. So one day in 1995, I was in New Orleans and coming down from the 40th floor in the Hyatt Regency, and at 34th floor, Jack Welch enters. He's shorter than I am. He knows me well. I work for him. And I say, Jack, good morning. No answer. Good morning, no answer. Now I am saying, you know how many thoughts go through your mind? Did I do anything wrong? Is he mad at me? He knows me well. Then he says, Ram, what's new? And I said, Jack, zero working capital. He says, never heard of it. You're trying to sell me consulting? I said, Jack, I never did. Door opens. Buy you a cup of coffee. GE guys is staying outside. You really mean zero working capital? I said, yeah. Who does it? I said, Mano. Who the hell is Mano? I said, CEO runs a company. Ah, what's the name? I said, you want me to arrange a meeting? He said, hell no. I get a call from Mano. He said, what the hell did you tell Jack Welch? I said, zero working capital. He said, yeah, we do that. So Jack went to see him with an executive, and he spent 6 hours with Mano. What do you think he was doing in 6 hours? 6 hours an eternity with him. Drilling, drilling, drilling. And Mano is the same way. Mano Kamporis was the CEO of American Standard. He figured this out, how to do that. So about 6 weeks later, Jack calls me up and he says, I hear you're going to give a presentation to his team. I say, yeah. He said, you know how to arrange the table. I've never arranged a table for anybody. I called Mano. I said, Mano, Jack called. He said, I want you to arrange the table. He said, yeah, we will have an elliptical table, my management team, all the nice stuff. I said, no. He said, what do you mean? I said, I want you to put on one side the plant manager from Brazil and one from Hanover, Germany. The low cost and the high cost. Plant manager is the key point in the zero working capital. And I say he's going to be here 90 minutes. And 80 minutes he will talk to these guys and he will go. So he got all the details. About 4 weeks later, he rents a 727, put all his plant managers across the globe, put a school at the Crotonville, and he saved $5 billion hard cash. Now, why do I tell you this? I go back to my experience in the elevator. What is new? Make that habit to search every day. What is new? New to you. It may not be new to the world. Keep searching. And if you keep searching, you will find the seeds of tomorrow exist today. And this is a very critical part. Once we know the seeds of tomorrow exist today, you can then see which way the discontinuity is going to evolve. Am I coming out clearly on this? The Tesla thing, it was that day when the car rolled out, and that day Schwarzenegger, governor of California, got the publicity. Should the other CEOs have seen it? And Elon Musk took that idea to Rick Wagner in General Motors. And look how far we have come to figure this out. So this age of discontinuity is continuing. Look at each industry. We have talked to auto industry. We have other things that Shalil mentioned that. But look at those, how this structure is going to change. So that's the first part I want to take you through. And then I want to take you through the experience. So in the last decade, I've spent time in China, gone through 50 companies. I'm on the board of the Chinese company, a large one today. Then I went to ZTE, full budgets and everything, looking at it. These are coaching of Baidu. You heard of Baidu? JD.com. Huawei, they still have called me to do some work for them. So I get to learn what's happening inside. So I'm going to give you some assumptions that are wrong on the outside about China. Because when you go inside and see the budgets, then you really know what's really happening there. So I began to talk to the CEOs in America, and I have a number of these people who allow me to talk to them one-on-one, go to their house. So I went to one, and I said, do you know that you serve at the mercy of the CCP? So what do you mean? I said, on the company board I am, the CCP, Chinese Communist Party, the guy sits on my left. Brilliant. Everything I say is recorded. His SOE owns 5%. And the day you don't give them what they want, everybody got it? Number two, state-owned enterprise. The day you don't give the technology, second item, once they have built the company of size, of global nature, you're out. Number one, anybody heard of John Deere? I talked to the chairman of John Deere. It's marginalized. Telephone infrastructure. It used to be AT&T, Lucent, Alstom, then Nokia, Siemens, then Nokia. Nokia is now marginalized. Ericsson is marginalized. So I went to one of them and they said, yeah. So one guy said to me, we're scratching our head, what do we do? This is the second largest market for many of these companies. Heard of Qualcomm? Yes. Heard of Amway? Second largest. Heard of Volkswagen? The largest. So I'm sitting in a meeting in 2007 or so with Jeffy Melton in GE, and the discussion is going on, should we give technology to China? Without GE and without Honeywell, they can't build the aeroplane. And so we're rationalizing. At that time, the assumption was that China-friendly things will go forward, so on. So Jeff said, I have a choice. I give them no technology, they will become number one in the world, and they will compete with us. Or I take 49%, be a bigger pie, and be able to play the game. Nobody knew that assumption will be turned over its head. So we have a large number of companies who have a large dependence on the Chinese market. Now, here is the first point. There is a deliberate Chinese strategy, which I'll show you in a minute, to get market access of China in exchange for technology and help them build your own dominant global competitor. Did I come out clearly? You got it? No? They will keep you in China until you give them the technology. Not enough. Even if you don't, unless you're a very small company, they're building their company, and when you get there, you're marginalized. Everybody got that? So as one of the people talked to me privately, he said, Ram, we are creating our own executioner, which is true. So that's another one. I'll give you one in the boardroom. So in this boardroom, I'm not a board member, but I go there. This $10 billion company, president, CEO, and he's a hired hand in a family company. He makes a presentation to put $100 million plant in China, in Shanghai, with an SOE partnership. And he says we can recoup this in 4 years. Makes a very persuasive case. It makes a lot of sense. And one board member who had worked in China asked the same question. He said, number one, if you give it to the Shanghai SOE, they will give it to the whole China. How long do you think it will take for them to take you out? The board declined the investment. Choice India. So they asked me a couple of companies, and I gave them some names to say, you work it through. So here, the key word is that Russia-Ukraine war has really lit the fire in the American executives what we're going to do. Volkswagen has announced that we will stop chasing market share, we will stop chasing volume. We're going to redesign the strategy, and they will over time going to get out, over time. So here, then it became clear that in the economic war, what is China's strategy? I'm going to give you a capsule of it. I'm writing in the book very extensively what is China economic strategy is. It is the only country that I know, there may be more, that has an explicit, brilliant, well-executed foreign economic policy. economic strategy. India doesn't have it, as far as I know. I know for sure America doesn't have it. Europe doesn't have it. Only they have it. So let me take you through that. Please reach the goal very carefully. Everything I have is verifiable and observable. I may not know all the facts, but what you have here are facts. The first one, not only in China, they want autocracy and one-party rule in the whole world. Let their people reflect on this. And second is append the American dollar as a reserve currency. Movement has begun. If the dollar reserve currency gets lost, what do you think will happen? They still have time, which I'll give you some time limits. And they have declared it to America-based democratic process must be replaced. That's the goal. President Xi is alive. He is going to be in the next term. That's a speculation. What I want people to know is not President Xi. It is coming down, and a gentleman named Doshi is an Indian, and he is now in the national security apparatus in Washington. He did the whole study from Deng to show this has been the strategy from day one. President Xi has lifted it. They have become bold. They now got the strength. And that is why you're coming out this thing very explicitly. So while he's carrying it out, it has been coming from Deng's days going forward. That's the goal. Does it have any meaning for us? We got to think about it. Now, 5 building blocks. I just chose 5. There are actually 9 building blocks. Building block number 1, accumulate hard currency. Today they have 3.4 trillion of the currency, and America owes 1.4 trillion. This is hard cash. You heard the thing before? Who has the money has the power? Is that fair? And that 3.4 trillion is increasing by roughly 500 billion a year. Your guess is better than mine. When it gets to 10 trillion, will they have a power to do things they can't do today? Is this making sense to you guys? These are facts. I didn't make them up. I'm going to come about India in a few minutes. How do they do that? Trade surplus. Trade surplus. So trade surplus against America, against Europe. They have trade surplus from almost 150 countries. Only once is the raw materials, energy. 150 countries are indebted to China. They owe money to China. And this is their strategy, by the way. Very deliberate, very clearly planned. The second strategy is capturing all the routes to the markets of the world. I've come to call it encircling like Mao used to have. You heard of the Belt Road Initiative? They now have the railroad from northeast of China to Europe in 16 days. It's working. Take the whole route. They control their logistics. They also use our logistics, but we are not allowed to use their logistics. To go to the Pacific coast, they are building a port in Lima, Peru. They have 94 ports. They have now underground cables to control the data flow, telecommunications flow. So they control their whole logistics. How many of us heard who controls the customer controls the business? Very meticulously planned going forward. They've given $385 billion to these 150 countries. So am I clear of the encircling strategy? Lots of details are all factual. You can find out. Number 3, they now have these roughly 105 countries. These countries owe them. So standard setting is very critical. Telecommunications, global standards. There is no better way to enter a country than to build their telecommunication infrastructure. They're here for a long time. Do that. And so here, they got these countries in this standard setting. They are now going to have a block voting so that the American designated people are not in power. This has begun in the 5G standards. It's still the American system, but over time, it's going to change. The next one is the diversionary strategy. When Mr. President Trump got angry with the Europeans, the Chinese went in, created a negotiations, and created a pact that the EU should be investing money with China. President Biden came in power in time. It has been tabled. Russia-Ukraine war, we can argue this. My sense is it's a diversionary technique. It's resulting in diversion because resources are going in. The time concentration is away from the Chinese part of it. It's a diversionary thing. And then you have the fear. You know that President Xi is very clear that anybody who's found to prevent China's progress, Australia, they made a remark and they cut the import of coal and the iron ore. That's going on. I have advised every single client in America, do not send your executives to China. Commit no such error. Canada, my clients, and in America, no way. I'm on the board of another company where we're not going to put a plant of manufacturing. They begin to realize what's really happening. Now, so here, this is the simpler version of a Chinese strategy. What do you guys think? There are more facts. I just want you to know that. I've just not done that. We'll process that. America, I'm not going into the detail. I want to mention to you one thing. And we need to capitalize on it in India. Where do you think the most technological research is done? In America, I mean. Who does it? California. Mm-hmm. The Silicon Valley, yeah. How many of you heard a name DERPA, DARPA? How many of you heard Lawrence Livermore Laboratory? How many of you heard of Alamo? These are 8 government highly secured labs. The major technology is developed there that goes to these commercial companies. And then those joint ventures are licenses, commercialized, and they go to the outside world. That's a real jewels of America, where they have 20 years later kind of technologies being delivered, and that's what they want in the other countries where we're really going. There are lots of good things in America. I'm not doing it here. I just want to show that. And so here you have a China strategy, which is very explicit. It's very clear. Now, here you see a new level of competition. We competed one company against another, correct? We compete industry to industry, aluminum versus steel, plastics. Now, I've been company competing against several industries. Amazon competing with lots of industries. Now, we have a company competing against a nation, and that is China. Singly targeted. Subsidies, taxes, all that stuff. Now, in my mind, it has begun. I believe, I'm predicting here, this is not a fact yet, but I believe this is what's going to happen. And that is, we're going to have two spheres of competition. One, the Chinese orbit, Venezuela, Russia. You know the countries. You can figure that out. And we go back to prior to 2007. 2000 is a very big date, but I'll tell you why. Until 2007, we were a globalization country, a globalization American process. And then China begins to export 2007. And then this whole thing began to change under the president. So I begin to see a globalization on the left side. I am saying, I could be wrong, no country will be self-sufficient on its own. Ever. Chinese think they can, we'll have to see. But that's a supposition, that's not a fact. So there is going to be a globalization on the left side. It is going to happen in certain ways, and we have to protect the dollar side and the democratic side of it. Now, having said that, I come to India. Yeah. India. Do we owe money to China? You want to take a guess how much money we owe to China? Cumulatively, last 20 years? 22 years? Take a guess. Nobody's going to be embarrassed. I know I'm cheating. I've done my homework. You know that. It's fair. But emotional feeling about it. What's your guess? How much? 2 billion. Sorry, I beg your pardon. How much? 500 billion? You're close. It is 638 billion. Dollar. Yeah. India owes up to fiscal 21 or so, you can say 1 year, $638 billion to China. Net deficit. I'm not shocking you, I'm just giving you facts. Take a guess, what was the deficit last year? $70 billion. 70 billion. Increasing. So 638 now. And if we did nothing, what do you think in 5 years will happen? So in a cumulative 5 years, it will be $1 trillion. What's our GDP now? $3 trillion. And what rate do you want to assume? 7%? In 5 years, that's 450, 4.5. On a 4.5, we owe China $1 trillion. What do you think? Let me repeat that. We have 638 now. Last year, fiscal, 70. It's increased, by the way. If we do nothing, in 5 years, that's 350, isn't it? Give and take. A total $1 trillion. Our GDP is $3 trillion. At 7% growth, that's 450, 4.5. What do you think about the condition?
How is it manifested?
Say it again. No, it's hard cash. All right.
We are using a hard currency to pay them.
Yes, but that currency is the powder.
No, but we don't, it's not a loan.
No, I just want you, I'll take you separately. I've debated that with the Treasury. I said they have the power. They're buying that military equipment with that money. And they're giving the money to those other countries. Oh, yes. They just react to me like this. I said, no, get some facts. Talk to the Reserve Bank. Get some facts. Even if I go your way, how do you feel?
So that also means that India's foreign exchange, which is also mainly
tied to the dollar.
It's liability.
Liability.
So, we haven't earned that, right?
Exactly.
So we are also in debt.
That's the key point. That is the key point. And then the extent of debt.
Why do you take when you import from China, you don't pay, we pay the bills.
Say it again, please.
When we import, there's trade deficit linked, right? So companies or governments who import pay for that import, or don't. They give credit lines.
No, but pay through the currency of your country. Right. They control that.
Or dollar.
Whichever, yeah, whichever you do that.
We haven't paid China 680 million.
Yeah. Say it again, please.
I think we paid them the money. We're using hard currency to buy other things and whatever, right?
Yeah, do that.
We're paying our hard currency.
Yeah, exactly. Exactly.
It's not a debt.
No, we pay. Yeah. But they control that power.
Yeah, sure.
And when I stipulate that, you see what happens. I say, what do you want to do? So what's the priority? Don't get depressed. That's not a good idea. That's not a good idea. And so, first, I have some suggestions too, so it's not just, I have some suggestions too, so it's not just creating depression around here. You don't do that. So I want you to think about a couple of things. That why the minister, Mr. Goyal, getting that positive feedback, because the same thing in the boardrooms I'm in America, they're saying, we got to get out of China. Supply chain issue that the chairman of Maruti mentioned, Mr. Bhargava. And so where do we go? We want to go to India. So I met the person in charge of supply chain for Apple. Anybody heard of a place called Bareilly? He's from Bareilly. He and I speak same Urdu. And Apple has begun to move in here, get the parts made here, and do that. And they're building their new model. Because in China, they had large operations. We don't have enough talent trained here, expensive equipment, do that. What's happening? So please discuss at your table one single question. I'd like to get some input from you. That what should India do regarding China? Stay with the trade side of it, not political, just trade side of it. Stay with that. What should India do, if anything, or do nothing, regarding trade with China? And I've been on record, there will be time when there will be a dispute about water. And see what kind of a trump they will use, if any, as they go forward. And that's one of their trump cards to go after. So take a couple of minutes, do something.
You have to explain the debt more clearly to everybody. You're not getting it.
I just want you to assume
What is the nature of the debt?
that the key is that I have the data. The 638 billion, we really owe them in some way.
Owe them? We haven't paid for it.
Yeah.
We haven't paid.
They paid.
No, we have paid, not
We have, yeah.
We have paid. Then, if we've paid 680 billion, why do you owe them 680 billion?
Yeah, just assume that. Let me get on, just because I've gone through this debate in America too, 3.4 trillion.
But it has to be conceptually clear, logically clear. I mean, that's
the logic is that we have been incurring trade deficit with them.
Trade deficit, okay.
And they're having the IOUs in some fashion. That's what you. And then you 70 billion last year.
Trade deficit.
Yeah. So please take a minute, talk to each other. What should India do? Give us some ideas. What should India do regarding China? Stay with trade. Don't go political. Okay? Have a little talk. Say, what should India do? Don't get depressed. Talk to each other. I'll get it from everybody. Okay? Talk to each other. Let it go. Yeah. Talk to each other, then I'll get it. Okay? Get a feeling for it. But there are solutions that. Say it again? Well, that's one of the major ones. There's no other way. And it's a good thing for us. It's not a negative thing. Then we say, how do we do that? Yeah, please go ahead.
Meaning we're exporting iron ore, we're exporting a lot of commodities to China, which we should be using domestically.
Inside.
And exporting over.
And you got these few things. Few things, not 5,000 things.
The nature of exports is a large our exports to China are a lot to do with commodities.
And they're going to play a game with the commodity. They're just
There are also some critical things like FPI of chemicals and farmers should all be made in India.
But in the case of Australia, you know, they just announced in China they're going to do government buying for their everything from Australia. Australia thinks they buy. The government controls the buying. Chinese government controls the buying of things from Australia as one unit. And says so monopsony will take place. And they announce it too. So then we say whom they're going to sell, cut price. That's the power of it. Yeah, go.
But the Indian companies don't have market access in China. That's, I think.
Indian companies don't have market access to China. That's correct. The total export last year from India to China is 24 billion. And they are commodities largely. That's not going to work.
Well, it's not an access issue. It's the fact that we don't have the product.
What are we saying? We don't have it.
We don't have the cheap products. We don't have the product to export. There's nothing that China wants. Manufacturing.
No, it's a very fair point. So what is the urgency? I believe I concur. I don't say you're right. I've got to say I concur with you. Because we both can be wrong. We've got to build a supply chain here. And that's number one priority. And I would suggest we should think, and disagree with me, supply chain of those items that we need urgently, and they come from China. That's more important than reducing deficit with some other country. Is that important? So I go to second step. Second step is to build supply chain here. Do we need some technologies from places other than China? Investments. You know what I mean? Because they're friendly countries. Go.
We need the engineering know-how.
Engineering know-how, manufacturing know-how, and investment. Go. Hang on.
Okay, so I'll repeat myself. I think it's really about not India reducing its import from China as the solution. The real problem would lie when China would block its exports to India.
China will block?
Its exports to India.
Exports to India?
Yeah.
It could be. I don't want to rule that out. Because we need to build this gentleman's solution. Supply chain in India of the things that link with this whole discussion. We need what? We need technology, engineering know-how, and maybe some money. So now I come to my second point. We must have a strategy and priorities, what those things are. And then we got to market to the people from whom we want help. And that will be a joint work of the industry and the government. Government can create environment, but they can't do the negotiations. We have to do that. Just like you people raise funds, you have to market to the fund givers. We have to market, we have to sell, we got to create a strategy, we got to figure it out what is going to be here. And we should actually think about, especially business and the government together, don't do the whole thing, pick 5, 6 items. So you build credibility, you create confidence, you go at it, and really focus that as a very urgent priority. What do you guys think of those 2 ideas? They're your ideas, I concur with it.
But what will happen once it is created? What strategy then China will adopt?
Yeah, I've got that action, reaction, gaming. I've got all that gaming. They're going to react, but there will be some other reasons for it. No question about that. Otherwise, we're saying we have so much fear, we can't do anything. And that's not allowed. We can't say that otherwise. We say we sunk, we can't do that. Correct?
May I pose a question to you, sir?
Sorry, somebody said something. Yeah.
So China's game was always pricing, right? And it could give those prices because of...
Thank you for reminding me.
Yeah.
Now I come to my going into the budgets of these guys. Their currency parity was 450 in 1999. It's 680 now. Yen used to be 70, it's 122 or something now. Now, if you begin to see the currency parity, they are uncompetitive. We may not be able to do anything, it's fair. But saying their price is a reflection of competitiveness is not correct.
My question was different. The reason they could give those prices was the way they sort of paid their labor force, which was they had a surplus of labor force and they could give those cheap wages and could leverage that.
No. They're very high cost inside. Look at the wages. I see the budgets. Oh, no. Besides, the labor cost in the automation is going to go down. But they have subsidies. They have all kinds of things there. I got to calculate the fair cost. You got to do green sheet analysis of the real cost. Then you will see the difference. And we got to do the analysis before I take my word for it. You take my word for it and show that what it is. Even then, we got to do the supply chain here. We got to find ways to do that. And that's the whole purpose behind that. We alone cannot do that. Some maybe. We buying pots and pans, we buying the Ganesh ji, we buying a paper, I buy clothes. No, we got to do that here. And so that's the part we've got to put. So the other thing I have is we've got to announce a strategy, working with the business people, work it through. Go with the industry, don't go with the company. Get the list, work it through. Now it's coming to the Americans and Europeans and whoever else. We got to do target marketing by companies that whom we want to invite. We got to show them why, what we have to have, what we need to do. So the industry needs to work with the government to do that. And pick 5, 6 items, don't pick the whole thing. So this way build confidence going forward. I've got one more quick item. Somebody had a hand up. Yeah, help us. I better not run out of time because I have to have one more item.
Why is the answer to localize the supply chains in India and not just pivot them to the US, Europe, Japan?
Hello.
Oh, you say why not do it there? Yeah, you could. It will be globalization. The purpose I have is in mind. That's a viewpoint. That's not a fact. Our Indians do a great job in America. Why can't we do it here? I don't have to show that. You know what I'm talking about.
Sir,
I meet them all the time.
I have one proposal.
Just a second.
Yeah.
Why can't we do it here? It creates employment. You learn technology, you build it. I'm for it here, but if you want to do, that's your privilege. I've got to do it here. Some things I may not be able to do, I can understand that. Please.
Yeah. What I've seen here, for the consumer products, there is too much of fragmentation of industry. So what I'm calling is defragmentation. If I start defragmentation and unite them, sub 100 companies, give them a
Absolutely. So that was my second one that I took to the Home Minister some time ago.
Yeah.
And that is, we have some superb, I mean, I'm working with them now in India. I took them on. 200 million, 300 million. These people live and they make money and they're going through tough times. And so I'm not covering it here now, but I have a view how you get this thing really going for about 1,000 companies. And they can do some of that stuff here in India. Yeah, please.
Do you believe in trade barriers to solve the China problem?
It's not a belief. If we have to do it, we will. They are doing it.
No, but you think we should do it?
No, I just want to first do the cost analysis. And then if I have to do it, I will on those items.
Well, I mean, that's one way to solve the problem, because we know that they're cheaper than us. We know that they're better than us.
No. We can build if we put our money on it. I mean, item, labor on it. No. This is the belief we got to discard. Because I see this. I go inside the factories and see that. They did that. They got experience curve. We don't have the experience curve right now. But the cost part, I won't accept that. Because you have not done the homework.
So the talent that is available...
Even if I were wrong. See, even if I were wrong, we got to find a way to do it. Even if I were wrong, we have to find a way to do it.
I'm saying if you put trade barriers, you will make more expensive, you'll automatically reduce the debt.
Yeah, we'll do, but we want to do the cost analysis and figure this out, and then we go from there. But if I have to do it, I would. I'm not going away from it. That's my point there. I will do that. Somebody had a hand up.
The talent that is available with our IITs is not captured by the industry. There is no cooperation between industry and academia.
Yeah, good point. So I want to shift a topic here. I didn't want to let it go. This point, I've talked to a number of people. In companies, I'm not talking India, talking America here, and India as well. We have two classes. People who get options and equity, and people who can't pay it only by cash. It's an economic class. We got to eliminate this. And I'm now beginning to move and saying every qualified employee should be allowed to have the rewards in equity and cash. What do you guys think? And second, the reason is the equity awards are a multiplier. I'm on a board. I get $200,000 a year in a stock. I have here 20,000 shares. I've got them for 20 years. Company stock price has gone up minimum 15% a year. I'm a millionaire. That's a multiplier. And the people have been 20 years, they do this stuff, and they don't get it. their pride, their ability to do things, they begin to change. So I want you to think about how do we go about that particular item to deal with the inequality of rewarding people. What do you guys think about the inequality? Okay? Because I'm coming short of time here. So
Hello.
do that.
So, here in the back. So, here in the back. Hi. Am I audible, sir? So, I think more than anything else, we need to work on human resource as well. Because there's a difference when it comes to the kind of quality education people are getting or the quality healthcare, or before we even think of competing with other countries.
Could you just tell me again what you say?
We need to think about the human capital that we have, because the kind of inequality is there with the quality of people that we have, the skill sets available with us.
Yeah, we should, but the idea I just toss out to you, there are people who do customer service for 10, 15 years. That's why you retain the customer. Why shouldn't they get rewarded for multiplier? That's my argument. They should get a multiplier effect. I'm saying qualified people. I didn't say everybody. You have a criteria for it. And so they deserve it. Why shouldn't they deserve it? So that was my last point there.
So I have a counterpoint to that of providing equity to dilute inequality, because I don't think it's a great idea, because when you incentivize people by giving equity, at certain times, especially at the top ends, people end up doing wrong things to boost profitability in the short term, to increase stock prices through which they like.
We know how to control that. Count on it. We know how to control that. That's a fraud. We'll figure this out. I've heard the argument, well, they will spend the money in gambling. I say, interesting. Don't trust your people? This isn't the American scene. A guy arguing with me.
Why not, instead of providing equity which dilutes it, get down to the profit, and once the profit is there, a portion is reserved for dividend, a portion for investment, and out of the remaining, why don't you give it as a...
Yeah, find somewhere they should share in the multiplier. That's the only thing. There's no other way I'm going to tell you. That's the only thing. Multiplier, find the way to do that. So, gentlemen, 3 things, ladies. 1, think about this China thing very seriously. We should do supply chain here. Figure it out. I'm open for all kinds of things we have to do. We need to do the marketing to the companies from whom you need help, not just going the various kinds of delegations. It has to be factual. We've got to target the companies, go there and see what we really want, which way. Second, your point of these, let me use the word SMEs, the family-owned companies. I'm working with them and say they got everything. They need land. They don't need land. They need low-cost loans. And they need knowledge, access to the market. They can get the technology. That's my impression of the whole thing. And we can create a huge thing going forward. Start there, organize it, go. And third, find a way for qualified employees to get the multiplier. I have private companies in America, and you can do the research very clearly, how their employees feel, what's their social side of it, and they actually give out the multiplier effect going forward. Okay, very good. 3 items. Think about China seriously. Thank you. Thank you very much.
Thank you, Dr. Ramcharan. Fascinating as always. Are we? Our next session is on sustaining high performance. Professor V.G. Narayanan, Thomas D. Casserly, Junior Professor of Business Administration, Chair, MBA Elective Curriculum at Harvard Business School. VG has been teaching accounting at HBS for the last 20 years. Currently is the chair, as I mentioned, of the MBA elective curriculum. He's chaired the pre-MBA summer program at HBS and taught introductory accounting to incoming MBA students in the summer analytics program for the past several years. I'm also going to invite our news director, India Today, Aaj Tak, as well as executive director at Business Today, Rahul Kanwal, to introduce VG to our audience. Rahul?
Can we just check Professor Narayanan's slides, please, so that we know that he's good to go? Okay. So, just give us a minute as we set this up and then we can start. Yeah. Can we have them at the back, please? Perfect. Can everyone settle down? Then we'll start, please.
Hi, I'm VG. Lovely to meet you.
Our next speaker at the Business Today MindRush is the most famous online professor of the Harvard Business School. The HBS faculty, as you all know, is full of superstars, and a lot of the professors have students clamoring to be in their class. But if there is one professor whose course has been taken by more students than any other professor at the Harvard Business School, it is V.G. Narayanan. And the reason for that is that at a time when a lot of the HBS profs look down on online education as something they didn't necessarily want to have anything to do with, VG, as he's called, designed and developed one of HBS's first online courses. His course on financial accounting is compulsory for most students who do a course at HBS, which is why I said more students have been taught by VG than by any other professor. So he's a star among stars. I had the pleasure of being in Professor Narayanan's class at the Harvard Business School this summer. VG is thorough and yet very engaging, as you're just about to find out. VG's area of research is management accounting, and he'll be speaking at MindRush on sustaining high performance. Professor V.G. Narayanan is a PhD in business at the Graduate School of Business at Stanford University, an MA in economics in the Economics Department of Stanford University, an MS in statistics at Stanford University, and also an MBA from IIM Ahmedabad. He's a Chennai boy, so his India connect is quite strong. Without further ado, allow me to welcome to the stage the Thomas Casserly Professor for Business Administration at the Harvard Business School. Can we have a round of applause for Professor V.G. Narayanan, please? Come, sir.
Thank you for this very, very generous introduction, Rahul. I hardly recognize the person you introduced. I'm going to copy Sri Ramcharan and get down if I could. Much more comfortable, feels more like a classroom, if you don't mind. Okay, so I'm going to talk to you about sustaining a high performance. And let me go here, right? Most companies, they start with their strategy, they're trying to implement it. Usually, like startups start at the growth phase. Some point, right now we're living through this, I would say, interest rates go up, people become much more focused on the short term, and they say, okay, I want to see some profits. And companies, pivot. They move from focusing on growth to moving towards profitability. And at some point when we continue through the cycle, somebody or the other will cut corners and we'll have a crisis. We'll have somebody that's cooking their books, somebody that's shipped a bad quality product, and the company goes into crisis mode, and then new management takes over. They start focusing on getting the company back to order. They lost sight of growth. And then they need to focus again on innovation and growth. So this cycle continues, and it doesn't happen just for companies. Sometimes it happens for the whole economy. And we have lived through these moments before, and we are living through this again. So in the year 2000 or 1999, I see lots of young faces here, but I've lived through this. Companies are valued on clicks and eyeballs, and suddenly it was like, no, this is not enough. You need to show profits. And companies started cost control and things like that, but we also saw our share of scandals. So every 8 to 10 years, even economies seem to be living through this cycle, right? The question is, can we, is it inevitable that you have to live through the cycle? Can we not manage all three things at the same time? And I think the answer to that is yes. So let me, this back doesn't work, I think, or, there we go. So what do we need? So here we have CEOs, senior leaders in companies executing their strategy and trying to balance these tensions of profit, growth, and control at the same time. Not one at a time, but trying to do all of these at the same time. And how do we do that? And the key to that is understanding human nature, human behavior, and leveraging the power of economic incentives, right? So that seems like the key to delivering on this, so that, a gentleman here talked about if we load up people with equity, they become very short-term oriented. We see they play this quarterly game and we have all these scandals. Absolutely, this seems to happen all the time, and there's some sense of inevitability about it, which is, doesn't have to be that way. So what I'm going to talk to you about is a framework. One of my colleagues here at the Harvard Business School developed this, called the levers of control. And we start with sort of what we call diagnostic control systems. Think of it as a performance management system where we link a company's strategy to sort of key deliverables. And there are a few generic strategies. Some companies are product-oriented. Others are ones based on customer intimacy, low cost. Whatever your strategy is, you want to figure out what are the critical variables for success. These are easily available, what those metrics are, and you want to link them to people's performance evaluation, right? The key thing here is we absolutely need to have very high expectations of our workforce, of our employees. Holding people to high expectations is the key. Rahul talks about, teaching at the Harvard Business School. One thing we all take very seriously is our course ratings, how we are evaluated as instructors. That's a point of great pride among the faculty. I chair the second year of the MBA program, so I get to see all my colleagues teaching ratings. I've done this for 8-9 years now. And the single biggest predictor of who does well in the classroom is another question, which says, does this professor hold us to high standards? So if you work your students hard and hold them to high standards, that is the best predictor of how you do as an instructor. And that's a bit counterintuitive, because in the moment, when you're cold calling students, when you're working them hard, they protest. They're like, why are you being such a slave driver? But by the end of the semester, their views have changed. They look back and say, I achieved something. I got something done this semester, and this is the person who helped me do it. So there's always this dichotomy. In the moment, people may protest. By the end, people are very grateful. So all of you, the one single thing you all need to do is have high expectations of people that report to you. Okay? So this is true for any organization. But having high expectations and then getting people motivated to achieve those expectations are two different things. And there are very, very many different ways of motivating people. So we're going to see that. Okay, so what happens when we set up these high expectations of people, Either you link them to incentives, you link it to promotion decisions, or the other ways we will see how we could motivate people. Just a pure challenge is enough. Sometimes, why do we scale mountains? Because they are there. Just the challenge of the achieving something that has not been done before is enough of challenge. People will rise to the occasion. So when you have these high expectations of people, people get very innovative. But the person that's cooking the books, shipping a bad quality product, is also being innovative. Not the kind of innovation we want, but they're also being innovative. So the key thing is, how do we get people to do the right kind of innovation and not cutting corners because they feel this pressure of high performance? And that's the role of belief system. We need to articulate our core values. What is the grand purpose of our organization? Why are we here? What are we trying to accomplish? And an organization that's not values driven, where its purpose, the reason for us coming into work every day, if it's not articulated, we will fall into this problem of getting tempted and cutting corners. And so articulating your values and beliefs is extremely important, right? But that's not enough. We also need to figure out what are our boundaries. What are the lines that we cannot cross? So again, I'm going to use the example of good institution universities. This may surprise you, but Ivy League schools have the highest level of cheating on exams. Right? Not something we are proud about, but it's been observed. Why is that? That's because people say it's a high-pressure performance, etc. So what is the response of these universities? Absolutely, here, Rahul will vouch for this, every single classroom has our values written down, and we enforce the rules of the game. We would have, say, here are the consequences. If there is a transgression by the faculty or by the students, here are the consequences. And these things are enforced, and the case law is available so that students can see that don't yield to this temptation. This is so critical for us. And it varies from industry to industry. Healthcare, you're regulated, if you're a bank, what do the regulators think? So each one of us needs to think about what are the risks that people might put the organization into, and how do we mitigate those risks? Because we want the innovation, we want the high performance, but not at the cost of our values and not by taking risks that are absolutely unacceptable to us. You do all these things, you set up the organization as a high-performance organization, but only for today. What happens when you keep doing this is that you're doing very well and you're lulled into a sense of complacency. You're not thinking about the future. This is where the role of what we call the interactive systems comes in. What are the strategic uncertainties? What's happening in the environment in terms of technology, customer preferences, government regulations? Anything that's an opportunity or a threat, you need to be constantly scanning the environment for it, because just running a good organization for today is not enough. You need to position yourself for tomorrow to make this sustainable. So that's what I'm going to talk about today. Okay? So let's go back to the performance management system. We said identify the critical success factors. These are not hard, but they need to be very tightly paired with your own strategy. So you cannot take somebody else's KPIs. These are not meant to be generic. They have to be tightly linked to your value creation. What is your business strategy, right? You do that, you set targets, you link performance evaluation to achievement of these targets. But the key thing is walking the talk. So there are many organizations that will say, oh, our key to success is customer service, high levels of service. We're going to delight the customer. Like we see many retail banks adopt this strategy. Sounds good. Then time comes when you're evaluating the performance of a branch manager, outstanding financials, but their customer satisfaction is so-so. And that person says, if you don't give me the bonus, the maximum bonus I'm entitled to, I'm going to walk. And there's plenty of other competitors that will hire me. And that's the moment of truth. What are you going to do? Because if you truly mean that high levels of service is my new strategy, you better stick to it. You walk the talk. Very few people are willing to walk the talk, right? When it comes time for performance evaluation, people switch to the bottom line. And the gentleman there talked about, quarterly pressure for performance, etc. employees are like children. They sniff out hypocrisy right away. So if you don't walk the talk, and our kids do it all the time, right? You say one thing but do something else. Our kids are the first one to pick up on this. Same thing with employees. So that moment of truth is where your actions speak louder than your words. Okay? So you walk the talk, and beware of grade inflation. You see this in so many organizations. It's cynical, yet it's so true. Nobody wants to have the tough conversation with the people that report to them. So give them a high rating, they get on with it. So in fact, if you have a bad performer in many organizations, the way you get rid of the bad performer is by moving them to another division. But if you gave them a bad rating, nobody else will take them. So you give them a high rating so that they can get on with their way. Okay? This is how cynical it becomes in some organizations. You got to fight that. Let me give you a counterexample to this, right? All of us have had mentors. I'll submit none of us regard someone as a mentor if they always said, great job, you're outstanding, you're excellent. Mentors are not people who always pat you on the back and say, great job. These are people that say, you're good, but here's some potential I see in you that you don't have yet, so push for that, and I'll be here to support you. So as leaders, you want to move to becoming mentors. The short easy job of giving everyone a high grade is not what you want. Even the person you're giving a high grade sees through this. Okay? This is the flip side of, faculty getting high ratings because they have high expectations of people. When you give high ratings to employees, which they themselves know is not deserved, they think less of you. So you're not doing yourself or the people that you're evaluating a favor. You're much better off challenging everyone to rise to the next level. And if you help them, support them, get there, you got them for the rest of your life. Okay? And then they'll pass it on, right? So beware of grade inflation. Second thing in performance management is fight the incubation of bad news. What do I mean by this? Some organizations have these screamers. Screamers are people who yell at the person bringing the bad news. There's a screamer. What do you do? If I can push off giving the bad news till tomorrow, maybe it'll go away by itself, right? So what ends up happening is that there is bad news sitting in different parts of the organization. And only when there's a crisis do we find out, okay? So, Warren Buffett says this, only in low tide do you find out who has been swimming naked. And low tide is coming. Right? Around the world, low tide is coming. This is when we will see, this is the season of scandals. For the next 2 years, we're going to see a lot of scandals come because this is when we find out who's been swimming naked. But that comes from this incubation of bad news because the people forget to make the distinction between bad news and you own it as an organization. It's not the person bringing it to your attention. In fact, we need the opposite culture. It might be a false alarm, but I want to make sure I brought it to your attention right away. I don't know what's going to happen, but I want to bring it to your attention before. Maybe it's a false alarm. That's a much better organizational culture than something where people are yelling at the person that's bringing the bad news. Okay? And we also see how lazy, poorly structured incentives lead to dysfunctional behavior. When just this morning I was in Mumbai teaching this case on computer associates. And, we were going through the exhibits, and they had like a bizarre compensation plan that the top 3 executives would get close to $1 billion if they kept the stock price above a certain level for 183 days. Who writes these kind of plans, right? So we find the shocking thing is that we are shocked when we put dysfunctional incentives in front of people and they behave dysfunctionally. It's every time we can predict what the consequences are. And it happens. And it's just we just don't seem to learn from other people's mistakes, right? So we can have good performance management systems. But here are some things that we have to appreciate. All of us, everyone in this room, has got biases. Okay? We can help you. We can help ourselves if you're willing to acknowledge that you have biases. But most of us will fight that. No, I don't have bias. I'm a very fair person. Because this challenges our mental image of ourselves. We look in the mirror and we see a fair person. And who's VG to come here and tell you you have biases? Okay? But I'll submit, think about this in your heart of hearts. All of us have biases. We're biased towards people. We can't even explain why we are biased towards them. Maybe they laugh at our jokes. Maybe they went to the same school that we did. Maybe they support the same sports team. I don't know what it is, but we have biases towards people. Now, what ends up happening is that, I'll give you a completely different example. I teach this case where there are 3 different projects, all very technical projects, and every conceivable calculation, risk index, net present value, everything is calculated, given to the students, and we ask which project would we choose, right? Half the class goes by, and then 1/3 of the students will choose project A, 1/3 will choose project B, and 1/3 will choose project C. And I'd be like, how come we all read the same case, same data, it's all very technical, it's not even like emotionally connecting with you, and yet each one of us picked a different project having read the same data. And the more astute students will say, I like project A, so I went back and changed the assumptions a little bit so that my favorite project comes to the top. Okay? All of us do that. So we believe we make decisions based on data, but we know what outcome we want. So we rig the model so that it gives the data that we want. So we somehow made a decision in our gut, and we start using spreadsheets to rationalize and justify our decisions. Okay? If we can do this for inanimate things, for projects and companies we know nothing about, imagine when we're doing performance evaluation, all of us are doing this. When we're evaluating people, very often have already made up our mind, we like them or not. And then we're often doing this to set up. Sometimes people are setting up the people they like for success 2-3 years from now for a promotion. They come to these meetings and they say all these great things about these people because they know they have to build a coalition and they're being set up. And they might even be doing this without they being aware because they're biased towards something. That's, we are human beings. Let's acknowledge that. If we do that, then we can get help. We can, the other ways. You need to surround yourself with other people, your peers, who are willing to challenge you and say, oh, VG, you always like this person. That's why you're giving them a high rating. But my experience with this person wasn't all that good. And you're always very hard on this other person, whatever reason. Actually, I think they're pretty good. Okay? You need someone who will stand up to you and challenge you, and you need to do the same thing for them. We keep each other honest. Surround yourself with people when you're doing performance evaluation that will keep you honest. But the first step is to acknowledge that I may have biases. And then you need your friends who will help you overcome those biases. But we cannot get subjectivity out of performance evaluation. Like people say, oh no, let's be objective. Let's get rid of subjectivity. Unfortunately, how people meet their targets has and will always remain subjective. Right? Whether they step on people's toes, whether they stayed consistent with their values and beliefs, or whether they did it other means, that has to be subjective. So you cannot throw out the subjectivity. Subjectivity is extremely important and is at the heart of performance evaluation. So subjective doesn't mean capricious or biased. It means you invest more in the process. You have to build trust in the performance evaluation system, and it's only through time, where time and again you prove that your organization does the right thing when it comes to performance evaluation, that employees slowly begin trusting the organization. And so all high-performance organizations have this characteristics of employees trusting. When somebody gets promoted, then they must have done something good. It's not because the boss likes their jokes. Okay? It's because there are checks and balances in our organization, and one individual cannot put their imprint on somebody else's performance. It's the whole collective, and merit wins, right? So I'm going to talk about, this pressure for performance, having high expectations of people leads to more innovation. We have talked about that. We also need people the opportunity. We need to give them the freedom so that they can rise to your high expectations. So you don't want to micromanage. You want to give people the freedom. And, sometimes they make mistakes. That's okay. That's how people learn. So you have to let go. You have to delegate. And that's the opportunity piece of this. And I said when you have the high pressure for performance and the opportunity, you get innovation. But you also get temptation. Okay? Where people want to cut corners and meet targets. It's a lot cheaper in the long run to kill this rationalization. What do I mean by rationalization? So even the most hardened criminal, when they are doing something that they know is unethical, what they do is they find a way to rationalize. Everybody does this. If you want to succeed in my industry, you have to do it. It's all fine and dandy where you're talking about your ivory tower in this other country, things may go according to rules. But in my industry, my part of the world, my corner, everybody does this. I'm not doing this for myself. I'm not doing this to get the bonus. I'm doing this for the greater good of the company. Incidentally, I might get a bonus, but that's not why I'm doing it. These are all typical rationalizations that we see in organizations. And even the most hardened criminals, before they do something that's unethical, illegal, they have to engage in rationalization. So we have studied a lot of these scandals, Enron, WorldCom, and you go down to the individual who actually did it, who actually did those journal entries, you find this evidence of this rationalization. In the long run, you don't want to remove the pressure for performance. You need to have high expectations of people. You don't want to remove this opportunity. You want to delegate. You want to give autonomy. In fact, autonomy itself is motivating. There are organizations where the main attraction of working there is that there is meaningful roles for you to do. You don't have to check with the boss for everything. So those are not the places, not the pressure for performance, not the opportunity. Those are not the things that you want to cut to remove this temptation. You want to remove this rationalization. Okay? How are we doing? It's like everyone is like so quiet. Hearing patiently. Okay, so you disagree, you agree, I would love to make this more interactive. Yes? I'm showing the mirror? Okay. Yes. Yes, objectivity is the eyes of the subject, but I'm saying let's acknowledge that exactly what you're saying, that when you change a person from one person to another, let's not keep insisting just because it's numerical that it's objective. Very often, the context makes a difference to how we are interpreting the numbers. Okay?
I have a question.
Yes, sir.
When you said biases, how do you differentiate biases with prejudice in the mind?
So prejudice is when you already assumed what it's going to be, right? I think it's a close cousin of bias. Right? What I mean by bias is when you are predisposed in a certain way to someone, maybe that's prejudice, the same bad numbers you start saying, I have benefited from bias. Let me be very honest, right? My boss, the dean at Harvard Business School, he was my PhD advisor at Stanford. It's sheer luck for me that he became the dean here at Harvard. And I always feel that I can do no wrong. Like the blue-eyed boy kind of thing. And I feel it's very unfair. Because I walk into a room, he's already thinking like, oh, VG will do well. And that's very empowering for you know that somebody has your back. Right? I think he extends this to all people, but as leaders, you want to think about it. Are you giving everyone a fair shake? So prejudice has a negative connotation. I'm thinking about bias as sometimes it can even be positive. That is, even before the person shows up, you made them succeed because you're like, oh, you'll be awesome, you're terrific, lovely to have you here. You put them at ease.
Decision making, as you said, sometimes it is with intuition also. That you get.
Not sometimes, always. The biggest decisions are always based on intuition. We like to pretend it's based on numbers, but the toughest decisions are always gut level decisions. Right? It involves emotions, it involves people. The other ones that are pure numbers are easy to make. All right. So we talked about this, and to make sure that our employees are not cutting corners, violating our value system, this is where the role of belief systems comes in. And it's extremely important, even more important when tough times are coming, to focus on our values and beliefs, right? We think like, no, that's a luxury that you have in good times, but times are tough now. We have to get on with it and survive any which way we can. Nothing can be further from the truth. It's in tough times that your true metal is revealed. So now would be the time when you articulate your core values, you go back to your values and beliefs, and you have to be seen as acting on it. So I'll give, Rahul used this example of this online course. 8 years ago, we launched HBS Online. It is a very contentious decision at HBS to go online. There are a lot of people, our alumni, who came up to us and said, what are you doing? You're cheapening the brand. Why would you go online? I paid $110,000 for the 7-week program, and you're going to start giving out this knowledge for, $800. This is like you're cheapening the brand. Don't do this. And, I thought long and hard about this because they had paid a lot of money, and it seemed like we are violating their trust. So I went back and we said, 1636, when the university was started, I seriously doubt all the founders of the university got together in a room and said, let's deny knowledge and education to 90% of the people who apply to us. That couldn't have been the purpose with which the university was started. It should have been to educate as many people as possible. It so happened that we are constrained by the number of faculty, by the number of seats in a room, and therefore we have to be fair, and therefore we pick the best and the brightest. So the excellence is something that was an accident of our constrained capacity. It was this kind of selectivity that we have to get in was not the purpose of starting the university. Sometimes we end up in situations where we are like the Tiffany's, and we start believing that our value comes from the exclusivity. Nothing could be further from the truth. So we went back to our purpose and mission, and we said, our mission says to educate leaders who make a difference in the world. Nowhere does it say it has to come by excluding as many people as we can. So we decided to go ahead, and we said, okay, we'll keep the brand separate. So it will not be an MBA, it will not be a degree, it will be an online certificate. And like Rahul mentioned, I'm so proud. We had like 70,000 people I've been able to teach online. And, it's all people all over the world. So if you stay true to your values in tough times and, you articulate your values, these are meant to inspire people and, walk the talk. And I mentioned it earlier briefly about employees smelling hypocrisy and employees being like children. Okay, I'll give you an example. I have 2 sons. My older one played squash. And my job was to drive him on the weekends for squash tournaments from Boston to New York, Connecticut, wherever they are, up and down the East Coast. So a captive audience sitting in the back seat, father-son bonding time. So I felt like I was defining a new demographic group. They talk about soccer moms. I was a squash dad here, okay? I had this app on my phone called Waze. Some of you might be using Waze, right? I'm driving on the freeway going from Boston to New York, and the Waze says, police officer reported ahead. And I hit the brakes. My son looked up, and from his reading a book, looked up and said, Dad, were you speeding? Okay? Simple question, but such a moment of truth for me. Right? My first thought is to deny. No, I was not speeding. Right? But he's smart. He's going to ask, then why did you hit the brakes if you're not speeding? So the second question was, it was a true story. When I moved to Boston, one of my colleagues had told me, you can go 5 miles above the speed limit and the police will leave you alone, which is what I was doing. It was 65, I was going 70. But if I told my son this, you can go 5 miles above the speed limit and you won't get a ticket, I'm telling him, as long as you don't get caught, it's okay to cheat. That did not feel like an acceptable answer either, right? So all this happened in a flash, and I said, yes, I was speeding. There is no way. I want him to follow the rules. I want him to, before he turns 21, I don't want him to start drinking because that's the law. You just follow the law. It's not that hard. But the minute I break the speed limit rule and either tell him it's okay or that I'm not, I will have no moral standing to expect him to follow the rules. So if you want your employees to follow the rules, do things that you will not approve, then you don't want to put yourself in situations where you're breaking the rules, right? And the other thing is, I can't look back, see whether my son is sitting in the back seat, and then decide whether I'm going to go 5 miles above the speed. So it has to be all the time. It has to become a habit. It has to be second nature to you. It can't even be a conscious decision. It has to become second nature. And that's one of the things about ethics, right? So I'll give you an analogy. Roger Federer was playing in the Wimbledon, and he played this stroke where the ball, hit it, his forehand. It came below the net, but because it's outside the court, it's okay. And it clipped the line, and it was in. And they asked him, I've never seen you play this stroke before. It was so magical to see you run outside the court, hit it, it comes below the net, and it's a winner. How did you play this? And he says, I practice all the time. I think when it comes to your values and beliefs, it's like that. There are maybe 4 or 5 instances in your life where it's going to be, your values are going to be tested. But you have to be prepared for it. And the way you prepare for it is by reinforcing your organization's values and beliefs all the time and referring to it when you make decisions so that others in the organization can see that you're living up to it. It can't be, in the moment it'll show up. You have to train for it. It has to become second nature. Okay. So the other side of inspiring people is also telling people, these activities are not okay with us. These are actions that are prescribed, right? We talked about, cheating on exams, whatever it is. These actions are unacceptable. You prescribe the actions. You say, yes.
So what you're talking is culture.
I think it's a way to build a culture, absolutely, right?
What happens in the new age where there was a time when there was a culture which was top-down? Now we talk about open culture, immersive, everybody can bring everything to the table. There's going to be a clash between culture as defined by a set of individuals under leadership versus an open culture brought by a lot of people.
The key question is, let's say it's brought by a lot of people, it's coming bottom up. That's terrific. Are you okay with it? As a leader, when you look at this culture, are you okay with it? If it's not, you have to intervene. You can't say it came up, I don't want to be the one to change it. I'm all for democracy. But if, again, going back to raising kids, you take a vote and the kids say, we're going to do this. No, you don't always agree with it. So when it comes to matter of values, I don't think it's up for vote. It's not a democratic process. If it doesn't tie in with your core values and beliefs, you stand up and you say, no, I can't be part of this. Okay? I think he was talking about, yes, culture is framed both by your values and beliefs, but also your boundaries of what kind of actions you will not accept, right? All professions have it, whether it's lawyers or accountants or surveyors, engineers, they have a code of conduct. And there are good reasons why these things exist. We just don't, we take it, we pass the exam, and then it's confined to some shelf in your book, in your library. But these are living documents, and if you don't live it, they don't serve any purpose, right? So we use these boundary systems and belief systems to kill the rationalization that I talked about, so that nobody has any doubt in their mind that if they did this, they're not going to get the support of the rest of the organization. They don't want to come there and say, I'm doing this for the company, and if something goes wrong, the company will bail me out. No, it will not, and I'm here to tell you that we will not. That needs to be the tone when we're setting these belief and boundary systems. We have this notion that startups are, very entrepreneurial people. We should leave them alone in a garage, give them their lunch and dinner and cook all kinds of food for them and do their laundry, and they'll be extremely innovative. You come back and check in 7 years and great things would have happened. Okay? Nothing can be further from the truth. When you have high-powered incentives, that's precisely when you need good control systems to make sure that your values are articulated and your boundary systems are delineated, okay? So faster the car, better than brakes need to be. So I'm all for high expectations and great upside. People are talking about equity and giving equity to people. That's all terrific. But you need to balance this by talking about your values and make sure that people are doing it the right way. Okay? So I want to talk about different ways of motivating. We sometimes go immediately to money and say, pretend like money is the only motivator. I will not deny money is a great motivator. People work for money. Nothing wrong with it. But let's not assume that as human beings, that's the only thing that motivates us. In fact, for many people, I come to believe now that money is almost like keeping score in a basketball game. Oh, you got so much? I get. It's not even. They're not even thinking about what they're going to do with it. It's just a way, an easy, quick way to compare across industries, across functions, across professions. Like, what am I worth to the organization? They start using money as a proxy for it. There are very many other ways of motivating people, right? Meaningful roles. I'll get promoted. I'll get a significant role as a leadership role in the organization. That's a powerful motivator. Peer recognition. It matters immensely to me what my colleagues think of me. And it matters to all of us. So we will do amazing things to get the recognition of our peers. And that's an important motivator. So, I'm standing at an award ceremony. What more do I need to say about how motivating that is? To get an award in front of, people that you value can be a very powerful motivator, right? Meaning and purpose in work by itself. I might be doing the same thing, but, there are physicians, there are nurses, they're helping people. That's a very powerful motivator. You see a smile on someone's face. As a professor, I'll confess to it. I don't get stock options. I don't get paid more or get paid less based on how I teach. But when the student comes up to you and says, what you said 5 years ago really helped me, I can't think of a greater reward. Okay? So there are many, many ways in which we can motivate people. But the important thing is context matters. So you want to reach in and pick the right tool to motivate people. And context will tell you how to do that. And I'm going to give you just a couple of examples, very different incentive methods, very different ways of motivating people, both equally effective and both very powerful. Okay? And the other thing I want to tell you is it's not just about incentives, it's also about recruiting. A lot of this is set when someone enters the organization. And, that is the point of most leverage. If you can communicate your values that you have, at least some of the people should look at your offer and say, no, I'm not a good fit for your organization. If no one is saying that, then you're not communicating your values to the organization. So it has to be that you're a good fit for some people, but not for everyone. Okay? So recruiting matters, and who does the recruiting, and whether those are the culture carriers of the organization and they are participating in the recruiting matters immensely. All right. So I'm going to give you an example of Henkel. You might have all heard of Henkel. It's a large, fast-moving consumer goods company based in Germany. So it's a family business, and it was a very happy underperformer. That's how they describe themselves. Always number 2, number 3. Very happy to be an underperformer, right? For decades, 90% of the employees would say they met their key objectives. But yet, the company as a whole never met its objective. So they brought in someone from the outside, Kasper Rorsted. He actually came from the IT industry. And he asked this very basic question. How is it possible that this organization, 90% of the people year after year say met all their objectives, yet the company as a whole hasn't met its objectives ever in the last 1 decade? We have to change that, right? So he does the usual things, which, basically surgery. The situation had got, the health of the company was so bad that they needed the surgery, and he performed the surgery. So they shut down 60 plants, they downsized, they laid off 13,000 people, they consolidated a lot of the services in Philippines and Mexico. They went from 900 brands to 450 brands. The typical things that you might expect. These are the hard decisions, right? But the hard decisions are not really the hard ones. The soft ones are the hard ones, right? So what came after that is like he put in a new performance management system, put in a forced curve. I'll show you the graph of the forced curve, and announced all this right before the 2008 financial crisis. And all through the crisis, refused to change the target. He said, 5 years from now, this is the target. Quarter after quarter, he would say, the target is the target. We are not going to change it. Doesn't matter that we have the Great Recession. We made it public, and he went and announced it publicly. And you tell the employees, if I don't meet it, I have to go. I've announced it publicly. He almost used this as a commitment device, right? and we don't have the time. You should watch a video of his. I'm sure it's on YouTube. He's the most brutally honest person you'll ever meet. He'll call it the way he sees it and give it direct to people. And here the same things about reiterating values and beliefs. They went through the exercise. They've articulated the values and beliefs. And this is their performance management system. And what is interesting is not only is the performance on a forced curve, top 10%, 60%, 25%, bottom 5%, but also what are your promotion prospects? What is your potential? And there were people that were in the top 10%, but there were no promotion prospects for them. Okay? Because they might have been a staff function, head of R&D. If you're thinking that somehow you're going to be in a fast-moving consumer goods company, the next CEO, tough luck. I have to tell you, you have risen as higher, you're going to go in this organization. They were brutally honest with the people. Okay? Some people actually left, but others were like, I get it. This is my function, this is how I am going to go. It's okay. I find my job rewarding. I'm happy to do that. And this S1, T1, and T2, these were the blue-eyed boys. They can do no wrong, right? They want these people. They're very successful. They're in the top 10% and very high potential. And this was like widely rewarded. The company did well. Good things happened. Okay? But for me, this is not sustainable. What I find in many organizations is that this kind of surgery is very important and very good to get you out of a complacency where you're being stuck for a long period of time. You can get a turnaround. But a turnaround is not going to be sustainable in the long run, because if you keep dismissing the bottom 5% year after year after year, you'll run out of people that are truly in the bottom 5%. Then after that, you're getting rid of people because you're stuck with the system. And that the impact that has on sort of people becoming very competitive with each other rather than acting as a team is horrible, right? So of course, Kasper Rost had left Henkel and he's gone, okay? But I don't find this kind of forced curve in a good high-performing organization to do it year after year is that sustainable. So I'll give you a different example of, so that was effective, what they needed at the time, but not something that is, I would say, sustainable. Here's a different example of what I find works very well. There's this bank based in Sweden called Handelsbanken. Okay? Very interesting bank. They have no bonuses. They don't give out any bonuses. What they do is, when they make excess profits, they use the excess profits to put it in a pool and buy shares in the bank itself. So one of the largest shareholders of Handelsbanken is this pool of money that has been given to the employees, right? It's opposite of everything we teach in finance, which is to diversify. They're in fact doubling up on the risk by using employees' money to buy shares in the company itself. Everyone gets the same dollar amount. You could be the CEO, or you could be someone that was recruited last week, fresh out of college. It doesn't matter. The bonus is the same dollar amount. Not percentage of salary, same dollar amount. And you will not see any penny of it till you retire. Let's say the retirement age is 65. Nothing is given out till you retire. Okay? They have no budgets. They don't spend one dime on advertising or marketing, ever. All the performance data is public. How you did, what are your metrics, they measure everything, and it's publicly shared within the organization. If you want to know how much someone is paid, what their numbers were, what their sales targets were, and how much they achieved, everything is publicly shared. Okay? And tremendous autonomy. If you want to give a higher interest rate on a deposit in your branch, go for it. If you want to charge less for a loan product than what you're prescribed, go for it. All you have to do is justify and write it down, and everybody else can see what your justifications are. People look at this and say, this is crazy. This is going to be so risky when everyone gets to make these loan decisions and deposit decisions, so much autonomy, no targets, no budgets. I mean, they have targets, but no budgets, no bonuses. How will they even motivate people? Or they will say, oh, this will work in Scandinavia. It will not work outside Scandinavia. They have lots of branches in UK, and they follow the same system of performance management in UK as well. When they moved to UK, people said, ours is a bonus culture. Banking means bonus. People work for the bonus. The only way they come to work, they stay motivated, is the bonus. There is no way you can come to UK and say we are a no bonus bank. Okay? But they've had incredible success for a very, like 42 years. They've had the same model in Sweden, in UK, everywhere else they go. They've done very, very well with this. Okay, let me push ahead. So I picked the data around right after the financial crisis of 2008, right? Return on equity has not been below 12% for any single quarter during the financial crisis. Very high levels of performance through the financial crisis. What about customer satisfaction? Much better than any of their peers, not just in Sweden, but in Norway, Denmark, Finland, UK, everywhere. Not just consumers, but corporate clients as well. Distinctly higher customer satisfaction. So this is not coming at the expense of the financial performance, is not coming at the expense of their customers. Okay? This autonomy, and you can make loans to whoever you want, you would think that it will show up, manifest itself in bad loans at some point. They have 1/5 of the loan losses of any of their peers from 1997 to 2013. Right? Long period of time when they trust people and you haven't given them crazy incentives, lo and behold, the employees actually do the right thing. Okay? So, their annual average loan losses is 1/5 of what it is for their peers. So I'm coming back to these 4 levers of control. We've talked about performance where holding high expectations of people, importance of values, importance of boundaries. But I haven't spoken much about this 4th lever, which is what we call the interactive control systems. Because that's what positions the organization for tomorrow. We talked about sustainable high performance, but all the things I've spoken so far is only about having high performance organization for today. How do we sustain this over time? Turns out that this environment is always changing. And we get so caught up in our performance for today that we lose sight of what opportunities and threats are. So we need a formal system to keep track of this. Okay? So what are these uncertainties that we need to track? Okay? So the typical ones are competition, technology, regulation, customers, skills, and reputation. So you think of these 4 or 5, 6 items and say, what is the formal system by which we are going to track this? So let's take competition, for example. So we have seen so many industries disrupted. There's someone that comes at the bottom end. The classic example is the iron and steel industry. They started taking scrap metal and smelting them in arc furnaces. And the quality was so bad initially, the only thing you could use this was to put the bars that go inside the concrete. You couldn't use the steel to do anything. You can't make cars with it. You can't do it anywhere else. Only thing you could do is put it for a bar inside the concrete. And so what did when the integrated iron mills, when they saw someone melting the scrap iron and doing this, they said, so much junk in there, such low quality, that's good enough only for concrete. You can take that industry. The margins anyway are so bad in that rebar that I'm not even going to bother. So they moved up and they said, we'll spend more on R&D and we'll go high end. We'll seed this low end to this, where they melt this scrap iron. But these guys kept doing R&D more and more, and the quality got good enough for the next higher level product. So every 5 to 10 years, the integrated steel mills will abandon the low end of the market, and those guys steadily kept marching, going above. And today, the whole industry, except the very, very top end, has been completely taken over by the people that start with scrap iron. Okay? We see this kind of disruption in industry after industry where you look at somebody, they're at the low end, it'll go away, but it doesn't. So this is where we need to keep track and say what's happening. Again, going back to the HBS decision to go online, we wanted to disrupt ourselves. If somebody else is going to come in and take our lunch, let's do it ourselves. We can't imagine 25 years from now that online is not going to be a big factor in higher education. If it's going to be, let's participate in it. At least we get to frame the rules of the game rather than what happened in the media industry where information was given away for free and all of a sudden no one is paying. They trained all of us by giving away free information. Is the same thing going to happen in education? Well, let's see if we can not have the same outcome as what happened in media, right? So keep track of competition. Keep track of technology. How do these meetings exist? It feels very abstract when I talk about this interactive control system. So you have, if you're a retail store chain or a bank, let's say you have 100 branches. You put all of them in a room like this, and you have a presentation from someone who's sort of the best performing branch. But you also have a presentation by someone who's the, let's call it the worst performing branch. The idea is not performance evaluation. The idea is not to celebrate someone who's had great success or to hurt someone who's not doing as well. The idea is to learn and say, wow, whatever is happening to you could happen to everyone else, good or bad. What can we learn, and what does it mean as an opportunity or a threat for the rest of the organization? That is the role of these interactive control systems. Okay, so let me pause there and ask any questions? Any comments? Yes. Yes.
So, positive reinforcements. You have not used fear, which is one of the biggest social factors in India.
I hope we can inspire people. I hope we don't have to just use a stick to get the right thing to do. But boundary systems are implicitly, they tell the consequences. I hope when people look at the boundary systems, they don't feel fear, but they look at this and say, our organization, I can count on everyone doing the right thing. Right? That's a more positive framing. But if they do engage in practices that are not acceptable to us, it does end up being fear. So if you don't do anything wrong, why should you fear? Yes?
We call it the consequence management plan. So anything positive, we call it incentive plan, and anything negative is a consequent management plan. And I think both are equally important, yes. And everybody is giving it.
Yeah, I just use different labels, belief systems and boundary systems, but you need both.
Another thing, in terms of, nowadays there is equal importance of not just what you do, but also how you do it. Yeah. So it's really good to see, you explaining to us the importance of it. But I think that there are many organizations now in India, especially for frontline sales as well, where even the how matters. So the boundary systems, etc., is good conversation.
So when I talked about these interactive control systems, I'm on the board of like a few organizations. I always go and check online. What are the customers talking about us? What are the employees, Glassdoor.com, etc.? What are the employees talking about us? It's in those places that you pick up, the reality of what's going on. Because sometimes you can get caught up, your financial performance look good, the management is giving you all these reports, and you can be like, wow, we are awesome. And then you go brutally honest feedback from your customers and your employees. They hold a mirror to your face, and okay, let's follow up on this. And when you follow this, then the management also starts following this. Okay, so absolutely, point well taken. So how you do things matters, not just what targets you met. Did you step on toes? Did you keep your customers happy, or did it by sort of, being very short term? Absolutely matters. So what your employees feel today, what your customers feel today, your employees will feel tomorrow. What your employees feel tomorrow, your shareholders will feel the day after. That definitely that chain works. Okay. Other questions, comments? So I'll wrap up with this. I do want to mention one thing to you. It feels so special, and I want to thank Rahul for inviting me to talk to you. Like he said, I'm a local Chennai boy is the phrase that he used. Yes, I am. But like to think of myself as a local pan-India boy. And thank you for this opportunity. Really love the interaction. I hope to spend more time talking to all of you. Thank you so much. Thank you.
Thank you so much, Professor Narayanan. And now for today's finale, I'd like to welcome back our business icon. Narayana Murthy, founder Infosys, chairman Catamaran, on leadership and entrepreneurship in a VUCA world. How both these definitions are fast changing and evolving, and with the mix of both the old economy as well as new age entrepreneurs. In conversation with editor of Business Today magazine, Saurav Majumdar.
Good evening, and it's been an absolutely fascinating set of discussions all through the day. Nothing better than this to sort of, as the icing on the cake, as it were, to have this conversation with one of the doyens of Indian industry and corporate sector, Mr. N.R. Narayana Murthy, who's been an icon in the real sense. And you know, we need to hear from him about how to navigate, not just navigate this uncertain world, but the value systems, the leadership mantras which Indian leaders and corporate entrepreneurs here today need to follow. So I'll jump right in, Mr. Murthy. To start with, I think let's look at a broader picture. We are aware of the kind of headwinds the global economy faces, and the uncertainty with which every corporate leader now looks at managing his company, his or her company. What are the 3 or 4 things entrepreneurs, who are by nature risk takers, need to take, and what are the things they need to keep in mind while managing their firms and ventures?
Well, before I answer your question, let me thank Shri Arun Puri, Rahul Kanwal, you, and the entire team of the India Today Group and Business Today for this kindness. You know, when you talk of uncertain times, what you mean is the probability of an event happening varies from time to time. And consequently, the expected value also changes. That's what uncertainty is. So how do entrepreneurs plan for such uncertain times? My view is that you must hope and act for the best. However, be prepared for the worst. That is, make sure that your value proposition is so strong to the VCs. Ensure that your value proposition can be explained in a clear and unambiguous way to the VCs, because you are trying to get money and this is a difficult time. They don't have much money. That's the first thing. You know, I used to, if it's my 75th year, I'm not involved in any business. I used to look at about 50, 60 entrepreneurs every year. They were all bright guys, very bright, you know, PhDs from MIT, you know, from Johns Hopkins, from IITs, all of that. But somehow the ability to define very clearly in a simple sentence what their product or service is supposed to do is somewhat lacking. So focus and sharpen your definition of your value addition. Second, create an accentuated and differentiated value system vis-a-vis your competitors, because at the end of the day, you're trying to take some market share. In rare cases, you may expand the market, but that's mostly in areas where you're creating discontinuity in the marketplace. But most often, most of us do what has been done before, but we try to do slightly better. But in these tough times, you have to clearly differentiate yourselves from the pack. The third thing is, these are tough times. Therefore, money is in short supply. Hence, you have to lead by example in hard work, in discipline, in austerity, in innovation, etc., etc. As was pointed out earlier, there is no better instrument to create trust in the minds of your younger colleagues than you leading by example. Because then people would say, if this is good enough for him or her, it should be good enough for us too. That's the beauty of what Mahatma Gandhi did. You know very well. Mahatma Gandhi used to travel by third class, he used to wear loin cloths, he used to eat simple food and all. So there had to be a lot of people, white-clothed people, who had to take care of him in his travels. And once Sarojini Naidu said, it takes a fortune to keep this old man in poverty. So it was well worth it. The point is, it was well worth it to keep that old man in poverty because he had understood the psyche of Indians and he wanted to truly represent Indians. So I would say you, the entrepreneurs, will have to lead by example. The fourth thing that you have to look at when you are in difficult times is focus on work productivity. I have, let's say, when I used to be the CEO or the executive chairman of Infosys for about 30 years, I must have met literally thousands of CEOs. Without exception, when I entered the organization, without reading their annual report, I could say whether that organization is going down or is healthy. You know why? Where there is no value for time in a company, that organization is going down, without exception. Because the leaders don't demonstrate their punctuality, their commitment to time, and all the employees that are there, okay, if it doesn't matter to the leaders, why should we be worried? The result is work productivity suffers a lot. The last one I would like to say is innovation. This is the time, this is a tough time when you have to focus on how you can get better value for money in everything that you do. Everything that you do. I still remember in 1992, we conducted a conference for the internal people on innovation. People spoke in English, in Kannada, and in Hindi. All the three languages, because there were employees at different levels in the organization who did not understand English well. So one of the janitors came to me next morning, is a Kannada man. He asked me in Kannada, look, I didn't really understand all that. Can you explain to me? I said, Chandrapa, you are in charge of keeping 8 conference rooms clean. Now I'll tell you what innovation for you would be. You say, every day you go and clean these 8 conference rooms, you take a certain amount of time, you spend a certain amount on the cleaning liquid, okay, and you do it to a certain level of cleanliness. Tomorrow morning, go to the market and find out if there is a cheaper cleaning liquid that will clean as well as what you're doing today, or even better. Thereby, you have reduced the cost. Second, you were using one hand and a certain cloth for doing. Tomorrow, try and use both the hands. Thereby, you will clean it slightly faster. Therefore, you are doing today, tomorrow, your job in half the time. It may not be half the time. It may be 10%, 20% less. Doesn't matter. Third, I said, today, when you clean the table, you see, watch it very carefully, you will see certain specks of dust. Tomorrow, say, focus on how you can clean the table without any speck of dust. So, therefore, whether it is the janitor or it is the chairman, everybody has a role for innovation in the company. And I think you entrepreneurs have to realize it, and you have to take this. Now, I'll just tell one story because this is very important. My wife's batchmate at Telco, postgraduate engineering trainee program, was a BTech and MTech from IIT Bombay. Very bright fellow. He was appointed later on as the general manager of a company in Karnataka. He is from Kashmir. He didn't know Kannada. So he went to inspect a plant in Harihar, and he was visiting the factory. And he stopped at a milling machine or something, and he asked that operator in milling machine, he was an old man, what do you think? How do you think we can improve? I believe that old man started weeping. There were tears in his eyes. So my wife's friend got a little bit surprised because his question was in English that was translated to Kannada by the general manager of the factory. So he said, did I say something wrong? So the general manager asked him, he said, no, sir. Till now, somehow all the officers in this factory thought I had only two hands. But for the first time in the history of this company, here comes a man who realizes that I too have a brain. I have given my entire personality to this company. This brain comes free to this company. So therefore, my request to all of you, those entrepreneurs who are here, is to realize that innovation is not the preserve of a chosen few. It has a role for every one of the people. Sorry, let me stop here.
It's absolutely fascinating. You need to absolutely fascinating example, sir. I'll take off from what you said about the times and how entrepreneurs need to behave. Yeah. The interesting point now is we are at a time, while the going is tough, but the last year, for instance, has been a completely boom year for funding and the kind of people, the VCs literally chasing them. Yeah. So do you think that, you need to now have startups and entrepreneurs come back to reality and follow these principles? Because there are governance issues, there are issues of, overvaluation, which are now getting into big trouble in the public markets. How do you see this contradiction playing out?
At Infosys, when I was there, we always followed the principle that behave like it is a bad time, even though it is a good time. Why? Because it is very, very difficult to come down from a higher level to lower level. We are all used to working hard to go from lower level to higher levels. Once we get used to that higher level, very difficult. So I used to tell people, be austere. For example, at Infosys, till we reached $2 billion of revenue and $100 million of net income, We all traveled in economy in India. I mean, internationally too. Only after that, people started traveling in business class outside India. Of course, we traveled in economy all over, but since my 75th year, my children have insisted that's your own money, so please travel business class. Anyway, so my request to entrepreneurs is to behave as if today is a tough day. Then things will be easy when the difficult days come, number one. Number two, focus on estimating the market size very, very clearly. One of the weaknesses that India has is we are unable to estimate the market size properly. You all know in the middle 1990s, so many foreign companies came to India. They all said there are 200 million middle-class Indians. I mean, Arun knows there was hardly 50. Everybody burnt his or her hand. So therefore, my request to you people is, while you may try to get as much money from VCs as possible, that's your smartness, obviously. But realize one thing, nothing is free in life. If you take money from other people today, there is an expectation. Nobody is giving you free money. They want return on that. So therefore, it is better to estimate the market size carefully and consequently estimate the revenues very carefully and consequently estimate the expenses very carefully. I would say that is the next thing is, please focus on hiring the best possible talent. There are two attributes for a professional. First is competence and second is values. Only a person who has both competence and values will succeed during the good times, during the bad times. That's why, at least when I was there, we for 20 and odd years, we had the byline, powered by intellect, driven by values. I don't know why it is not there today, but anyway, Salil knows. Bill Gates told me that is the best byline that he had seen, because at the end of the day, we were in consulting. And that requires competence and values, because you have to create trust in your customers. Trust is what will bring you repeat business. Repeat business is what will grow your revenues faster and faster. The last thing that I would say is, please realize that where a price is what a customer pays and value is what the customer expects. If at all times you focus on the ratio of value divided by price, what I used to call business value addition, then there is a possibility that even during tough times, you can get higher prices. Let me give you a simple example. If, Saurabh, I sell a gizmo to Arun, and I say this costs $100, and he pays $100, and I also show him through my mathematical model that he will get value worth $200 for the India Today group. So the ratio of value to price is 2. On the other hand, you, Saurabh, who is smarter, you go to same Arun and say, Arun, I am charging $120 for this gizmo, but this gizmo will give you $300 of value. You will use your mathematical and statistical model and demonstrate to him. Now, your ratio is 2.5, 300 over 120. I can guarantee you that Arun will simply go with your model because he gets better value for money. For every dollar he gives to you, he gets 2.5. For every dollar he gives to me, he gets only $2. On the other hand, you have got 20% higher. I would say that these are some of the things that you, the entrepreneurs, will have to look at in tough times.
So, talking of this, do you think, I mean, the kind of valuations which the companies are therefore getting with VCs chasing them, do you think there is a need for even VCs? And this I hear from a lot of entrepreneurs, that the VC sector itself is sort of spoiling the, the value system in the entrepreneurship space. Do you buy that argument?
No, I wouldn't say that. I wouldn't say that. They are all very bright people. They have gone to best schools in India and abroad. They are well educated. Most of them are at the top of the class. The problem is not theirs. The problem is we do not have good market research funds. What somewhat surprises me is India has been very good in psephology. I mean, whether it's Arun or Pranay Roy or somebody else, oh my God, when they predict elections, it comes so well, so clear. But for some reason, we do not seem to use the same principles of psephology and predict the market size. I don't know why. So, we are somewhat poor in predicting the market size. And then what happens, poor entrepreneurs, I mean, who would not want more money? I mean, we are all humans. So if I get the data that there is 200 million Indians who are willing to buy Arun's gizmo, of course I will go and tell the VCs. And VCs are trying to handle so many requests. They don't have time. So therefore, they will also buy that logic. So in my opinion, I think we'll have to call these wonderful psephologists and request them to tell all these market research companies how to do market research. Somehow, India has not done a good job in market research. And the result is, the VCs feel bad. In the end, the entrepreneurs feel bad, because when you have your IPO and the price goes down after a week or 15 days or a month, it is so bad, because remember that even today, about 20% are retail investors. And if you add the mutual funds too, they may be larger. And this is the money of people who are poor, who have very little disposable income. And for them to lose some money, in my opinion, is not fair. Therefore, I think we'll have to do a little bit of work on market research. That's where at Infosys, we always said, under-promise, over-deliver. Because the moment you under-promise, and if you over-deliver, the trust is built. And the most important attribute in a relationship is trust. So therefore, I would request the wonderful entrepreneurs assembled here to use better market research and to under-promise and over-deliver, because that is a very happy situation. That's what I would say.
So there is a feeling that, this tough time may be just about, we've seen many cycles. This tough time may just last for a year or a year and a half. What is your sense? Is this a reset in that sense? Is there a reality setting in? Or is this again a phase after which again you'll start seeing these crazy valuations coming back?
I'm an engineer, so I'm not a macroeconomist. So therefore, I am not probably the right person. But we all know that businesses have a 7-year cycle or whatever it is. So what goes down will go up, what goes up will come down. So the best thing is for each CEO to have what was described in the lecture, a good de-risking methodology. That is, identify all possible risks in all dimensions of function or in all dimensions of your organization and classify them as strategic or short-term or medium-term, and have people to collect data, look at it in detail, and assemble all those people, have a discussion, and then come to some conclusion. So I would say that it is the law of nature that there will be business cycles. What goes up will come down, what goes down will come up. So design your organization, as I said right in the beginning, so that your lifestyles, your expenses will not have to change even during a tough time. That is the ideal way to lead an organization.
So you have led from the front. You've just spoken about the whole idea of trust, and that is something which you've all in your career also you've sort of focused on. Now, alongside that, one thing which now keeps coming up is the idea of empathetic leadership. Yeah. That is, and particularly during these times when pandemic has upended people's lives, etc. What would you tell CEOs and business leaders about empathy, and how do they sort of navigate this period with empathy as for their company and employees?
Empathy is needed in bad times and good times. Empathy will never go out of style. Empathy is about being fair. It is about being transparent. It is about being open. It is about sitting down in private with an individual and telling him or her the real situation vis-a-vis his or her performance, but say it in a way with fairness. What do I mean by fairness? Fairness is following the golden rule. Do unto others as you want them to do unto you. Number two, fairness is maximized by using data and facts. Now, at Infosys, we were probably the first company in India to introduce open evaluation. The person that is being evaluated and the person who was evaluating would sit together, and the boss would explain on each of the dimensions of performance why he or she thinks that the one being evaluated deserves this kind of marks. And next to it, the employee who is being evaluated would also write down what he sees. When the variance between the boss's evaluation and the person who is being evaluated, his or her evaluation, then it will go to the skip level manager if it is beyond a certain thing. And so what is the The value of this is there is openness, there is transparency, it is confidential between the boss and the one being evaluated. There is empathy. Empathy is communicating the truth in a manner that the other party, realizes that it is for his or her own best. It is like a doctor telling, Bhaiya, you have cancer. But please don't worry. There are certain cures that will prolong your life by 10 years, 15 years, 20 years, whatever it is. And I am here to provide you and take care of you. That is empathy. Empathy is not hiding information. Empathy is not saying, no, don't worry, everything is fine. That is not empathy. So empathy is absolutely required for every leader, not just the CEO, for the nation's leader, for the community's leader, and everybody. However, transparency, fairness, and accountability will have to come into the picture when you demonstrate empathy.
So, having founded this iconic company called Infosys, what do you think technology will have to do to sort of help leaders and entrepreneurs navigate today's times? What is the next level which technology will have to go to?
No, I think the purpose of technology is to improve productivity, to bring the power of asynchronicity. That's one way you improve productivity, right? You bring asynchronicity. You don't have, both of the parties won't have to be in synchronous time. Third, it reduces cycle time. It improves scale of producing anything. It reduces cost, as I said. Now, technology is needed for every level of employee in a company. Because, as I said right in the beginning, the biggest responsibility of us Indians is to improve our work productivity. Now, there are many people from outside who tell me that Indian productivity is not high. I don't know, because I'm not working, so I'm the wrong person to comment on that. But many people say that. So, for me, when the times are bad, the first message that I want to convey to people is work harder. After the Second World War, I'm told the Germans worked 12 hours a day on their own. Nobody told them. And they rebuilt Germany. So therefore, I would say that technology helps you improving productivity in one way. It enhances transparency. And it brings some kind of leveling across people. Let me tell you a small story. I hope you don't mind. It says time is up.
Please.
In 1992, we installed the first ATM at Infosys in the world's first software campus. There was no other place which had a software campus at that time. And we had only one canteen at that time. And I was standing behind a janitor for our lunch. We all used to go, and eat at the same place. So I struck a conversation with him in Kannada. So I said, how do you find that new machine we have installed? He said, sir, fantastic. He didn't say in English, but he told in Kannada, sir, that is fantastic. Great. So then I asked him, friend, why do you say so? He said, sir, whenever I used to go to the to the teller on the campus, that fellow used to discriminate against me because all these software engineers would go abroad, buy Reebok. Those days, Reebok shoes were a big thing. They would wear some, he didn't say Reebok, some fancy shoes and all of that. And they would wear tie and this and that. And the teller used to give them higher attention than me. Sir, but this machine which you have installed, it doesn't care whether you go or I go, it dispenses money in the same time. So therefore, Saurabh, technology is a great leveler. Technology raises the confidence of every employee. So I would say that the key to remember is to act in step with the speed of technology. It is most often it's very difficult. But what I would request all the wonderful people assembled here is to focus on quicker decision making or faster decision making, quicker response, and try and keep as much as possible pace with technology. Because just installing technology has no value. If installing that technology does not result in better decisions, quicker decisions, and more database decisions, then technology has no value. That's what I would say.
So one more thing which, as a leader, people need to understand is the importance of strategy. Now, when we were reporters, we would talk about 5-year, 10-year horizons and plans, and we would have these questions asked to the CEOs. Today, particularly after the pandemic, the whole timeline, the horizon seems to have sort of shortened. You do not know, because it is so uncertain, you do not know what strategy you will have to take, say, over a 5-year, 7-year horizon. How do you see that playing out, and what do leaders need to do for that?
I think the smartness is to think of long-term in terms of several short-term steps. As you know better than I do, John Maynard Keynes said, in the long run, we are all dead. So that long run, who knows what's going to happen. However, the beauty of dividing that long term into multiple short term steps and reviewing as often as possible, while keeping the flexibility to change the direction. Supposing you took one step and suddenly there's a kheda there. You have to go this way, right? But the need to review periodically, the need to fully understand the short term remains. A few years ago, I think 15 years ago, somebody said, no, this company has stopped giving quarterly results, this and that. What do you think? I said, who is that CEO who doesn't know what his company is going to do in the next 3 months? What kind of a CEO is he? If he doesn't even know what revenue, what profit he or she is going to get in the next 3 months, I feel sorry for such a CEO, frankly. So therefore, while you have a much higher level of certainty, much better control over the short term, what this splitting long term into multiple short term gives you is multiple reviews. At the same time, observe your competitors, observe progress in technology, observe new vendors, cheaper technology, all of that, and quickly adopt. I think that's what I would say to it. Second, wherever possible, before that, let me say, what I used to do when I was the CEO was, every cost in the company was looked at as direct cost and indirect costs. Direct costs are what are actually needed to produce the product directly. For example, in Salil's case, all the salaries of the software engineers who actually work on the project, the project manager who supervises that project, that's all direct costs. And the computers they use, depreciation on them, they're all direct. On the other hand, people like me who used to sit in the office and then have drink cups of tea and all of that, we are all part of the indirect costs. So I would say when the tough times come, reduce indirect costs as much as you can. Number one. Then the second classification I used to have was fixed costs and variable costs. Variable costs are needed because if you sell a product or if you produce something, you have to spend that money. But there again, using innovation, reduce that variable cost. That's possible. On the other hand, try to either convert fixed costs to variable costs or try and eliminate as much of fixed costs as possible. I would say that these are some of the things that we can do in these tough times. That's what I would say.
And so what do you think is the role of the government then in helping enterprises to navigate this? Because obviously there are sectors where there is government involvement, there are sectors where there is not enough or not needed enough. How do you think the government should interact then?
Government's role is to be a catalyst in reducing friction to business, provide them all possible help to create as many jobs at as high a salary as possible. Now, having said that, let me tell you one thing. Any CEO who says, I want to create more and more jobs, that company will go down the tube. You cannot say that we have to create more and more jobs. What you have to say is, I want to increase my revenue. I want to increase my per capita revenue productivity. So in other words, while at the microeconomic level, CEOs like Salil will say, I want to increase my revenue. I want each employee to contribute more and more and more gross revenue and net income margin. The government should ensure that it is easy for him to do that. That's remove all hurdles, reduce all indirect efforts. For example, going to income tax office and sitting down, going to Delhi, this, that, that's all indirect effort. They do not add to his work. As, I forget his name, my friend, who defined the concept of core and context. Core activities are those which contribute directly to the revenue of a company, to the strength of a company. Contextual activities are those that can be outsourced, that can be done by somebody else. The government activities are contextual activities. So therefore, I would say a good government keeps itself away from businesses as much as possible, while doing its legitimate duty of collecting as fair a tax amount as possible in as pleasant a manner as possible. Second, it has to use this money efficiently, honestly, and productively on all public goods. building roads, education, healthcare, etc. That also, most of it has gone to private sector in India. But anyway, for poor people. I think if the government can really understand that the only way this country can abolish poverty, Indira Gandhi used to say, "Garibi hatao, garibi hatao." What happened? Nothing. Because you don't remove poverty by slogans, man. You remove by people like Salil. By they're working 12 hours a day, 14 hours a day. They are the ones who remove poverty. Not me, who is sitting at home and relaxing and all of that. So therefore, I would say that the governments must every day say, how can I make life better and better for people who are creating jobs? I think if the government, and then get a set of people who will be impacted by their decisions in framing a policy, because they're all bright fellows, they're all educated people, they know so much. If their input is given, if their input is used in creating policies, I think then India will definitely move towards a Ramarajya, as we have been saying. Yeah.
Leadership lessons from an iconic business leader himself. Thank you very much, Mr. Murthy. It has been an absolute pleasure. Big round of applause. And with that, we come to the end of today's deliberations. Thank you very much for joining us.
Thank you so much, everybody, for being such a patient audience. It was a star-studded day. Do join us for cocktails and right after this, just outside. Cocktails and networking continue.